Good morning and thanks so much for tuning in. This is India Market Open. I'm Alex Matthew, with me is Hiral Dadia and Mahima Vajrajani, and we're going to set you up for the day's trade. It's an interesting one because you've seen continued pressure in the Indian equity markets and the setup is not great, Hiral.
Absolutely. Setup is not great, Alex. And the other part over here is that there is an impact coming in from the global markets.
Yeah.
Secondly, any rebound from here on, what technical analysts are pointing out to is there will be a sell-off at higher levels, right?
And we're going to have to...
Absolutely. So there is no trend reversal that is in place. Any upside at higher levels, you will see selling.
And we'll also talk about what happened in trade yesterday. But first, let's talk about what happened overnight, right? And we continue to have the Trump tracker. We call it Trump Watch. And once again, there is commentary on the delayed tariffs on Canada and Mexico. They will go forward, is what he said overnight. Remember, he had postponed the tariffs that he had imposed as soon as he stepped into office. He signed those tariffs on the 1st of February, 25% tariffs on products from Mexico and Canada, and 10% on Canadian oil. And very soon after that, he postponed those tariffs on the 3rd by a month. And so what he's saying is, as of next week, those tariffs are set to continue. Of course, that uncertainty is what is spooking a lot of global investors and pushing people to safe havens. We'll talk about that in just a bit. But first, let's listen into what Donald Trump had to say.
We're on time with the tariffs, and it seems like that's moving along very rapidly. We've been mistreated very badly by many countries, not just Canada and Mexico. We've been taken advantage of. We were led by, in some cases, fools, because anybody that would sign documents like they signed, where they were able to take advantage of the American people, like has happened over the last long period of time, except for a little 4-year period that took place 4 years ago. But anybody that would agree to allow this to happen to our country should be ashamed of themselves. No, the tariffs are going forward on time, on schedule. This is an abuse that took place for many, many years.
All right, so he's reiterating his stance. Let's see if that changes over the course of the next couple of days, but certainly one aspect to watch. Of course, on Wall Street, you had earnings that dominated attention overnight, and the Nasdaq Composite slid ahead of the Nvidia earnings for the December quarter. The Nasdaq dropped as much as 1.2%. The S&P 500 dropped about 0.5%, and the Dow ended with very narrow gains, almost inconsequential in the context of what happened with the tech stocks overnight. The S&P 500, by the way, dropped for the 3rd straight session, and the Nasdaq has now fallen for the 3rd day in a row as well. But it also saw its 4th daily drop of more than 1% in February. So maybe someone can argue, and rightly so, that a little pressure on valuations is being felt in that market as well. Equities in the Asia-Pacific region did open with cuts, and in fact that's visible across the screen, in fact with the onshore markets in China as well. There are a few concerns that are creeping in on Wall Street with regard to the AI growth story as well. That has been bought into, remember, over the last several months, but analysts have noted the possibility of a slowdown by Microsoft in leasing of data center capacity. In fact, the brokerage TD Cowen has said that its channel checks showed that Microsoft cancelled leases with a total of a couple of 100 megawatts of capacity. Microsoft, for itself, has said that it plans to go ahead and invest $80 billion in AI and cloud capacity this year, and that is intact.
And to add to this, Alex, they themselves have doubts with regards to where capacity goes. So in terms of hedge funds, they are actually selling tech counters, and this is on the back of this, as well as you have Nvidia earnings that are upfront, right?
Yeah.
So there is going to be pressure in terms of technology stocks, and probably that could translate into Indian IT as well.
100%. And that's what you saw in trade yesterday. You saw the IT pack as a whole under pressure. But the other aspect that you want to focus on, of course, is also the global uncertainty with German election winner Friedrich Merz warning that the US should not turn its back on its allies. In fact, Merz has urged Europeans to build their own defense capabilities and said that it was now 5 minutes to midnight for Europe. In case you're wondering what that reference is, it is a reference to the doomsday clock, which shows 5 minutes to midnight, and that is how close the doomsday clock says the world is to a nuclear holocaust. All right, now, of course, that's a little alarmist, but then understandably, you have safe haven assets right now that are seeing a lot of demand. You saw treasuries being bought into, US treasuries. You saw gold that surged once again to a fresh record high overnight. And it is, in fact, gold spot at 2,965.5 last I checked as well. And it's within touching distance, Mahima, of all-time highs. And in fact, 3,000 on the cards.
Right, absolutely. And, in terms of the entire recap of, how markets have panned yesterday, both the Nifty and Sensex closed 1% lower. In terms of the top losers of Nifty 50, it was entirely the IT pack, Wipro, HCL Tech, TCS, Infosys were the top losers on the Nifty 50. The top gainers, however, included M&M and Dr. Reddy's. In terms of the mid-cap 150, it ended around 1% lower. L&T Tech, Sundaram Finance, Bharti Hexacom were the top losers on the Nifty mid-cap 150. And the top gainers included GSK Pharma, Abbott India and Linde India. The small-cap 250 also ended around 1.24% lower on the day. In terms of for the top losers, counters like Vijaya Diagnostics, Jyoti CNC and Rajesh Exports as well as Nalco were the top losers, whereas the top gainers was Happiest Minds, one IT counter that stood out. Data Patterns and Natco Pharma were the other two gainers. In terms of Nifty, Auto and FMCG, they gained despite the market decline. The Nifty FMCG was the top sectoral gainer and it has snapped the longest ever losing run of 15 odd days. In terms of the Nifty IT, of course, the top loser of the day closed down by about 2.7%. And this was the fourth consecutive session where Nifty IT closed in red. The Nifty Metal also ended around 2.25% lower. The Nifty Metal snapped its 5-day gaining streak yesterday. Rupee, lost all its gain during the day and was flat against the dollar at around 86.71. In terms of the FIs and DIs position, well, FIs continue to sell. The approximate outflow was around 6,287 crores, and this was the 14th consecutive day where DIs have bought, and the inflow was approximately 5,186 crores. In terms of delivery volumes, of course, the IT pack, saw a lot of, delivery in terms of volumes. Names like Infosys saw around 72.9%, TCS around 74%, HCL Tech 63%, LTI Mindtree 71 odd %. But there were two banking names that also stood out in terms of delivery volumes, Hiral, and that was HDFC Bank with around 78% delivery volumes, and ICICI Bank was around 74%. So these two banking names also stood out. So this is, overall as to how markets panned out yesterday, but how is the trade setup looking?
Yeah, and to add to that, even IT as a sector saw a lot of delivery-based selling. So stocks like Infosys, HCL Tech, LTI Mindtree, right? So it's going to be interesting to see what that turnaround will happen, how that turnaround will happen with regards to IT goes. But quickly, in terms of a quick heads up with what markets are looking like. Now, as Mahima mentioned, it's the longest monthly losing streak in 28 years, right? 5th consecutive session of losses is what you're looking at. Now, Nifty actually continues to trade below last week's low. So that number becomes absolutely crucial for all of us to watch. Apart from that, what the sellers are doing is they are maintaining a strong grip at higher levels. So any rebound that happens in terms of where markets go, there is a possibility of a sell-off happening at higher levels. So that's not, the moment the markets go up, that's not an indication to tell you that there is going to be consistent buying and markets are going to trade higher. There is going to be a particular range that investors will have to watch out for.
Sell on rise.
Absolutely. Sell on rise is the strategy that investors are looking at right now. Overall, it's actually underscoring a pretty bearish sentiment so far, and any rebound attempt is actually likely to be met with fresh selling pressure. Now, with that, you have the monthly expiry also, which is approaching, right? So there could be increased volatility from so far. If you see the VIX, it's still below that 15 mark. So it's going to be interesting to see how the VIX pans out from here on as well. If you see in terms of the derivative data also, Alex, that's also actually, giving you a reflection of a bearish undertone right now, because the call writers are actually maintaining a pretty dominant position over the put sellers, right? See, the open interest build-up has happened at 23,000 strike. Now, to add to that, that's where the resistance is. So 23,000 becomes your resistance from here on. Any rise to 23,000, you will see a sell-off that will happen. And substantial put writing is happening at 22,500 strike.
Okay.
So that's where your support is coming in. So 22,500 to 23,000, that 500-point range is what you should be watching out for.
And over the past couple of sessions, Hiral, it shifted from 22,800 and 23,300 on the upside. It shifted all the way down to 22,000.
Absolutely. And there is aggressive call writing also happening in the markets, right? Now, unless Nifty decisively reclaims that 23,000 mark, any likely rally will falter. So a decisive close for a couple of days above 23,000 is absolutely important for markets to continue seeing an upside, right? And that sell on rise strategy, as you mentioned, is what the traders are adopting currently. So this is what the entire setup looks like in terms of markets. Similar trend is what you're witnessing on Bank Nifty as well. So I think the major message that traders are giving right now, fund managers, technical analysts are giving right now is that 1, trade with caution. 2, any investments made currently should be from a longer term perspective and look at value versus growth.
Question. You have a market holiday tomorrow and we're going to land up straight on the options expiry day on Thursday. What kind of an implication will that have in that? What will in your opinion, what will the rollover data suggest?
So in terms of the roll, I mean, no major, frankly, I have not looked at the exact rollover data so far right now as to what is the percentage looking like in terms of the different sectors. But as of now, stay on the sidelines is what the message is because it's a truncated week. And clearly, if you're going to trade in terms of F&O, there's a possibility you could get stuck.
Yeah.
Right?
So
because
be
of
careful.
exactly. Be careful in terms of the trades. But any sector, any stock where you see value in terms of, from a valuation perspective, in terms of the price performance perspective, analysts are of the opinion, probably these are times to start nimbling and looking at them. So that's what the overall picture is looking like. But one more aspect, Alex, I want to talk to you about is the ICC Champions Trophy 2025. I mean, India-New Zealand confirmed for the semi-final. I mean,
how confident
Pakistan
are you?
Suffers an early exit, right?
How confident are you?
I think 100% as of now.
100%, all right. Well, see, significantly more confidence Hiral has in the men in blue compared with what the markets are.
Markets in green.
That should just give you some perspective on the fact that there is a large amount of uncertainty. Now, we are talking about individual stocks as well. And all of us have picked a few stocks that we want to talk about. Let me start with my list. And we've got MTNL. I've got MTNL on the start and it's a thumbs down. The reason being that this is a stock that still sees spurts of activity off and on. And you saw immediately after the budget where it saw a spike. But the latest update is that the company said that it lacks the funds for interest payments on bonds that are due on the 6th of March. Now remember that this is a government entity and there is a government guarantee on the payment that is set to kick in as per a tripartite agreement, but it's still considered a negative, right? If a company is unable to pay back the debt that it has gotten, it just does not bode well. Remember, in the third quarter, this is a company that reported an EBITDA loss of 128 crore rupees. And so operationally also, it's not looking very strong. Be careful if you are invested in this or if you're trading with the intention of getting a short upside. Jubilant Pharmova, and this is a big thumbs up because the company has said that it aims to double its revenue by 2030, and that implies a compounded annual growth rate of about 15% over the course of the next 5 years. And the company is aiming for a 25% EBITDA margin as well. It also plans to bring down its net debt to zero over the course of that period. Of course, there is more in this. There was a call or there was a meeting with investors or with the analysts, and we will get you more updates on that. But this is certainly something that you should put on your radar. And the third is NTPC Green. There is not a significant update in terms of what was signed. I've put a neutral rating on this. But you should keep it on your radar simply because, one, it has signed multiple MOUs with the Madhya Pradesh government, which bodes well, certainly. But also you saw a considerable amount of selling yesterday and pressure on the downside because you had the lock-in period that ended. And quite a few shares opened up for trading, 18.3 crore shares or about 2% of outstanding equity. But it has fallen now below the issue price. And therefore, as a result of that, you could see some interest in the stock simply because it has corrected so sharply. Mahima?
All right. So these three stocks, that are on my radar today are the three stocks that have acquired something or the other. To start with, Nazara Technology, the company has acquired around 38.5% stake in Funky Monkeys for around 28 odd crores, and this is.
I don't know how you're saying that with a straight face.
Yeah, and it already holds 60% in the company already, and now that it's acquired a further 38.5% stake, the company has now become a subsidiary of Nazara Technologies. In terms of what Funky Monkeys does exactly, it does indoor soft playing games and entertainment centers, and this is basically for kids. It runs around 11 centers across India, including cities like Mumbai, Pune, Bengaluru, Surat, Ahmedabad, Amritsar, as well as Chennai. The company in FY24 reported a revenue of roughly 19 odd crores and EBITDA stood at around 4.2 crore. The next one on my list is Veranda Learning Solutions. By the way, it's a thumbs up for Nazara Tech.
You wouldn't believe Funky Monkeys, 600 to 700 rupees per hour is what they charge.
Oh, interesting.
You know that.
Exactly.
You
Who
would
better than me would know that right now?
Okay.
Absolutely. And so definitely a thumbs up there. And Veranda Learning Solutions, another company that's a thumbs up on my list. The company has acquired around 40% stake in BB Publication. This is basically an established, so basically now that it is acquired, it's an established associate company of Veranda Learnings. The outflow will be around 55 odd crores in cash with a deferred payment of 45 crore, which will be due in March 2025, and this will be a share swap. The next company which will definitely be in focus, because the talks about AkzoNobel Global acquiring India Unit's powder coating business has been in the markets, and now that the company has come out and announced saying that it will be acquiring the India Unit's powder coating business, and they will also acquire the International Research Center. The acquisition cost is around 2,073 and 70 crore respectively for both the powder coating business as well as the International Research Center. In terms of the overall valuation of this particular acquisition, the EV to sales is at around 4.9 times, so not very expensive. In terms of the India unit, it will acquire the intellectual property rights associated with the decorative paint business in India, Bangladesh, as well as Bhutan and Nepal. In terms of the overall cost of acquisition of the Indian unit, it stands at around 1,152 crore, and the deal is expected to close by March 2025. Of course, the company needs approval from the minority shareholders. Basically, the deal implies the options around this strategic view of an Indian unit overall. This should help, clarify and define the Indian assets and their valuations overall for AkzoNobel. And this could be, a precursor to stake sale planned by AkzoNobel Global of the Indian unit as well. So these are, Hiral, the three stocks on my radar today.
What I have on my list, I'm sure Puneet will get us further details, but you have a Bajaj Auto. Why Bajaj Auto is interesting is because of KTM, right? Now, KTM, as we know, has been filing a bankruptcy. Bajaj Auto has already extended a loan to restart operations to KTM. Apart from that, they've gone ahead and now invested a further amount with regards to their international holdings in Netherlands. Now, this comes as a precursor to the hearing in court when it comes to KTM's insolvency today. So, Pierer Industries AG, which indirectly owns KTM, actually avoided the insolvency after undergoing a restructuring. And for further decisions, what happens with regards to KTM is imminent, out today. Now, what analysts are telling you, what the murmur on the street right now is that there is a possibility where Bajaj Auto is looking to take over KTM. What will happen over there is exports as a business, that's the export business of KTM, is what will get a boost from here on, because the business that was happening in the US and Europe, that is something which has suffered because of this restructuring and this insolvency. So this is going to be an interesting one to watch out for as well.
The royalty that currently gets paid to Pierer, then it gets retained by the company.
By Bajaj Auto. Yeah. So lots of things to watch out for. The management has not really denied any of this as well so far, because the last time we spoke to them in January, they categorically said that yes, Bajaj is sitting, but the board will take the decision of what we don't want to do.
Consistently said, no, we're not acquiring, we'll keep it below majority
Exactly.
stake.
So now let's see where this goes. This is going to be an interesting one to watch out for. The other one is Biocon. Now their arm has actually launched Tech in the US. That's a biosimilar to Stellara. Now, if you talk about Stellara, they had a worldwide sales of almost around $11 billion, and this is back then in 2023. It treats Crohn's disease and ulcerative colitis. So, a US FDA approval had come through for this drug back then in December 2024. And now you have the launch that has come in. So, an interesting one to watch out for. It could be a thumbs up. You could see some bit of a reaction that could be coming in today's session. And very lastly, Indigo. 10% kind of gains, Alex, in the last 6 trading sessions is what we've seen on this counter. Now, the key is heavy bookings for Mahakumbh UP. That's one of the triggers that you're watching out for, and the kind of airfares that are coming in for this period, right? In fact, the DGCA had to actually ask aviation companies to reduce their airfares and get it in a particular band specifically for the UP sector. So that's going to be another one that we should be watching out for, because Citi, in fact, yesterday came out with a positive recommendation. 17 out of 22 analysts are positive on the counter. I think, if I'm not mistaken, a 5,000 was a consensus number that I saw in terms of the target price. So still a 500 rupee upside that could be in the offing for Indigo. So watch out for Indigo also pretty closely in trade.
Yeah, certainly. And, there are several notes that have come through, and there are more stocks, of course. We've each picked 3, but there are more stocks that we will talk about before the start of trade. But let's talk about this next one on Coal India, because JP Morgan is maintaining a neutral rating on the stock, and the target price has an upside potential of only about 8.5% or thereabouts. Mika joining in to tell you what they're saying about this. Mika, what has changed and what are they saying?
Yeah. So they maintained the neutral rating but cut the target to 395 rupees, which implies only an 8% upside. Now, the brokerage still sees multiple headwinds to the company's earnings growth, and valuations are still not at bottom levels. JP Morgan has also mentioned 5 reasons why one should not buy the dip in Coal India. First, there's no immediate catalyst to trigger a reversal in the coal prices seen. The risk from slowing imports from China and growing supply from Indonesia will weigh on coal prices. Second, India's coal inventory is above mean levels despite the low production growth. Third, Coal India has lost a significant amount of market share to captives from 78% to 75% currently. The fourth one is India's power demand has a strong correlation to Coal India's volumes, and the double-digit power demand growth is key to the volume uptick, which has not been seen yet. And lastly, while the risk-reward does appear balanced at current valuations, a further downside is possible. The only 2 times that JP Morgan could turn positive in Coal India is, one, if the company's share price declines below 340 rupee levels, and second, if India's power demand improves significantly in the coming months.
Right. Thank you so much for breaking that down for us, Mika. Now, more stocks to watch out for in trade today, and Rucha is joining us with what she's got on her radar today. Rucha, what are you picking up?
Definitely, I have Welspun Specialty Solutions. Well, the company has rights issue of 350 crore rupees, and it also is set to issue about 13.25 crore equity share. The price of this right issue is at 26.4 per share, but the record date has been revised to 1st March 2025. Next one on my list is Apollo Pipes. Well, the company is set to further invest in Kisan Moldings. Now, the company already has about 55% stake in the company, 55.58 to be precise, and this is set to be increased to 56.08. Therefore, an additional stake purchase is happening of 0.5%, and this is happening through a secondary purchase. Kisan Moldings is already a subsidiary of the company, but talking about the share price of Apollo Pipes, well, over the last 6 months, the company has given negative returns of about 36% in trade, and over the last 1 year, negative 50% over here. So definitely not a good returns, and investors might not be happy over here, but this news is kind of a neutral, and that is why we have given this a neutral rating, because it already had invested about 55.5%. Additional 0.5% investment is not big for the company.
Okay, got it. Thanks, Rucha, for getting us those details. Now, the sector that Rucha tracks, of course, was in focus yesterday. IT, and Mahima points this out to you, was under tremendous pressure with a lot of the frontline stocks losing ground. But incidentally, on a separate, unrelated note, there was also a meeting of the NASSCOM leadership at the forum that they do on an ongoing basis. And my colleague Haripriya caught up with the NASSCOM chair and HCL Tech Chief Executive Officer C. Vijay Kumar, as well as LTTS Chief Executive Officer Amit Chadda. And she spoke to them about the evolving landscape of the Indian IT sector, and also the emerging opportunities that lie ahead for them?
Generally, at a high level, the industry has always been linearly growing with headcount growth or people growth. I think that is getting decoupled gradually because there is more platform-centric model, there's more outcome-based models. So the high level of linearity which was there is going to change.
You also spoke about cannibalization of revenues as we move into the era of AI. Give us more sense of that, and in HCL Tech's context, what does that mean for you?
No, it's about looking at what is the art of the possible and working with the clients to deliver those productivity improvements or delivering software development projects much faster. So those are some of the initiatives. And for us, when we deliver such things, it increases the mind share with our clients, which is going to increase the wallet share.
I do expect the industry to have a double-digit CAGR for sure.
The company, sir?
I do have an ambition to have a double-digit CAGR for sure, right? So both of those. And I do believe that LTTS, with our differentiated offerings, will grow faster than industry average in the current year as well as in the future years.
You've also recently made acquisitions, which was kind of the drag on the numbers that you spoke about in the quarterly results. So when do you expect the acquisitions to start paying off? When do you aim to be accretive on these acquisitions? And what's the kind of value that these acquisitions are bringing to you?
So number one, let me start with the value and then I'll come to the numbers. See, if I look across, as I took over as CEO about 4 years ago, there was a couple, 3 areas that I thought we were not playing in. We were not playing in the Middle East. And for that, we went ahead and acquired Smart World, which I believe has capabilities that gives us a sure foot, a meaningful foot in the Middle East. Second, we sat down and we said cybersecurity as part of that was an area that we were not there in. So again, Smart World brought with this cybersecurity. Net result, the Maha-Cyber order that we received, which was $100 million last year, a lot more partnerships in that area. And globally, we've been able to expand cybersecurity offering to all our customers.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशन।
Welcome back. You're watching NDTV Profit and India Market Open. But clearly, in terms of markets, you are probably going to see some bit of stock-specific action in today's session. And sell on rise is the kind of strategy that analysts are referring to. But implied open is indicating a marginal cut of around 35 points. And clearly, 22,577 is the number that you're tracking in terms of GIFT Nifty as well. But let's look at a Bajaj Auto. If you can quickly have a long-term chart as well, probably a 6-month chart to understand what a Bajaj Auto has done in trade, because the two-wheeler space is something, I mean, there you go, 18 to 19% is the kind of cuts that you've seen on this counter. Let's compare it to a Hero Moto as well as a Eicher and a TVS, because the positivity continued with regards to a TVS, but there you go, 27 to 28% is the kind of cuts even on a Hero Moto. And if you can just have a TVS and Eicher, there you go, 14-15%. So that space has been under pressure. Now the idea is whether rural demand will pick up and will that support the two-wheeler space. But the story today is with regards to Bajaj Auto, how it is going to go and support a KTM and whether it is going to support a KTM or not. So let's first head across to Puneet to get more details. Puneet, the aspiration and the expectation is that Bajaj Auto is going to come to the rescue with regards to where KTM goes. Today is the hearing. What are the key things that you're picking up and what is that setup looking like, which probably alludes to a Bajaj entering?
Well, you know, I think the first move with chess play has already been done today, because last night the Bajaj Auto came out with a filing that its Netherlands subsidiary has provided a 50 million euro or roughly about 456 crore loan to Pierre Bajaj AG, which is the subsidiary in which they own a stake in. Now, this is under the current restructuring process specifically for KTM AG. And just to give some context specifically, you know, Bajaj on Friday itself, last Friday, had announced an investment of 150 million euros in its Netherlands subsidiary Bajaj International AG, which has now, of course, given that loan in terms of KTM AG as well. And this comes after KTM had filed bankruptcy in the month of November of 2024. Currently, the structure stands as the Bajaj has an international subsidiary, which is Bajaj Auto International, owns 49.9% stake in Pierre Bajaj AG. The other 50.1% stake is held by Pierre Industry AG, and together these two entities hold 74% stake in the listed entity Pierre Mobility AG, which houses the KTM business as well globally across the world. Now the partnership has been operational since 2007. Bajaj sells the KTM as well as the Husqvarna brand in India specifically. And just to give some context on the bankruptcy, you know, KTM AG had filed an application on November of 29 of 2024 for you know, judicial restructuring effectively. They mentioned financial requirements of KTM AG currently amount to roughly high 3-digit million figures. So there has been some issues with the business in terms of sales, and the high debt has finally impacted and caught up with the company. They mentioned that the financial requirement will be much higher than anticipated as well, and they mentioned that a reduction in operating performance at its Austrian subsidiary could cost the company over €1 billion over the next 2 years. That's one of the key aspects. In fact, you know, Bajaj roughly sells about 60 to 70,000 units in India, where it recognizes the revenue, but globally it does not manufacture any kind of units for KTM. That's taken care of by KTM as well as the company itself. And what's important is in Q3 we saw a 50% drop in exports for KTM because of this challenging aspect as well. Now back in June, company had expected a 10 to 15% fall, but they've KTM had removed this guidance as well. Now just finally, what are the two key impacts that could have because of Bajaj could eventually end up owning the KTM brand globally as well. Now the good outcomes is of course that the Bajaj gets global ownership of a premium brand like KTM and can have access to developed markets with a ready product. Specifically right now it's catering to Latin America and Africa with products like the Pulsar as well as the Boxer, which are the lower CC products, but this could help them pivot and compete with the likes of TVS, which has the Norton brand, which is expected to come out with models by the end of the year. But the bad outcomes could be the inefficient use of cash. Roughly 1,300 crores has been invested in the Netherlands subsidiary for a business that will require a lot more cash going forward, and that's something to watch out for as well. But Pierre has mentioned reduction in operating performance in 2025 and 2026 as well. So it's an interesting juncture at which the company stands currently. It has 20,000 crores of cash, so it can definitely afford it. But the aspect is that investments in EV have been going on the sidelines. So that's something to watch out for with regards to this particular transaction.
Interesting point, but a quick follow-up, Puneet. I heard you mention that there's going to be a considerable loss that it will have to bear. Bajaj will have to spend quite a considerable amount of money over the course of the next couple of years. What was that figure and how did you arrive at it?
So specifically, this was an exchange filing which was done by PR Mobility AG. And they had given two key figures. One is that they're expecting 3-digit million losses. So could be anywhere above 100 million to about €1 billion in losses, specifically because of restructuring of the business. The second key aspect that PR Mobility AG has given, which is listed on the Swiss National Exchange, is that they're expecting $1 billion, €1 billion especially in terms of operating profit impact. That's what they mentioned. So this will mean loss of revenues over the next 2 years because the inventory had been built up essentially over the last 2 years that did not get liquidated, and working capital needs is where they got caught. So, essentially this might consolidate the revenue figures, the working capital figures and profitability figures. But that's the guidance that PR Mobility AG had given. For Bajaj, it will essentially mean if they want to take this company on, they will have to take those challenges as well going forward.
It's an interesting point that you raise, and I'm glad that you pointed out both the positives as well as the negatives. It sounds great on paper, but ultimately there is going to be a period of pain that they will have to go through in order to resuscitate this brand. Thanks so much, Puneet, for putting that into perspective. And it's not the first time that an Indian company in the automotive space has rescued and resuscitated a global automotive brand.
One key thing over here, Alex, that comes in is it's not the brand that comes at rescue, it's the business that's coming at rescue, right?
100%.
KTM as a brand is not suffering. Sales are not plummeting. It's just because of the restructuring, they're not able to operate, function. So production is low. Because production is low, your sales is low, right? So there is demand, but there is a mismatch in terms of demand supply. So to that point, what I would have to add over here is that taking the way Bajaj operates, the efficiency that they have in terms of operations, somewhere they will be able to swallow the pain in terms of the balance sheet and in terms of the operations because the brand is still intact.
My only worry and concern is that it's gone through a period of managing pricing, managing operational efficiencies for them to drag that EBITDA margin back. It used to be 25 levels. It fell quite considerably to the teens or low teens, and then they've managed to drag it back up to very close to what was traditionally the case. And they've got a considerable amount of cash on the hands. Does it mean a period of underperformance? Operational efficiency goes down the drain when you take such a large,
I'm sure they'll have some plan in place from here on.
But I was referring to Jaguar Land Rover, and ultimately, I guess to a certain extent, you can argue that the story is similar because it is a very popular brand and something that was resuscitated, of course, by Tata Motors. More brokerage views on our radar, and Motilal Oswal has issued a note about the oil and gas sector, where they have a buy call in HPCL as well as GAIL. In fact, this is perhaps echoing certain sentiments that have been explored or expressed in the recent past, where some people have said that the worst may actually be over for this space, which has gotten beaten down heavily. Mika joining in to tell you what they're saying. Mika, is that true? Is this what they're saying and what other people have also said?
It's somewhat true in terms of what we've seen in terms of oil performance and the estimates that the brokerage is maintaining. They are seeing pockets of value re-emerging now because of the correction and valuations. The one-year forward price to earnings ratio for the oil and gas stocks as a whole is at 7.7 times, which is down 34% when you compare to June 2024. And they do see limited risk to any sharp earnings downgrades for FY26. This is mainly because of three factors. Even their most bearish oil price estimates of around $60 per barrel do imply a 9.6% and almost 12% FY26 return on equity for counters like ONGC and Oil India. They are also already factored in marketing margins at a 45 to 65% discount to the current levels in case there is a decrease. And the bulk of the APM deallocation, which was causing pressure on the gas counters, is likely behind now, is what the broker is saying. In terms of their top picks, well, one is in Hindustan Petroleum. They maintained a buy rating, revised target at 490, which implies a 53.5% potential upside. It does remain their preferred pick amongst the three OMCs, and it has several key catalysts. One is LPG compensation coming in, the demerger and the potential listing of the company's lubricant business, as well as the start of the Rajasthan refinery in 2025. The second top pick is GAIL India. They maintained a buy rating target of 255, which implies a 55% upside potential. GAIL is trading at a 8.5 times FY27 P ratio with a 4.4% FY26 dividend yield, which the brokerage likes. They also expect the company's return on equity to improve to 16% in FY26 versus 9.5% in FY23. And lastly, they do have a view on Bharat Petroleum. They are neutral on the stock, but the stock is their preferred neutral rated stock in the space. The stock has healthy marketing business momentum as well as attractive valuation and a dividend yield of 6% in FY27, which is estimated by Motilal Oswal, which the brokerage likes.
All right, Mika, thank you so much for breaking that down. So basically two things. I think limited FY26 earning risk is something that Motilal Oswal is penciling in. And what they're saying is that they are seeing pockets where value is re-emerging because of the correction in valuations in the oil and gas stocks. Now, on to an NDTV Profit exclusive. Sources tell NDTV Profit that a high-level committee has been mandated to review tariff relief on American imports. And this move comes after US President Trump announces reciprocal tariff on India exports by 2nd April. My colleague Shrimi Chaudhary has the exclusive details. Listen in.
Indeed, an important piece of information, as a high-level panel which has been formed recently mandated to review the tariff relief on the imported goods from the US. In fact, the committee has been asked to assess the scope of reducing the tariff and suggest a best course of action. The committee, according to sources, given the timeline, to submit its finding and recommendation by March 15th, and this is coming ahead of US planning to impose reciprocal tariff by April 2nd. So, of course, committee is expected to give its recommendation to Commerce Ministry and Finance Ministry, and it is expected to be vetted by PMO before taking any final decision. Now, this committee report is also important because this will decide the course of action from the India side, as a countermeasure of the reciprocal tariff indicated by the US. Now, the committee is essentially focused on 2 to 3 broader categories. One is, of course, 15 to 20%, where some of the imported goods lies and currently attract that much of tariff, which could see some sort of rate adjustment. Similarly, into 50 to 70 and then 70 to 80% of the tariff, area, we would see some sort of rate adjustment, is what sources indicated us. So, in a nutshell, bilateral trade deal, which is, going parallelly. However, it will take some time to conclude, some 6 to 8 months. But before that, we will definitely see some progress in terms of, have a countermeasure of this reciprocal tariff, which is coming in April. And somewhere India also tried to send out a message on, addressing the perception of being a high tariff nation. It's tried to sort of give that we are not imposing high tariff on the foreign goods. And at the same time, it's tried to sort of balance its relationship with the trade foreign counterparts while safeguarding the economic interest of the country.
Thanks, Shrimi, for getting us the details. Alex, it's interesting how we will also have to react to Trump as well on the back of this, because clearly what we put out as tariffs is what we will get back, right? So I think this is going to be crucial, and in the next couple of days we will hear something from the Indian government as well, because it's the PMO who will be vetting any decision on this, as Shrimi has been indicating. So pharma, auto, textile, 3 major sectors that will be in focus, that could be seeing some bit of announcements that could be coming in as well. But moving on, let's welcome in our guests. We have Amardev Singh from Angel One and Sunny Agrawal from SBI Securities. Gentlemen, welcome to the show and a very good morning. First, Amar, let me come to you. I mean, with the way markets are panning out currently, the way open interest data is suggesting, the range we're picking up is 22,500 to 23,000 on Nifty 50. The strategy, what analysts are telling us is, it is going to be sell on rise, and probably the moment markets inch higher, there could be sell-off that could come in. What are you expecting in terms of today's session?
Yeah, a very good morning. And see, we've been bearish on the markets for quite some time, because I think over the last few months, 3-4 months, I've been on the bearish side that markets are likely to witness sell on rallies, because on 2 counts. One is that the fundamental news flows which have been there, they've to a certain extent been negative, and also from a technical perspective, we've seen the structure of the markets, the indices really going for a toss, at least in the intermediate term trend. So when that is the case, that clearly shows that higher levels are definitely, or lower levels are not going to be sustainable, and we could witness selling pressure, and that's what we witnessed in Nifty. Because it did, if you look at the benchmark index, it did manage to rally towards 23,800 levels in the first week of February, but then gave away all the gains and hitting further lows. So I would say that still the verdict is on the sell-on rallies. Yes, 22,500 is an important support, but the way 22,700, 800 has been taken out, that clearly shows that there could be further selling pressure, and also those who've gone long now, their stop losses are definitely getting triggered. So we could witness further selling pressure. 22,500 is important zone. If that is taken out, then we could see a correction anywhere between 300 to 500 points in Nifty.
Okay.
Looking at the derivatives data also, that clearly shows that there is definitely less of buying support which is coming in as of now.
Amar, just a quick follow-up to that, and you've also got your picks, but correct me if I'm wrong, you've seen so many more of these instances. Sunny, I'll come to you in just a bit, but you've seen instances where just before monthly expiry, there's a break in trading. Would there be some closing off of certain positions? Would there be some caution? Purely because you don't know what is happening on the global stage. What if something gets announced? You don't want to be trapped on the wrong foot, and so therefore, could we see elevated action today in trade?
One thing is definitely there that traders who are looking at the market from a short-term perspective, they somewhere or the other have to be swift-footed, no doubt about it. Having said that, if you look at India VIX is still in a very comfortable zone. That's around 14, 15. So that clearly shows that there is not that sort of anxiety. There is definitely concern, no doubt about it. Portfolios are getting hit very hard, no doubt about it. But still, that sort of fear hasn't really crept in. So till the time, because as you rightly said that the Donald Trump tariffs and all that could have a major play, and that's what we are witnessing in the US markets as well to a certain extent. So that tells me that there could be increased volatility, but what I see is that going with the trend, going with the flow is very important, and currently the bears have an upper hand. Yes, the market could reverse from some time because we've seen some significant selling happening. Where does that exactly start with? So we'll have to look at few major stocks like, for example, how Reliance trades, how HDFC Bank trades, how ICICI trades, TCS and Infosys. These are 5-6 stocks which would really decide the trend going forward. But currently, I would say it's sell on rallies, but you definitely need to have your stop losses in place.
Sell on rallies, see, Amar saying the same thing. And those stocks that you mentioned were all under pressure yesterday. But Amar, what picks do you have very quickly, and then I'll go to Sunny.
Yeah, the first one is GAIL. So if I look at GAIL, what we've seen is that the stock has corrected from almost 250 levels. So we've seen it correct towards 160. It's trying to form a bottom despite the market correcting. This is forming a bottom. It's around very crucial support zones. So this is more of a contra trade. So one can look at buying around current levels or towards 162 with a stop loss of 154 and a target of 173. So this is the first one. And the second to look at is from the auto space, because Ashok Leyland, we've seen it quite strong and firm despite the market correcting. It has held quite firm. And if you look at it from a technical perspective, it's currently around 223 odd levels. So this is the next stock to look at, buying around 220 odd levels with a target of 237 and a stop loss of 209. So this is the second stock which one can keep a close watch on.
Thank you so much for that, Amar. Now, Sunny, the Nifty IT closed down 2.7% lower yesterday. Now, a couple of factors, that are not playing out well in terms of IT, even in the terms of, the Nifty 50. All Nifty 50 IT stocks were the top losers yesterday. In terms of the global cues as well, there's AI growth concerns where analysts have flagged possible slowdown in Microsoft in terms of leasing their data centers. All of this happening in the IT space. How are you reading this? How are you reading this for the entire IT space, and what's the outlook like?
Yeah, good morning, everyone. And I think, so a lot of flurry of data, especially from US side on macro front, which is pointing to that US economy is probably slowing down. And on the top of that, again, few more data points which are lined up. So US GDP data as well as jobless claims number are due on 27th and followed by India's data, GDP data on 28th. So I think, yes, definitely the narrative that in case there is a slowdown in US economy, that can hurt the IT spending budget of a corporate base out of US, and that can in turn hurt the growth for domestic IT companies. But again, that's a very short term narrative which is based on a few data points. I think if I go by the commentary of IT companies during the December quarter results, I think most of the IT companies were at least bullish that the worst is over for them in terms of demand environment. And despite of slowdown or any hiccups for US economy, corporates in the US will continue to spend on IT, both on discretionary and non-discretionary side. So I think as of now, I would not like to read much into the data points which is coming from a US as far as the slowdown narrative of US economy is concerned. And I think it's a good opportunity wherein at least a few companies like Persistent, Coforge, which are growing in a mid-10 number, those companies can be accumulated from medium to long-term perspective.
Right. So that's with regards to where overall the fundamental view that comes in. But Amar, if you have to look at large caps versus the mid caps and the kind of beating that these stocks have taken lately, from a fundamental perspective, there is a mismatch that's happening with regards to what the companies are paying from a spending perspective, from a deal perspective, versus what the numbers are indicating, versus what global peers are indicating. What are charts telling you? Are you seeing any value?
So if you look at the large cap, see what we see is that now whenever markets witness the sort of correction that we are currently seeing, there's a lot of rush or movement towards large caps because there's always that this segment is going to correct less. So yeah, I would say that money definitely is looking at on the large caps. So safety would definitely be a point which is looked at. So as I talked about, for example, because now those who are looking at the markets, they have to look at least from a 2 to 3 year time horizon, nothing less than that. So from that perspective, large caps, a flexi cap would be more appropriate rather than just going into small cap or mid cap, because they've corrected significantly, because the earnings growth also would take some time, maybe a couple of quarters to really come back.
Just a clarification, that was a specific question for the IT pack. And how would you position yourself large cap versus mid cap?
Okay, so if I look at that, I would say in the large cap, I still prefer TCS. So if I look at TCS, we've seen the stock correct. Currently, it's around 3,600 odd levels. So some further correction is possible in TCS towards, ideally, you can see a correction of 5% or so is possible there in TCS. So 3,200, 3,300, that would be a level to look at for TCS. I wouldn't be entering at least at the current levels, even in the large caps.
Now, two stocks that we'll be tracking closely in trade today are Jubilant, Pharmova, and 361 WAM on the back of Analyst meet. And Mihika is joining us now with the key takeaways. Mihika, what are you picking up?
Yeah, I'll start with Jubilant Pharmova. Some strong guidance and commentary coming through. One, they've guided to double their revenues by FY30 versus the 6,700 odd crores they made in FY24. They're also expecting the EBITDA margins in that time period to be in the range of 23 to 25% versus 15% seen last financial year. And they're expecting zero net debt and high teens pre-tax return on capital employed by FY30. The company is also expecting market share gains via multiple products. One is the RubyFill, their new launches in the PET and the SPECT space, and their investments. They're also planning to double their capacity at Spokane, which is their CDMO sterile injectable segment, and they're going to increase their revenue share from large pharma companies on the back of new CDMO services. There are certain targets. They're aiming to increase their penetration in Europe as well as their custom API manufacturing segment. They're going to ramp up their allergen extract contracts in the US and grow their venom sales in the Europe. Lastly, they do see commercializations of the ANDAs in their pipeline and the dormant ones in the US as well, and they're expecting new product launches to drive growth in the non-US markets. And for India, their growth expectations is at 1.5 times. And then we have 361 WAM. This was regarding their BNK Securities acquisition. The rationale behind this is the company stating that it completes the services that they're currently offering to their clientele, and the acquisition of BNK Securities may lead to a 3 to 5% increase in their earnings per share. They have retained their annual recurring revenue net flow guidance at 35,000 to 40,000 crores for FY26, and they expect this AUM to grow at a 22 to 25% CAGR over the next 3 to 5 years. Lastly, their total business return on income is likely to grow at a 6 to 10% CAGR, and they've retained their cost to income ratio improvement guidance to 45% over the next couple of years. A little bit of context: the cost to income ratio is basically a measure that sees how efficiently a business uses its income to cover its operating expenses. And lastly, they believe that the margins are likely to improve in FY26 when you compare it to FY25 levels.
All right. In case you were wondering, I'm paying very close attention to what Amika was just saying, and you're not familiar with pharma terminology, at least one abbreviation I'll simplify for you. ANDA refers to abbreviated new drug application, and this is something that pharmaceutical companies have to do in order to sell their products eventually in the United States. In particular, there is a process of approval that comes through. Sunny, I want to specifically ask you about Jubilant Pharmova, because this was on my list. They're talking about doubling of revenue by 2030. They're talking about increasing the EBITDA margin profile that they have to 25%, doubling of CDMO capacity. Is this all reason to be positive on the stock?
Yeah, I think a very robust set of guidance. Doubling of revenue by 2030 implies kind of 15% CAGR growth, expansion in margin. Again, that will lead to the expansion in return ratio. So I think outlook continue to be pretty robust, at least for a 3 to 5 year perspective. And definitely, I would like to remain constructive on the name. Obviously, not an immediate buy. If buy on deep and tracking the company over the next few quarters so as to ensure that company walk the talk, and then you initiate the position on that.
So that's with regards to where Jubilant Pharmova goes. But let's quickly slip into a short break. Before that, thank you, Amar, for joining us on the show. We'll be back with lots more stocks and what the markets are anticipated to look like. Please stay tuned.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Welcome back. You're watching India Market Open. We're moments away from the pre-open rates. Let's see where they start, and indications are for just a slight negative start for the Nifty 50, almost flat if you can call it that. And let's see if that holds through the opening couple of hours of trade. I want to bring in Nilesh Jain as well, who's the head AVP Technical and Derivatives Research. Nilesh, will come to you in from Central Broking, of course, and good morning to you. Come to you in just a bit, but I do want to address the latest update from Tata Capital. It is approved an IPO, including a fresh issue of 23 crore shares. This was in the offing, of course. Hiral, you have context here?
Absolutely. So basically, the board was supposed to meet today, and the meeting was to consider the rights issue proposal, right? So this has come in amidst the plan for an IPO. And you had TCL and the parent, which is Tata Sons, they were required to list their equity shares on the exchanges. So basis that, this is just a precursor to the IPO. So 23 crore shares, the quantum and the timing, the deal size and the timing is something that we should be watching out for. I think, if I'm not mistaken, 1,500 odd crores is what the street was watching out for overall.
And that seems to be the case as well. That's the amount that is being quoted right now. First ticks coming in. We will get a sense from Nilesh what he thinks about the open today. Nilesh, what is your expectation? So far, what we've been hearing is that this is a sell-on-rise market. Don't be too bullish, even if you see a bit of a spurt, and be a little cautious. Is that the approach that you would take as well?
Morning, Alex. Morning, everyone. Absolutely. So, caution is advised. There are multiple reasons for that. Yesterday, we saw a breakdown in the Nifty index below 22,800. The major undertone constantly is witnessing kind of a sell-off and looking weak as well. And since we have monthly of an expiry this week of Nifty and Bank Nifty, the data also suggests that we may see a subdued expiry. Somewhere in the range of 22,300 to 22,800. So that's the broader 500-point expiry range. But it looks difficult for the Nifty to cross 23,000 levels on immediate basis. And the resistance after yesterday's breakdown has also shifted lower to 22,800 now. So for the day, looking at the overall global market, we can expect a weaker start. But yesterday's gap down, that particular gap area is acting as a stiff resistance now. So on the lower side, our target for the Nifty comes around 22,200 to 22,000. So that's the zone where Nifty should find some support. But from current level, any pullbacks should be used as an exit opportunity, and sell on rise should be the strategy in the Nifty. On the other hand, Bank Nifty yesterday have witnessed some bit of a respite, and due to which it formed a small leg bullish candle with a long lower shadow that basically indicates indecisiveness among the participants. But overall, comparatively, Bank Nifty structure looks slightly on a positive side. So we may see stock-specific move within banking space may outperform. So stock-specific and sector-specific is something that needs to be focused on. Index front, we can expect a further downtick to continue.
All right. So Nilesh has also affirmed the sell on the rise strategy. Nilesh, what are the stocks that you're watching out? What are your top picks looking like?
Buy and one sell recommendation. So balanced approach should be there in the market. So on the buy side, I have one stock from auto space, that's the IHO Motor. So from past 4 consecutive sessions, we have seen a strong rebound in this particular counter. And IHO Motor also reclaimed its 100-day moving average yesterday. Looks positive for a follow-up move to continue. If at all we see any dip due to the market volatility, that can be used as a buying opportunity. Keep a stop loss below 4920 on the upside. We can expect a follow-up move towards 5150 to 55200. On the other hand, on the sell side, we have Tata Chemical. So overall chemical basket as a whole has been under pressure, and we have seen a constant downtrend in the overall chemical space. So Tata Chemical is one of the weakest structure, and we can expect a follow-up move to continue on the lower side towards 815. So that's the immediate target for Tata Chemical. Stop loss can be placed at 851.
All right. So those are the picks that Nilesh has for us. Sunny, I'm coming to you on a question mark on Indigo, because we've talked about this, and the question is this interest in the stock, Sunny, primarily because of the event that we're witnessing right now and the elevated demand for air traffic? Or do you think that it's a more sustainable story, and would you have a buy rating on the stock right now?
Alex, I think it's a more of a sustainable story. So, if you remember, Interglobe was facing a challenge of grounded aircraft, and that is something which we feel that ease off in over the period of next 3 to 6 months. So that will definitely add capacity to Interglobe aviation fleet, and on the top of that, demand continue to remain at least robust. Air traffic passenger continue to grow in the range of 8 to 10% month every month, year over year. So again, being with a market leader, 60-65% market share, I think PLF should be robust for the quarter four also. And on the top of that, crude has been pretty stable in the band of $74-75 to barrel. So I think quarter four again seems to be a decent quarter from an earning perspective as far as Interglobe aviation is concerned. And we continue to remain bullish on the Interglobe with a price target of 5,200. And this was our one of our pick during our recent report post budget.
Sunny, in fact, let's just come back to our Tata Capital. Now, Sajid is joining us to give us more. Sajid, clearly, this was a precursor. We were awaiting the IPO details as well. Rights issue meeting was planned today, right? What are the updates that you're picking up? And does this tell us as to how much timelines that we have to wait for in terms of the listing?
So, as we currently speak, there is a current amalgamation which is happening between Tata Capital and Tata Motor Finance, which is there. That amalgamation is towards the end. So, it's expected to be completed by the coming fiscal, and as part of that, what Tata Capital is now doing is raising 1,504 crores through rights issue, which is to existing shareholders, and that includes some of the private equity and funds which are already invested in Tata Capital. And I'm not sure how much of contribution will come from the Tata Motors, because Tata Motors also will hold a stake in Tata Capital after amalgamation of Tata Motors Finance, which is there. But what is important is that there's a September 2025 deadline for the IPO of Tata Capital, and as part of that, they've already announced a process wherein they're going to issue nearly 23 crore shares in fresh equity, and there will be an offer for share sale as well, which will be for existing and eligible shareholders of Tata Capital. So it seems that it's we haven't seen looked at the valuation and at what price the rights issue is happening at this point in time, but it seems like it's going to be more than $1 billion IPO which will come in from Tata Capital.
And any timelines that the analysts are tracking so far in terms of when this can be expected?
So they have a outer limit of 3rd September 25, which is there for Tata Capital. Also, it is important to note that because the Tata Capital IPO is now happening, what is the kind of response that they would have got for Tata Sons as well? Correct. Because they were trying to avoid Tata Sons listing, which is there, and as part of the entire thing, they were concentrating the entire financial vertical into Tata Capital, and Tata Capital being the upper layer NBFC, they will have to come out with an IPO for that. So if you look at the timelines, the audited numbers for FY25 will happen by April. So now that they have announced how many shares are going to be there, I think the bankers are already in for that, and we expect the filing to happen in first quarter of FY26.
Correct.
And then
Sajid, so will the amalgamation with Tata Motors commercial vehicles or commercial financing, will it take place before the IPO?
It's under process. So it's an NCLT process which is undergoing. So I think they're expecting the entire thing to happen by the end of the fiscal, which will happen with the completion, which will happen.
But any stock reaction that we could see in terms of Tata companies right now? Because
Tata Motors is something we need to see what Tata Motors stake is. I'm not getting. I don't remember offhand what is the stake which will be as part of the entire amalgamation. But my understanding is that OFS will include Tata Motors shares as well. So Tata Motors will raise money from this Tata Capital and then use to reduce debt.
So this is going to be an
Tata Motors has
aspect.
already mentioned that they're going to go towards
net
debt zero.
So this is going to be an interesting aspect we should be watching out for from a Tata Motors perspective. Very quickly, Sunny, a quick word in terms of Tata Motors basis, the Tata Capital rights issue IPO that Sajid has been telling us about.
Yeah, I think, sorry, I don't have the ready number, how much stake Tata Motors is holding in a Tata Chemical post this transaction which is panning out between the financing arm of Tata Motors and this Tata Capital. So we need to check the shareholding of Tata Motors in Tata Capital. But having said that, I was just going through the presentation of Tata Capital, which is available on their website. Seems to be a very large NBFC, I think close to 1,80,000 crore kind of loan book size, annual profit of close to 4,000 crore number. So I think in case Tata Motors is holding a significant stake in Tata Capital, that will definitely lead to a value unlock.
Thanks, Sunny, for that. Let's talk about the big brokerage call of the day, and we've got Goldman Sachs that is positive on Trent. Mika joining in to tell you more. Mika?
Yeah, the brokerages has maintained a buy rating with a target price of 8,120 rupees, which implies a 60% upside to the previous close. Now, the brokerage did meet with Neeraj Basu, the CFO of the company, and here are the key takeaways. The management has stated faster than expected store sales ramp up and healthy cannibalization were the two main reasons for the moderation in the like-to-like growth of the company. Cannibalization is basically what occurs when new stores take away sales from the existing stores which are owned by the same company. Now, the company does expect the strategy of healthy cannibalization to eventually lead to higher wallet share. Management has also stated that one of the main reasons for the like-to-like moderation was not competition, but this. In terms of forward-looking statements, Trent does expect the impact of the store portfolio optimization agenda to be lower in FY26, and strong retail area addition over the last year will help the sales growth going forward. They also expect sustainable margins of the business, which could be higher once their high store expansion phase is behind them. And lastly, the good initial experience with they've got good initial experience with the lab-grown diamond category launch.
Okay, all right. Thanks, Mika, for that update. Nilesh, just wondering if you're spotting anything from the rates that have settled right now, anything moving, any opportunity that you're seeing right now?
So one particular counter, yesterday we saw a good reversal, that was VBL, Varun Beverage Limited. So this particular stock, in fact, is witnessing a strong rebound. If at all we see any dip towards 485, 480, that can be again a good opportunity to take a long position in this particular counter with a stop loss below 475. Because we are getting early signs of base formation in this particular stock, and there could be possibility for follow-up move towards 510, 520 on the upside.
Okay, while we're waiting, just take a look at some of the stocks that we've mentioned in the list today. Pull up something like a Jubilant Farmova, significant update for this company, and let's see what the pre-open rate is indicating, just about a 1% up move. You have NTPC Green, which was under pressure yesterday, which should be seeing a little bit of an uptick at the start at least. Yeah, so there you go, 2.6% or thereabouts. Let's pull up something like a Tata Motors as well, just to see whether there's a reaction at the start. Of course, early days, and we'll have to understand what the implications of this will be. But several more. Let's pull up Nazara Tech as well. There's an acquisition that Mahima told you about today, and it is up and about, or just about. Let's see. The pharma space, Biocon, there was an update there. There's the launch of Yasin Tech. I believe Hiral told you about this, just about 1% or so. So no very large moves unless I'm missing the mark.
No, I mean, it is probably going to be stock specific, but there is that slight bit of cautiousness that is prevailing, and because it's a truncated week, probably the volumes also will be low in terms of the markets today, right? So don't expect a very broad range is the read that I'm picking up so far, Alex. But clearly, in fact, Nilesh, let me come to you with two stocks. From the aviation pack, you have a SpiceJet as well as a Indigo. 5 or 6 consecutive session of gains is what we've seen in terms of where Indigo goes. Not a similar trend in terms of SpiceJet. What are charts indicating? Any buy calls coming in on that front?
So Indigo is a buy. Yesterday, we saw another day of follow-up move on the upside, as you have rightly pointed out, consecutive 6 days of gain in Indigo. And looks like we may see a follow-up move to continue in this particular counter towards 4650 to 4700. So that's the target for Indigo. Any dip can be used as a buying opportunity. This particular counter, in fact, is outperforming the market and trading well above all long-term and short-term moving averages. We have also seen a buy crossover as well. So any dip should be used as a buying opportunity. Keep a stop loss below 4460, and the target on the upside comes around 4650 to 4700, and similar with the SpiceJet. But I have more confidence and conviction in Indigo than SpiceJet, because SpiceJet is merely witnessing a pullback, and this pullback may get arrested somewhere around 49.50. So not that conviction in SpiceJet, but can be played purely from pullback perspective with a stop loss below 4650, and pullback may extend towards 48 to 48.50.
Right, Nilesh, quickly, FMCG after 15 days saw a gain in trade yesterday. Any topics there?
United Spirit, this particular stock within consumption space is looking attractive after decent correction that we have already witnessed. And yesterday was a reversal candle we have already seen in this particular stock. So we may see a follow-up move towards 1365 to 1385 with a stop loss below 1320. United Spirit is something that is looking attractive.
Okay. Just seconds away from the start of trade, of course, just about 20 seconds or so. And don't be surprised if it's a bit of a muted move, but not a very substantial downside. That's what the initial indications were. Of course, the global setup has not been very positive. But then remember, the Indian equity markets have been under considerable amount of selling pressure through all of last week in heading into today's session as well. So not very surprising, therefore, that you see just a little bit of a wobbly start. In fact, we're seeing a little bit of green in the screen, but it's practically flat at this juncture. Let's also pull up the IT index to see if there's any implication there. And it is down about 0.4% as well. A little bit of pressure following through, bleeding through from yesterday into today as well. Nifty Bank, let's pull that up as well. Okay, so it's up about 0.4%. Let's pull up the heat map for the benchmark Nifty 50 and see where the action is, because yesterday you saw a few very large names that saw pressure. And today at the bottom of the screen, you see the likes of Larsen & Toubro, which is down about 1% or so. You have Hindalco, TCS once again making the cut in terms of the lowest on the screen. Pressure in IT continues. You have the likes of Titan as well as Tata Consumer, SBI Life. But if you think about it, not very substantial moves on the downside. Let's look at the gainers. You have BPCL, you have Trent, you have Shriram Finance, you have Mahindra & Mahindra. Mahindra & Mahindra making a bit of a comeback from what you've seen earlier on in the last few trading sessions, where it lost quite a bit of ground. Both yesterday and today, it has gained ground. ICICI Bank gaining about 0.7%. Trent, remember, we've spoken about it. Goldman Sachs is bullish on this counter, and a considerable upside being spoken about there. Shriram Finance is gaining as well. Let's very quickly pull up the broader markets just to see where they are, the mid-cap index and the small-cap index. There has been a little bit of pressure. This too is just about flat. Let's pull up the small-cap index before we go into individual names. And you have about 0.4% gain in the small cap index. But remember, it's been very wobbly and it's all stock specific action. Heela is going to be telling you some of that.
Absolutely. And what's interesting right now, Alex, is that there is some build of outperformance that's happening with regards to broader markets as compared to where the large cap space is concerned. But let's quickly look at a few of the stocks that were on our radar. You have a Coal India that's in focus in today's session. You have a JP Morgan, which has cut the target price on this counter. So that's one of the stocks that we're tracking pretty closely. There could be some bit of pressure on that one. There you go, 0.3% lower. Apart from that, you have an Indus Tower where Goldman Sachs has again cut the target price as well on that one. So Indus Tower, though the stock is seeing gains of almost 0.9%. 361, they've said the margins are expected to improve in FY26 over FY25, and this is at the analyst meet. On the back of it, some moves, strong moves coming in on that one. Union Bank, the loan growth is expected to be at the lower end of the guidance. So again, that one pretty much flat, no major moves on that stock. Biocon, Stellara is the generic version of Stellara is what Biocon has launched. That drug had a sale of almost $10 billion worldwide, 0.7% higher. Jubilant Pharmova, as Alex was mentioning, doubled revenues by 2030. So there you go, 1.4%. AkzoNobel, on the back of the acquisition of the coating business, that stock is in focus as well. Let's see what that counter is doing in trade. and you have an Interglobe Aviation. You already saw 6 consecutive sessions of gains, and Goldman Sachs has also hiked the target price. Yesterday, Citi was positive on that counter, but now you're seeing some bit of profit booking that's coming in today's session. You have a Camlin Fine Science on the back of the acquisition. They've acquired majority stake in Vinpai SA, 0.7% higher. And a Tata Motors, of course, that we cannot miss in trade today. And that's on the back of the Tata Capital IPO. I mean, there could be some gains on the back of the OFS that Tata Motors could see, but pretty flat. So, Alex, I think in terms of individual stock-specific action, what's happening is positive news. You're not seeing a major positive reaction, but slightest of the negative news, you're seeing stocks that are beaten down, right? So, clearly, a lot of stock-specific action in the markets. Secondly, overall, in terms of the breadth, that is expected to be narrow, and the volumes are going to be absolutely tepid.
Absolutely, Hiral, and as you rightly pointed out, the benchmarks are pretty much flat. There's some gains in the broader markets, but more stock specific. Let's pull up something like a Nazara Tech. The company has acquired around 38% stake. Let's see how the stock is doing in trade today. Of Funky Monkeys for around 28 odd crores. In terms of, as I rightly mentioned, the benchmarks are doing trading pretty much flat in trade today. The Nifty Bank, however, is up around 0.12%. But yes, Nazara Tech up by around 1.7%. Let's also pull up something like MTNL because it announced lack of funds for its March 6th bond interest payment, although the stock is up around 1% in trade today. Veranda Learnings, NTPC and NTPC Green, let's pull up those stocks and see how they're doing in trade today. Veranda Learnings company acquired 40% stake in BB Publications. The stock is down by about 0.4 odd percent. NTPC is up by about 1.1 odd percent. And let's pull up some oil and gas stocks here. Motilal Oswal picks HPCL as well as GAIL India. Let's see how they are doing in trade today. There you go, HPCL down by about 0.6 odd percent. And GAIL India down by about 0.6%. But Nilesh, I'll quickly come to you. How are you reading the markets, and how should one trade in these markets right now?
Well, market looks more sort of a consolidation as expected. In fact, I won't be surprised if we see another round of selling and Nifty slips below 22,500. Then I think there will be unwinding of the position from the put side. And since we have monthly expiry this week, so there could be possibility of Nifty moving towards 22,400 to 22,350 zone. But stock specific action is something that we are keeping an eye on. Indian Hotel is looking weak on the chart. Constantly for the third consecutive session, we have seen a constant selling pressure in this particular counter. So looks weak for 700 and 690 sort of levels on the lower side. So Indian Hotel can be sold at current level, keeping a stop loss somewhere around 728, and downside target would be 700 to 690. And apart from that, on the other hand, one particular stock that is looking attractive, looking positive, that is Chambal Fertilizers. This particular stock, in fact, have witnessed an outperformance and looks positive for 565 to 570 on the upside with a stop loss below 535. Chambal Fertilizers can be bought.
From the Tata pack, and we've been speaking about this in the morning so far, we did mark Tata Motors, but it's not moving very substantially. Sunny, what is moving is Tata Investment. It's up over 7% at this point. And this is a stock that we've seen in the recent past that reacts very sharply to news and news updates. What is the kind of attention that you pay to this? Do you track this closely? And if so, what do you think is the reason for this kind of a spurt?
Yeah, so first Tata Motors, I was just checking FY24 annual report. As per that annual report, Tata Motors is holding 43 lakh shares in Tata Capital, and I believe the value of that is close to 350 to 400 crore rupee, assuming the price in unlisted market is close to 800 rupees for Tata Capital. So that's a very minuscule amount as far as Tata Capital, Tata Motors shareholders or per share value for Tata Motors shareholder is concerned. So that's the reason we are seeing a lackluster reaction in Tata Motors on the news of Tata Capital IPO. Tata Investment, Alex, just give me a moment. I need to check what is the holding in Tata Capital as far as Tata Investment is concerned.
Okay. Nilesh, any thoughts on this? Because this is a very strong up move for Tata Investment. I'm seeing a couple of other, so not very many big movers in trade today, right? You've already pointed that out, but a few names that I see on the screen are perhaps names that have gotten beaten down very substantially in the past. So something like a Credit Access Grameen is trading with gains of about 5% or so. Would you utilize these pops to get out though?
Absolutely. So these are the opportunities that we are getting wherever we are getting a strong pullback, use this pullback to exit, because the overall undertone of the market is not looking that promising. We may see further downtick to continue. As far as Tata investment, this type of counters are concerned, we are witnessing a strong spurt, but unlikely to be a sustainable, because the volumes are very dry. Earlier in the previous week as well, we saw multiple attempts were being made to cross its 200 exponential moving average, which is currently placed somewhere around 6250. So unless and until it crosses 6250, there could be possibility of some profit taking at the high levels. So not advisable to chase the momentum. Better wait for some cool off to happen in this particular counter. So it's an avoid for the time being. And similar with the case with Credit Access as well. It's merely a pullback after 6-7 days of constant decline. So use this pullback to exit from the long position. Stock specific, I think a couple of stocks that are showing strength. We have already mentioned about that. Banking, in fact, is something that may outperform. And yesterday as well, we have seen Kotak Mahindra Bank, a big spurt in that particular counter. And today we are witnessing some follow-up move in HDFC Bank as well. So Bank Nifty, we are a little bullish. So focus should be on the banking space.
And it's up about 0.25%. I'm talking about the Nifty Bank. HDFC Bank was under pressure yesterday, ended with cuts of about 0.9%, but it is gaining about 0.4% as we pointed out right now. I'm just wondering what Sunny has to say about a couple of counters here. And Sunny, in the realty space, and let's pull up the realty index if we can, because it is the worst performer in trade today, down over 1% or so, and you've seen considerable pressure, 1.6% now. Sunny, the residential players, there was a lot of talk based on pre-sales, but some of those companies did disappoint in the third quarter. On what basis would you be buying, if at all, in the real estate counters, or would you hold your horses?
No, so again, we will be selective buyer as far as real estate residential space is concerned. So one of our top pick in the realty space is Lodha, which is a macro tech developer. So a very strong set of pre-sales number, and at the same time their Palava township, because of the infrastructure development in and around that township, we believe a lot of value unlocking will happen over there. So I feel the fair value is of Macrotech is close to 1,300 rupees with a 6 to 12 month perspective. And another Mumbai-based player, Suntech Realty, we feel trading at a very reasonable valuation, very strong set of number delivered during the December quarter. So Suntech Realty is another stock which we like from the real estate space.
The broader markets have capitulated somewhat, and you've seen a fall from the high of as much as 1% for the mid-cap index, over 1% for the small-cap index. Small-cap index now trading with cuts of about 0.4% or so. So therefore, once again, Nilesh, to drive home that point, particularly in the broader markets, you've seen the texture shift once again, and the market breadth clearly now in favor of the declines. What is the strategy on individual names? Would you stay cautious and avoid taking any long bets, particularly in the broader end?
See, in the broader markets, there was an attempt in the previous week where the Nifty small cap and mid cap both have shown some bit of an outperformance vis-a-vis the large cap names. So this pullback was got sold into, and now we expect an underperformance to continue. So not advisable to chase any mid cap and small cap counters for the time being, because large cap itself are available at corrected price. So the focus should be on the large cap names where we get some bit of a margin of safety. So that should be the focus area. So the broader market should be an avoid. Even in stock specific move, I think whatever pullback you are getting in between, that should be used as a exit opportunity, because if you pull up the structure of the Nifty small cap, in the past 6 months, this particular index is constantly forming a lower top and low bottom. So the recent lower top has already been formed. The lower bottom can be seen somewhere around 14,900 to 14,800. So it's better to avoid taking any contra bet in the broader market. Focus should be on the large cap.
All right, and yeah, so very choppy at this juncture. It's back to unchanged territory for the small cap index, and so I guess you're going to have to wait for a short while for the dust to settle. It's moving very, very sharply in the early hour of trade. But Sunny, we've spoken about several counters already, but I'm wondering what you think about the oil marketing companies, because you've had a few people, and there was a note that we spoke about earlier on today as well, where analysts are saying that now the worst might actually be over for some of these oil marketing companies, and you add GAIL as well to that list. What would you say, though? Is this an opportunity to go bottom fishing?
Yeah, definitely. If I look from a valuation perspective, I think trading at a very reasonable valuation. Most of the oil marketing companies are trading in a price to earning multiple of 4 to 6, dividend yield north of 4 to 5%. And at the same time, the pressure which we were seeing on as far as GRM is concerned in the September quarter, that has eased off in the December quarter, and outlook seems to be pretty stable as far as refining margin for all these oil marketing companies are concerned. Although the advantage of cheaper Russian crude oil may go away, but I feel that at least the stable crude oil prices will ensure that the margins will remain healthy, to some extent partially offset by losses on LPG, which the street is expecting that government may compensate over the period of next 3 to 6 months. So I think the risk as far as the downside in terms of stock prices is concerned is very minimal at a current juncture. And if somebody is a long-term investor, definitely can accumulate with an investment horizon of 2 to 3 years.
Right. One company that I want to talk to you about from the FMCG pack is a Gopal Snacks. The management will be joining us shortly as well. Literally, Nilesh, from a technical perspective, YTD the stock has already eroded around 18%. What are charts indicating? Because there are brokerages which have a target price of nearly 500 on the counter, but there is pressure as well.
Absolutely. So we have seen a constant decline in last almost 4-5 months now, and there has been no respite in this particular counter. Whatever pullback in between we got, that has been sold into. So structure is still looking weak, and we may see this particular counter revisiting and retesting the levels of 280 on the lower side. So it's an avoid for the time being till the time we see any strong reversal candle. A break above 335 will provide first level of a confirmation of a base formation, but for the time being looks weak, so it's an avoid.
Apollo Pipes is another counter that is in focus and kind of under pressure. Let's pull up the chart and let's also pull up a longer term chart. It's down by about 3% today, but in terms of 6 months period, there you go, it's not performed very well. In terms of today's announcement, well, the announcement came post market hours yesterday. It has made further investment in Kisan Moldings, where it its overall holding in the particular company went up by around 1% odd. But Sunny, the stock is down by about 3% odd. How are you reading this, and overall, how does the outlook look like for Apollo Pipes?
Yeah, so first talking about industry, this entire industry of UPVC, PVC pipe has been under stress in terms of volume growth. So if you see the numbers of all the other players like Prince or for that matter Supreme, Phenolics, you will find that industry is struggling for volume growth in this entire category. And again, Apollo Pipe is one of the players in this category, and hence we have seen earning pressure for the Apollo Pipes also. Regarding the development of Kisan Molding, I think I would like to remain neutral basis that development. And anyway, we are staying away from this sector till the time we find some green shoot as far as recovery in volume growth for these UPVC and PVC pipes are concerned.
Right, so that's with regards to where Apollo Pipes goes. Sunny, the other question I have is with regards to where real estate companies are concerned. In fact, one of the brokerage houses actually went ahead and reduced their target price on a prestige estate as well, and that's only on the back of a lower pre-sales expectation for FY25 and seeing some bit of execution concerns. How are you looking at real estate as a pack? Because by the end of FY24, we had seen a major sell-off that had happened in terms of real estate counters as well, and it's not that strong a footing in terms of start to FY25, in terms of 2025.
Yeah, so coming to real estate sector, we continue to remain selective and would like to accumulate few larger players which have got a capability to mobilize equity fund in case of any downturn, economic downturn is concerned. So Macrotech continue to remain our top pick, again now predominantly Mumbai-based player, where their Palava township has seen a lot of potential in terms of value unlocking because of the infrastructure development around that township. So Macrotech continue to remain our topic, and within Mumbai market, Sunteck Realty is another player which we like. They have delivered very robust set of number during the December quarter, and on the top of that, we will see a rental annuity income which will start flowing for Sunteck over the period of next 2 years. So again, that's a good diversification in terms of revenue stream, and that offers a lot of stability. So Sunteck Realty is another pick from Mumbai market.
Right, that's with regards to real estate. Maruti Suzuki, let's just pull up that one on the screens. They've commissioned phase 1 of manufacturing, which is in their facility at Haryana. And this will be around 2.5 lakh units per year is the kind of capacity that they're looking at from this facility as well. And overall, this is going to be positive, taking into consideration the kind of vehicles come from here, whether it's going to be EV. Those details are not known, but on the back of the commissioning, you're seeing some marginal gains, Mahima, 0.8 to 0.9% higher today.
Absolutely. And, you know, there's one stock that is, you know, has not been doing well. In fact, a lot of these counters have not been doing well, but Triveni Engineering specifically, you know, is down by about 4% right now. And YTD also, if we check the performance, it's down by about 20% Nilesh, on the charts, how are you reading Triveni Engineering?
Well, Triveni is looking weak, but the only positive for this particular stock is that it has a multi-month, multi-year support somewhere around 360. So it's trading just bit of nearby those levels, so at 370 currently. So at 10 rupees away from breaking that crucial support zone. So as of now, it's an avoid, but if it breaks below 360, then I would advise to exit all the long position, because then the next target on the lower side comes around 340 to 320. But as of now, if somebody is already holding the long position, can stay put, keeping a stop loss, stick stop loss below 360. And if you see any pullback towards 380, 390, use that pullback to exit from the long position.
Right, so that's with regards to where Triveni Engineering is concerned. But apart from that, let's just look at few of the other counters, because if you see the breadth, that's absolutely nearly 50-50 in terms of Nifty 50. But M&M, Adani Ports, Bajaj Finserv, Eicher Motors and Adani Enterprises, these are the top gainers in trade today. Nilesh, coming to you, M&M, Eicher Motors, how are you looking at both these counters on the charts?
Well, Aisha, we have already given our buy recommendation at the beginning of the show, and we have a positive outlook continue. Our target comes around 5150. So that's the target that we are eyeing on in Eicher Motor. In fact, overall, across auto counters, we are witnessing a strong move today. Even if you look at Ashok Leyland, this particular stock is also looking strong. So this counter can also be bought at current level and on declines, keeping a stop loss below 221. On the upside, the immediate target comes around 231, followed by 235. So apart from Eicher Motor, Ashok Leyland is also looking positive. Bajaj Finserv, this particular stock, in fact, has been one of the outperformers recently within the NBFC space, and looks good for a little positional perspective from the mass series point of view. This stock may test the levels of 1950 to 1980 with a stop loss below 1845. Bajaj Finserv can also be bought.
All right, so that's the view with respect to Bajaj Finserv and some names in the auto pack. But with that, Sunny and Nilesh, thank you so much for joining us at NDTV Profit and taking us through India Market Open.
Thank you.
All right, with that, let's move to the next segment where we're going to talk to corporates. And the first corporate that we're talking to today is Gopal Snacks. It's been in focus. And to discuss, as to how things are faring out for the company, how the quarter has gone by, we're joined by Raj Bipinbhai Hadwani, who's the Chief Executive Officer at Gopal Snacks, who's joining us now. Mr. Hadwani, before I move on to how quarter 3 has panned out. The big talking point, of course, is the fire that broke out in December in one of your Gujarat factories. That factory contributes around 70% of your total production, but 50% of it was already recovered in 2 days, is what the update was. I just want to understand, overall as to what the loss has been like because of, the fire that broke out in the factory, and how has it impacted Q3 overall, and how is the recovery looking like now?
See, fire was an incident, and we have from that you are mentioned right that the plant was contributing around 70% of the total revenue, and we have covered till date 65 to 70% of that revenue. So we are from the end of the March, we are expecting 90 plus percentage of the coverage will do. And the quarter was a little bit bad because of one of the few reason is the palm oil, and because of the palm oil and the potato. So from this quarter onwards, I think we see the stability in palm oil as well, and the potato price is also will be from the February crop is coming, so it will also be in control.
Okay, Mr. Advani, you mentioned that the inflationary pressure continues. Palm oil has risen quite a bit, and that is impacting your margins as well. In terms of Q3, the margins slid to around 3.86 odd percent, which has not been the normative range. I want to understand that what are the steps that you're taking to kind of control this inflationary pressure? Are you planning to replace palm oil with something else? And when do you expect margins to come back to their normative range? Because it's not just the inflationary pressure, but it's also the production that is ramping up for you, which is kind of impacting the margins.
You are right. There are multiple reasons for the margin pressure. One is the fire incident. After the fire incident, we have recovered our plant, but it will take around few months. But compared to the December month, we have recovered in terms of costing as well, because we have jumped up our production in Gondal unit, and we have also added few packaging machines in our other two plants as well. And for the inflation we have reduced few grammage in our products, and we have changed the packaging size as well, which will contribute to the little bit more of a margin. So we have corrected in terms of grammage in our few products and packaging size as well.
So Raj, my question to you is, you mentioned that you have been trying to come back on track in terms of manufacturing. So what was your capacity utilization pre-fire, and where is it now, and how much time will you take to get back to pre-fire levels in terms of the capacity? And what's the overall financial impact? Any number that you've ascertained so far?
We are fully insured, so we are still looking at the number, because we haven't received the final amount from the insurance company as well. But it around 100 CR, and the recovery you are asking, that I already mentioned that we have recovered 70% of our Rajkot unit production, which contributes 70% of our total revenue. And from by end of the March, we target that 90+% will recover of the Rajkot unit, which used to contribute 70% of the total revenue.
Okay. And from here on, taking into consideration the kind of competition that's coming in, what is the plan from being a regional player to probably expanding your horizon in terms of geographies?
So in that case, we are expanding our distributors in non-corp states, so which are Jharkhand, UP, Chhattisgarh, Telangana, So we are adding more and more distributors, mostly 30 plus distributor in a month, and that will contribute our non-core growth from our Nagpur plant.
Okay, Mr. Hadwani, in terms of your segmental performance, wafers is something that has seen a significant amount of growth, and this is a question that I've been asking other snack producers as well. Are you seeing an overall shift in terms of how consumers are now consuming snacks? Because what I'm seeing is that people are now shifting towards more of modern snacks as compared to traditional snacks, but your forte is traditional snacks. How are you reading that, and do you see an overall impact on Gopal Snacks?
Our growth in chips is because of late entry into the segment. We were there in namkeen since 30 years, but in chips we entered a few years back only. So that also contributes a major jump in wafer sales. And yes, we are also focusing more on the western part of the segment. And in this industry, namkeen is also growing and western snack is also growing. But western snack as a modern snack, and people are urbanizing more, so we see good growth in both segments. But for us, western is more because we were there in traditional, and now we are more focusing on western snacks as well.
Okay, Mr. Advani, one last question to you. 9 months FY25, you've done 1,500 odd crores already in terms of top line, and in terms of bottom line, it's been around 85 odd crores. I just want to understand overall from a longer term perspective, how does FY26 look like? What will be the top line growth that you're kind of penciling in, and also how do margins fare by FY26? Because I believe by the end of FY26, your ramping up pretty much will be done and margins will stabilize.
In 2026, for sure, we are expecting more than industrial growth, which lays around 10 plus percent of the segment of the segment growth. And another is can you repeat the question?
Just in terms of margins, Mr. Hadwani, what do you expect? Will margins stabilize by the end of FY26, and what will be the levels at which they'll stabilize?
Okay, so yes, margin will stabilize our existing margin, which used to be EBITDA of 11%, and it will be there at 11%, around 11% will protect that margin.
Right. Thank you so much for joining us on the show and sharing your views. So that's the management of Gopal Snacks, clearly laying out the impact, the outlook, and what's the road looking like with regards to expansion from here on. The stock pretty much not doing much right now on a YTD basis, has given up nearly 18 to 19% in trade. But is this landscape similar for FMCG, for consumption as a whole? What are trends indicating? To discuss more, we have Siddhant Chabria, research analyst and fund manager at Mirae Asset Investment Managers India. Siddhant, firstly, good morning and welcome to the show. My first question coming to you is overall the kind of landscape that you're picking up with regards to consumption. Because post the budget, the estimation was 1 lakh crore in the hands of consumers. That is something that could probably give a boost to FMCG as a sector. And yesterday's session itself, we've seen some good recovery, good buying that has started to come in. What are you picking up so far?
Right. Yeah, hi. So there are two ways to look at it. Firstly, if we look at the rural pockets, which have been a bit more sort of resilient, and within rural, if we look at the macro data points and commentary from FMCG companies, does suggest rural is recovering. And if we look at the macro data points within rural, look at real rural wages, they have turned positive after a year. Manrega demand is 9% lower YTD, which suggests lower stress in the economy. Reservoir levels are higher than long period average. Current Rabi sowing has been pretty healthy. So the way to look at it is we were seeing urban demand start to slow in the last couple of quarters, but rural as a pocket is recovering. while we need to monitor the extent of this recovery. And to put it in numbers, FMCG companies within rural, let's say, are growing today at mid-single digit volume growth, while urban is growing at low single digit volume growth. So the overall consumption as we speak is quite weak.
Siddhant, Mahima also joining in. I want to understand that so far, premium segment for all of these staples as well as, the Alcobev companies have done very well. And this might be also on account of lower base as well. But do you expect this to continue going forward as well? Because, overall the mass consumption has struggled clearly in the past 4 to 6 odd quarters. So how are you reading that, and do you expect the premiumization strategy to continue for all of these companies?
Absolutely. So post-COVID, we've seen this trend of K-shaped demand pattern. Premium end has done well, like jewelry, real estate, travel, while as you said, mass consumption has struggled. And the real challenge has been that real wage growth has been a challenge for middle class, while not so much of a challenge for upper middle class. But we believe that this divergence that we have seen in the last few years, that could moderate going forward. Particularly these steps taken by the government on income tax cut and steps by RBI of interest rate cut. Plus, what we are starting to see is deflation in food. That was a real challenge 6 months back, where we saw a sharp spike in food inflation. So all of that is expected to give relief to the middle class household. And at the same time, one will need to monitor in the premium end with the current market correction that we are seeing. Could there be an impact in consumption because of wealth effect? So from that point of view, we do believe that divergence in premium and mass consumption to start to moderate going forward. And hence, we believe with these steps taken by the government and RBI, within mass, we will see some sort of recovery in discretionary spends.
Right. So, Siddhant, let's break this up between between discretionary companies as well as consumer durable companies as well, right? Now, if you look at FMCG, the ones which are pretty much dependent on mom and pop stores, right? How is the outlook looking like with regards to the scale up of quick commerce? Because a lot of differentials that come in over there, what are your bets?
Right. So actually, we are not so positive on FMCG. And if you look at the growth profile these companies today offer, at best would be one-time GDP. And the margins that they are operating at are pretty optimum. And at the same time, like you said, newer channels are emerging like quick commerce. So the distribution mode that they used to enjoy, that is also getting challenged. And we'll, going forward, continue to see more D2C brands scale up, competition go up. And from a valuation standpoint, and if you look at discretionary companies which are underpenetrated, huge runway for expansion and growth profile, hence can be 1.5, 2 times GDP at similar valuations. So they do look more attractive from that point of view. So we are more positive on discretionary over staples.
One question as a follow-up that I have is from a valuation perspective as well, right? Would you still prefer the traditional staples or traditional FMCG companies, or the new age companies where there is risk reward which is favorable as compared to your valuations?
So since growth is a challenge in the sector, the idea is one has to be stock selective. And our filters are to identify those categories within FMCG which there is scope to grow at least double digit, where there is scope for distribution expansion, adding more product categories, gaining market share. So hence, we are more positive, let's say within FMCG, more positive on sectors like liquor, or even if we are looking at beauty as a sector which has more growth runway, which is underpenetrated. So that is how we have to be stock selective. While the traditional sectors like soaps, shampoos, absolutely they can't grow at that pace and justify those sort of valuations.
Okay. Siddhant, in terms of, you said that, traditional FMCG definitely not looking positive. But in terms of, other pockets of consumption like the QSR, the retail, the jewelry space, the retail when it comes to fashion apparel as well. How are you reading through these, counters? Because QSR definitely is picking up. We saw that in Q3. Even apparels in the tier 2, tier 3 cities have picked up because rural consumption is going up. And jewelry definitely has performed well, of course, because of the festive season and the rise in gold demand as well. But all of these three pockets, how are you reading them? And do you think that they'll be better than the traditional FMCG companies?
So yes, we do see opportunities here, and the reason is the context, right? Last 2 years have been very sluggish for these companies. We've seen pretty sharp earnings cut. And like you said, in QSR, because of base effect, we are starting to see SSG start to stabilize. And for some companies, it's turned positive as well in the last quarter. So definitely with all these measures taken to boost disposable incomes by government, those incremental spends will go in these pockets, like QSR and like you mentioned, even in fashion, especially in value fashion as a format is doing pretty well. Apart from this, what we have been positive on is we've seen a very strong real estate cycle in the last few years. And with a lag effect, we believe as the handover of these apartments happens, we will see building material categories like, let's say, plywoods, tiles, electricals. These categories will start to participate in consumption, which have also seen deferment of demand in this last 1 year as income levels or real wages were impacted. So we could see some relief even in those pockets going forward.
So Siddharth, if you have to look at valuations, right, they have eased to some extent with regards to FMCG, but the outlook still remains slightly tough. And the headwinds that had actually held the sector's fortunes are really not showing any signs of easing up as yet. So, and FMCG as a sector itself has always been a safe haven. Index is down 17% in the past 6 months. So do you still see opportunities that are emerging, taking into consideration the way markets have been set up? Let's not look at it as an individual sector alone.
Right. No, so like I mentioned earlier, while valuations to an extent have corrected, and today in FMCG they are trading, you could say, close to long-term average, by last 5-year average. But we are still not so excited from growth point of view, and hence we are underweight FMCG and we are stock selective there. And incrementally, we are more positive on discretionary because that is where we see mean reversion that can play out as we see recovery in consumption going forward. So that is how we construct by being selective in FMCG and overweight in discretionary.
Quickly, you mentioned real estate, building materials, FMCG as a whole and consumption as a whole, but consumption also has a pocket, in terms of auto as well, because if discretionary spending goes up, because of the tax relief, I believe that the auto segment will also benefit. How are you reading the entire auto space? And I mean, are you positive with respect to the space, or what's the view like?
So here also, this sector has had a very good run post-COVID. We've seen a good mean reversion from a cycle point of view play out, and to an extent valuations and volume growth had caught up. But here we are again overall in autos underweight. We are stock selective. Yes, some of the companies could benefit with discretionary demand coming back. So we want to bet on those companies that have a good product cycle that is going on and they can gain market share. So we are within autos as well, stock selective. We are actually more positive on low ticket discretionary consumption, which was deferred in this last 12 to 18 months due to slowdown.
Right. So that's with regards to the view in terms of auto from a consumption perspective. Thank you, Siddhant, so much for joining us on the show and sharing the view. So clearly, from what Siddhant is mentioning as well, there are tailwinds with regards to rural consumption, but there is resilience as well. The macro data as well as the FMCG commentary is what is suggesting a rural recovery from here on, and it needs to be monitored with regards to where extent of recovery goes. The tax rebates, yes, they will serve as a catalyst, and the interest rate cuts and the moderation in food inflation will also boost consumption from here on. But they're constructive on discretionary companies or consumer durables, and they don't see a case for a re-rating or earnings upgrade when it comes to FMCG companies. So that's the overall picture that we're tracking so far with regards to consumption as the space goes. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
Welcome back. You're watching India Market Opening, and as discussed, if you see in terms of Nifty 50 as well, let's quickly pull up that one on the screens. A pretty tepid move, but we've started to inch slightly higher. 22,600 is what we're tracking. So far, 0.2% up move. 30 advances versus 18 declines on Nifty 50. And overall, in terms of stock-specific action, it's interesting to see how M&M is holding up to gains in today's session. Bajaj Twins are seeing some smart moves, FinServ as well as Bajaj Finance. Bharti Airtel, that's another one that we're tracking as well. IndusInd Banks in gains of nearly 1%. What's losing? Hindalco, 3% is the kind of cuts. In fact, Hindalco was another counter which was weak in trade yesterday as well. If you can have a 5-day chart of Hindalco, because metals as a space has been pretty much on a doldrum trajectory, taking into consideration the US tariffs that the street has been tracking. NTPC again under pressure. Coal India on the back of the report is down in trade. Sun Pharma as well as L&T which are down and about in trade. Let's just pull up the broader markets, the mid cap as well as the small cap index. Let's see if there is any outperformance, because when we opened up and benchmarks were flat, you did have mild outperformance coming in to the tune of almost around 0.3 to 0.4% in terms of mid cap. There you go. It's maintaining that kind of trajectory so far. Small cap index has now started to inch higher, 0.6% up move coming in on that one. So there could be strong moves in terms of individual stocks. The volumes, though, are seeming to be slightly low on the back of a truncated week in today's session. But moving on, as we were mentioning about Telecom, Indus Tower, you have a Goldman Sachs which has maintained a sell on that counter. They have cut the target price to a 330 from a 350. No major negative reaction on that one. Vodafone Idea, they have maintained a sell for a target price of 2.4. That's the number that we're tracking. And a Bharti Airtel, a target price has been hiked to 1780 from a 1700, and that stock is seeing some gains. What they've said is that the FY 25 to 28 revenue EBITDA estimates for Bharti Airtel's India segment are higher, increased by around 8% and 11%. And this is largely driven by consolidation of Indus Towers. In terms of FY 25 to 28 revenue, EBITDA estimates have been cut for Vodafone to the tune of almost 3% and 11%. And this is on the back of lower than expected Q3 subscribers and weaker tariff transmission. So that's with regards to where the telecom space goes. But as we got to you, the Tata Group is poised to launch its second IPO in 2 decades with Tata Capital. Sajid joins us with more. Sajid, you did give us a heads up of what it's expected to look like, but now a deep dive into what are you picking up now?
Okay, so the entire genesis of this is the RBI's circular, which requires an upper layer NBFC to list before September 2025. And within the Tata Group, you had 3 companies which were there, which is Tata Motors Finance and Tata Capital, which is the NBFC arms, which were supposed to list, and the third one being the Tata Sons itself. While the clarity on Tata Sons listing is still awaited, because they have applied to RBI to be exempted from the NBFC upper layer list. But what happened in last year in 2024 was the merger between Tata Motors Finance and Tata Capital, as a result of which one consolidated capital market and capital facing NBFC was formed, Tata Capital, which is a company. In earlier this year, there was a creditors meet which has approved the entire merger, and the NCLT is expected to approve the entire merger in the next couple of weeks. That's what the expectation is, which we understand. Now, what has happened is that at the time of that merger, Tata Motors received shares from Tata Capital, and as a result of which Tata Motors will have roughly around 4.7% stake in Tata Capital, which is the merged entity, and Tata Investment Corp will have around 2.5% stake. So in total, all Tata Group entities or corporate bodies will have a little over around 7.5% stake in the merged entity. Other stakes being held by multilateral financial institutions and employee trust. These institutions account for roughly around 3% stake. But Tata Sons alone holds around 88% stake in the merged entity there. So this gives you a context of the kind of shareholding which is there in Tata Capital. The board of Tata Capital has today approved the rights issue of around 1,500 crores, followed by an IPO which will happen by September 2025. The details of which is that they will issue nearly 23 crore fresh issue shares, and there will be an offer for sale by eligible shareholders. The eligible shareholders being Tata Motors, multilateral agencies, Tata Investment Corp, and other companies which are holding shares in Tata Capital there. Based on the valuation, we are just taking the valuation of the merger between Tata Motors Finance and Tata Capital. At that time, Tata Capital was valued at 248.6 rupees per share, giving the merged entity a valuation of nearly 98,000 crores. And
so nearly
now,
$1 billion, right?
So if you assume that at nearly 10% would come to the IPO as a total IPO size, we are looking at around 5,400 crores of fresh issue at that pricing, and an additional offer for sale to around $1 billion, or it can go up to 10,000 crores. We don't know the exact size because offer for sale is something which is pending.
So Sajid, if you're taking $1 billion, let's assume in terms of the valuation of the IPO, or it might exceed $1 billion, right? Bare minimum $1 billion is what we're looking at right now. What is the value with regards to the stake of Tata Motors and Tata Investments overall? And do you think they would be completely exiting it, or it'll just be some portion?
See, there has been always cross holdings held by Tata Group companies in various other companies there. But Tata Motors, my understanding is, will try to exit as part of the office, because it will get, the intention is to go net debt zero by FY26, and that would, this money will help them. At current valuation as we speak, which is 1 lakh crore valuation, and they're holding nearly 4.7% stake, the value comes to around 4,700 odd crores, which is there. So there could be some unlock unlocking of value which will happen, but they can continue to hold stake going forward as well in that say. We are seeing Tata Investment Corp also going up because they hold around 2.5% stake in the company. So that's around 2,000 crores of value which is being held by that. But my assumption is that even Tata Sons may be participating in a limited way. Because ultimately that NBFC will have to bring down the stake to 75% of for minimum public holding. So if not now, maybe in the future either through dilution or offer for sale, the Tata Sons can do that. But as we speak, and it's a rough calculation which we have, it is almost like $1 billion IPO which is going to come from Tata stable. The last IPO which we saw was TCS.
And Tata Motors has come out and said that they want to be net debt free by 2025. Yes. So timings absolutely add up with regards to their
And this is non-core to them
action.
now, right? So they have said very clearly that they will be monetizing non-core assets, and this could be one of the stakes that they can monetize.
A good move.
Absolutely, a good move. In fact, and thank you so much for that, Sajid. In terms of moves coming in on Tata Investment, they're quite significant. Let's pull up the Tata Investment chart. Tata Motors, however, is not reacting very, it's pretty much flat, but Tata Investment up by about 7.5%. Tata Motors up by about 0.07%. But one counter that's, buzzing in trade today is Welspun Specialty Solutions, which is set to come out with a right issue of around 13.25 odd crore shares, and Puneet joins us with more details on this particular counter. Puneet, what are you picking up?
Well, thanks for that. So definitely it's a rights issue. Roughly 13.25 crore shares is expected to be given in this particular round, and they're aggregating to raise roughly about 349 odd crores. But there's just a couple of peculiar details about this particular rights issue in general, and I'll get to that in a bit. Company of course has set a rights issue price of 26.4 rupees, so it's much below the current market price. The record opening date is 10th of March of 2025, closing date is 19th of March, and eligible shareholders will be able to apply for this rights issue in a ratio of about 1 equity share for every 4 shares held on the record date. Now, the company had of course approved this back in on January 27th of 2025, so this was expected to come in at this particular point of time. The confusing and peculiar part for me is where they mentioned these funds will be used. They mentioned debottlenecking and certain capability upgradation of plants. But the company mentioned in its conference call that they won't be adding any kind of new capacity based on this. Apart from that, they mentioned augmentation of working capital, that's as well as general business purposes and some repayment of debt. But the peculiarity for me was that there's no capacity expansion that's expected out of this. Plus, if you see, the company did about 540 crores in terms of revenue in the first 9 months, and they're raising roughly 350 crores via this rights issue. So it's just the numbers not making too much sense. And when the analyst actually had questioned them in the conference call as well, the company mentioned that the board had actually not decided the outlay and it's work in progress. So I think just on not any kind of capacity expansion and not quantifying the figure for debottlenecking as well in terms of upgradation and new machines is something that was on the anvil. While the stock is reacting positively, I think these were just a couple of points I wanted to highlight for this particular rights issue.
Thank you, Puneet, for getting us the details. But very quickly, the stock has hit a upper circuit, and it has been in demand on the back of the fundraising, 350 odd crores. Rights issue is what you're looking at. So far, we will get more details on it a little later in the day as well. But that's with regards to Welspun Specialty. But moving on, the markets, that's what is crucial. Volumes are low today, but Feb has seen the seasonality factor which has played out. The bigger question is, will March seasonality play out as well? Somit is joining us to get us more data. Somit, the data of March in the last 10 years is what you have analyzed so far. What is your key takeaway?
Well, firstly, to recap, yes, the Feb seasonality did play out. Markets continue to remain weak in the month of February, and if it continues to remain weak for the next couple of sessions as well, then it will be the longest monthly losing streak for the market, that is the benchmark index Nifty 50 in the last 28 years. Now, what's in store for March? Well, picture does not look that bad, at least when it comes to the March month. If you look at the benchmark index Nifty 50, it has managed to close in green 7 times out of the last 10 March, and the average return has been around 2.3%. Now, this is excluding the COVID-19 fall we are calculating. For Nifty mid cap and small cap, they have managed to close in green 5 out of the last 10 years, and the average return has been anywhere between 2.3 to 2.7%. Now, if you look at the sectoral indices, the picture is not that good, in fact, for the sectoral indices, because nearly 5 of the sectoral indices have managed to close in red nearly 6 or more times. In fact, Nifty Auto is the worst performer. 7 out of the last 10 years, it has fallen in the month of March, and the average return has been negative 2.6%. Media, IT, real estate and CPSE have fallen nearly 6 out of the last 10 years, and the average returns have been anywhere between negative 1 to negative 2.5%. But on the other hand, if you look at the Nifty Pharma Index, has fallen just 5 times, average return is positive 1%, while all the other indices, FMCG, Bank, PSU Bank, Financials, Private Banks, Metal, Energy and MNC, all these indices have just fallen 4 times in the last 10 years, and the average returns have been anywhere between positive 1% to negative 1%. Now comes the most interesting part, which are the stocks that we need to watch out for in the month of March based on seasonality. Now, these are the stocks that have given positive returns in the last 7 out of the last 10 March, and the returns have been more than 4%. Navin Florin has outperformed here, 9% average return for the last 10 last 10 years of March month. Indigo has given positive returns of 6.6%. APL Apollo, Ipca Labs, KEI Industries have gained anywhere between 4.5 to 6% in the month of March. Then there is Nestle, SRF and Page Industries, which have on an average given a return of 4% in the month of March. On the negative side, these stocks have fallen in the last 7 out of the last 10 years, and average returns have been more than negative 4%. HFCL has fallen on an average 10% in the month of March in the last 10 years. RBL Bank down 8%. Hoodco, Vodafone Idea, Apollo Hospitals have fallen anywhere between 6 to 7%, while Coal India, M&M and Bharat Forge have fallen anywhere around the 5% mark on an average in the month of March.
All right, thank you so much for breaking that down for us, Samir, and quite an interesting data out there. But shifting focus, another stock that will be in focus today is Coal India. Now, let's pull up Coal India chart and see how it's faring in trade today. It's down by about 1.4%, and this is because JP Morgan has maintained neutral rating on the stock, and Mika joins us with more detail on that. Mika, what are you picking up?
So they maintained the neutral rating but cut the target to 395 rupees, which implies only an 8% upside. Now the brokerage still sees multiple headwinds to the company's earnings growth, and valuations are still not at bottom levels. JP Morgan has also mentioned 5 reasons why one should not buy the dip in Coal India. First, there's no immediate catalyst to trigger a reversal in the coal prices seen. The risk from slowing imports from China and growing supply from Indonesia will weigh on coal prices. Second, India's coal inventory is above mean levels despite the low production growth. Third, Coal India has lost a significant amount of market share to captives from 78% to 75% currently. The fourth one is India's power demand has a strong correlation to Coal India's volumes, and the double-digit power demand growth is key to the volume uptick, which has not been seen yet. And lastly, while the risk reward does appear balanced at current valuations, a further downside is possible. The only 2 times that JP Morgan could turn positive in Coal India is one, if the company's share price declines below 340 rupee levels, and second, if India's power demand improves significantly in the coming months.
Right, thank you, Mika, for getting us the details. So that's Coal India slightly under pressure. Let's pull up our EPL also on the screens. That stock saw some major beating in yesterday's session. However, Nomura has come out with a report on the counter. They have a buy for a target price of 325. So an uptick of around 0.7% in today's session, and this was on the back of the stake sale to Indorama. And Nomura is saying that this is the right direction for minority stakeholders as well. And the overhang of exit of PE investors is now behind. And you have a SBI Cards where Morgan Stanley has maintained an equal weight for a target price of 685. So SBI Cards is another one that we have been watching out for in today's session. And lastly, Bernstein on Zomato, where they've maintained an outperform for a target price of 310. And the quick commerce leadership is expected to continue. The stock is trading at the day's highest levels with gains of around 3% coming in there. So that's with regards to where overall markets go in terms of individual stocks. But let's also now welcome welcome in Vikas Khemani, founder at Carnelian Asset Management and Advisors. Vikas, good morning and welcome to the show. Clearly, the kind of route that we've seen in terms of markets, a 5% erosion that's already happened in 2025 so far. We've already hit a 8-month low in Feb 24. Closed in the red in the last 25 sessions out of 40. What does this actually tell you from here on?
This kind of market corrections are, of course, part of normal bull market. We have seen this kind of similar correction in the first half of 22. Of course, last year we had a great year and it peaked out in September. And from there, we've been seeing correction both at the market index level as well as the broader market indices. Last year, quite a bit of froth got built, especially in the small and mid cap space, which I think has corrected far more than the index. So it's a good natural consolidation of the market, which is healthy. I believe that 80-90% of the damage is done. The market might consolidate a little bit more in terms of time. I do not see major, index level downside from here. I think last year, one of the big reasons also for the slowdown in the earning growth was, the squeeze in the liquidity and as well as the slowdown in the government spending. Both has, in some sense, changed. The new RBI governor has eased out on the liquidity, as well as the government has started spending money. So I think both of them should have a lag impact on the earnings as well. So I do believe that second half of this year, we will start seeing some sort of pickup in the market, and in the next couple of months, we could see consolidation, more time correction than value correction from here.
So Vikas, my follow-up to you on this one is reality versus expectations, right? Because that becomes crucial. Do you think investors will have to actually go down and tone down their expectations with regards to 2025? And if so, what is the kind of 2025 returns you're expecting from markets? Because earnings expectation is still probably higher single digits right now.
I think we had said that in our beginning of the year note that keep this expectation low from this year. We were coming on the backdrop of a great market in 24 and 23. So it was natural that this year would be less expectation year. And the first half, of course, turned out to be a continuation of the weakness in the market. So I do see, like I said, the very similar to 22 kind of period when in Ukraine war happened. Market Nifty at that point in time had corrected from 18,500 to 15,500, and then eventually in the second half of the year it went back from 15,500 to 18,500 and resumed the journey further. So and of course then within sector rotation all those things do take place. So I think it's going to be a stock pickers market. You will see more recovery of the market later part of this year. You might not see a great return from a beginning to end from an index perspective. But yeah, internals will change and you have to kind of look at those opportunities.
Got it. Mr. Khemani, Mahima also joining in, in the consumption space, we've seen that January, of course, inflation has eased a tad bit, but Q3 definitely was under pressure because the inflationary pressure kind of, impacted the margins overall for a lot of these FMCG companies. But now that, it's eased in January a tad bit, how are you expecting the cost trajectory to be like for a lot of these consumption-based stocks?
It depends on the consumption. If you ask me, look at even last 5-7 years, it has not grown at a significant pace. Especially if you look at broader listed company space. So I think single digit to early double digit kind of growth most companies have kind of shown. In fact, more like single digit. So I think consumption is definitely a story from India's long-term perspective. But when you look at this kind of growth, the valuation which stock trades at does not justify. So you have to really look at categories which are growing faster. And within that also what's happening is newer and newer competition is coming, newer and newer consumer behavior is changing. So I think there's a lot more disruptive things at play. As a result of that, we do not own much of the consumer consumption stock. We have, of course, some, but which are where we have a reasonably good confidence at around 15 to 20% growth at a reasonable price. That's the kind of setup you have to look at. Otherwise, in my opinion, in consumer, there are very limited plays where you can, they may not fall much, but the returns would be, in my opinion, limited from especially the mainstay large listed consumer plays.
Right, so that's with regards to consumption. Because your opinion with regards to IT as a sector has been to be probably invested and focus on tier 2 versus the large cap companies, right? Now, taking what the managements are saying right now, they're calling out of recovery. They are saying that there is healthy client spend that's coming in. However, if you talk about the inflationary pressures in the US and India, that can push out rate cuts and negatively impact the spends as well. So taking both these cases into consideration, and if you talk about the mid-cap companies, they are trading pretty much in line or slightly above their 5-year average valuations. Do you think this is still the correct time to start nibbling at them?
So mid-cap IT companies do tend to, see what is happening in IT services. Also, there's a bit of a churn happening. The new technologies are so cloud migration, digitization was one, opportunity which last 10 years played out, and smaller companies got created, grew faster in that space. But larger companies also adapted, but they were the slow to adapt, and it took time for them to adapt. So the value creation from a percentage return perspective happened in the mid and small cap space, even in the transition of digitization and cloud migration. Same thing, I think, as we move forward, digitization and cloud migration continues, but as more and more use of AI, in delivering the IT services comes about, the smaller companies will be far more nimble and adaptable to choose that. So we think that, like in, previous cycle, you saw LTIs of the world getting created, LTTS of the world getting created, HCL grew significantly in that period. You will see similar kind of trend happening in the next 5-7 years, where the second tier companies will grow faster and become the future large companies. And our endeavor is to keep looking for companies in that space and remain invested. So again, it's a company specific rather than sector specific, and we think that there are lots of opportunities there.
Mr. Khemani, in the kind of market fall that we've seen, what are the sectors that you are watching out? And in terms of real estate also, because tax reliefs have been announced, the rate cut cycle has also begun. How are you seeing the real estate sector as a whole? Because housing finance companies have done well in Q3 when it comes to the profit growth.
I think, in terms of value creation, I do believe that, banking and financial services should be a good sector this year, which benefits also from the dovish policy or dovish trend or growth-oriented stance of RBI and government spend. So I think banking should do well. And last year it didn't do well. This year also has been kind of a bit soft. So from here, I think that's one sector we think that will outperform. To a question to real estate, is a structurally good sector, especially after formation of RERA. Where consumer protection is there, larger players are becoming, a sector is becoming more organized, smaller players are going out, consolidation has happened. Having said that, I think the early part of the return in the real estate, the low-hanging fruit are done, good returns have been made. Now I think from here one has to look at how much companies are able to deliver profits, how are they acquiring their future assets from a development perspective. Because in real estate, another interesting challenge is that you can make profits on your existing land bank. The moment you go and buy the new land bank and still try to start making money on that, it becomes very hard. So the first part of the return is kind of captured and made from the existing land bank perspective. But I think future we'll have to see. So I would say that sector structural is good, but don't expect the kind of return it made in the last 2-3 years. It will be, in my opinion, mid-teens kind of growth over next 3 to 5 years.
Of 3 to 5 years is what you should be watching out for. Thank you, Vikas, so much for joining us on the show and sharing the views. So that's with regards to the overall market structure, what's in store, and a lot of trading calls and fundamental calls that you garnered on this show. But to get more in terms of your portfolio and understand what you should be doing with that. You should continue to watch NDTV Profit, because up next is Ask Profit with Alex Matthew as well. But completely out of time with that, it's a wrap on this edition of India Market Open from Mahima and myself.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Ask Profit. And We've got Murli calling us. And Murli, hi. Thanks so much for calling us. You're calling us from Bengaluru. How can we help you today?
Yeah, good morning.
Good morning.
Thanks for taking my query.
Our pleasure. Please go ahead.
Yeah, I have bought Ace Construction, Action Construction Equipment, 200 shares at 1400.
Right. When did you buy this,
And
sir?
it's 52, it was bought in 9th January.
9th of January.
I bought with the 2 quarters and 9 because the maximum price, the highest price of issue was 1695.
Yes.
And the company is doing consistently well with the construction boom.
Yes.
But unfortunately, it is around 1165, incurring a loss of close to 50,000.
Yes.
I am willing to offer 2 quarters. In the meantime, market has corrected.
Uh-huh.
And what is the option for me? This is to a fundamental analyst. The query is to a fundamental analyst.
Yes.
Whether I can hold or switch.
Okay.
Switch, which is a better option.
Okay, just a quick follow-up to that. Why only 2 quarters if you are buying on the fundamental basis, sir?
Yeah, this I am holding it I am observing it for quite some time.
Uh-huh.
And considering the 52-week, the performance consistently it is showing.
Hmm.
See, there may be better options available. Once you make about 10-12% return for a period of 3 months, you may get a better option elsewhere.
Right.
Where there are many options available.
Yes. Okay, so
I'm a short-term trader.
Okay.
Long-term trade, I didn't think about it.
Okay, understood. All right, but you want a fundamental view. Okay. Asta, let me go across to you then. And as Muli's pointed out, it has dropped quite considerably from the high point, which is over 1600 levels. I remember, if I remember correctly, this is a company that has just gotten an order from the Defense Ministry, and a quite large one at that. So that order book looks reasonably good. The question mark is the capital expansion or expenditure that we're witnessing that maybe has not flown into the numbers for some of these construction companies. Maybe that will be witnessed in the 4th quarter. Do you anticipate that, and would you hold on for a couple of quarters?
This company, being the market leader in mobile and tower cranes, it holds 63% of market share. So major positive about this company. Secondly, we all know in the budget also the government has a strong spending plans. So that will again be a positive for this company. And thirdly, in their financial performance of Q3 of FY25, they have posted highest ever numbers, whether it is on the top line front, bottom line, or operating profit. So I think financial performance is very strong. Industry tailwind is there. They are receiving the orders. But the only problem which I feel is about the valuation, because they are running at a higher valuation of around price to earning multiple of 36, where the industry is running at a price to earning multiple of only 30. So I think that is the major gap between the valuations, and that can be one of the reasons that why we are seeing the stock prices going downwards. But I think in the longer term, their order book is good. The financial performance is on the right side. Just for the valuation concerns, maybe some more downside can be seen. But in the longer term, the stock will perform. So I think one can remain invested in this counter. Initial price target can be set at around 1250 odd levels.
1250, all right, which is still below Murli's buy price. Murli, so therefore you're going to have a little bit of patience. Is there a better option available? Asa, and quick answer to this.
I think in this space, Action Construction Equipment has shown good performance on the financial front. So I think that is a good counter to stick on.
It's a good counter to hold on to. All right, Vodafone Idea is the next counter we're talking about. And Swati, this one's for you, because Hegde from Bengaluru has bought at levels of 11 rupees and acquired quite a considerable chunk of shares, 1,000 shares. And so he's incurring a loss. The stock is trading up about 1%, but still at 8 rupees. It's now a penny stock. On the technicals, what are the key levels to watch, and what is the advice that you would give specifically on Vodafone Idea?
The technical view, Alex, at the current level, it's definitely been cautious. We have seen that the stock has managed to maintain a very strong support of 6 rupees, and thereafter it has went up to the 10 levels. Now 10 is acting very crucial resistance level. So the view will remain cautious as long as this particular stock trades below the 10 levels. But at the current market price, the immediate support is placed at around 6.5 rupees. So as long as it sustains about at levels, it's definitely we can expect some sort of a bounce back rally. But for the longer term duration, calculation, definitely one should hold on this particular counter, because it will not be a mean to book the losses at the current market price, because the stock is trading at a very bottom levels. We might witness some sort of a reversal over a period of time. Slowly and steadily this stock will perform, but on the upside the strong resistance is placed at 10 rupees. Any move above that level, we expect a trend reversal for a longer term horizon, which might take a counter towards to back to the 14 levels. So for the longer term horizon, keep a patience. Definitely this stock will show the performance in the coming 6 to 1 years as such.
Okay. Swati, I'm coming back to you on Titagarh Rail, and we've got Chandan from Bengaluru who's bought at very elevated levels, 1682, and I think a lot of people did do this because of the kind of bullishness that there was in the space, and the stock is down about 45% over the course of the last 6 months, and he's captured most of that downside. He has been averaging, he says, on the way down, but his average price is now down to only 1682. He's currently holding 417 shares. What should his strategy be now?
Yeah, Alex, we have witnessed that this kind of a sector is only show the performance during the budget period as such. On the technical front, this month we also seen a down almost 20 to 25%. The stock has shown the losses in this month. On the technical front, as of now, I believe that the more downfall can be witnessed into this particular counter, which might take a stocks towards to 714 to 720 levels. Up to that level, we might witness some sort of a depth, and there onwards we can witness reversals from the oversold zone. At the current momentum, my monthly as well as weekly and the quarterly chart also doesn't show any kind of a reversal. So short-term period, there will be definitely pain into this particular stock, but on the longer term horizon, we might witness some sort of a reversals once the stock manages to take a strong support nearby 720. Upside, I'm looking for a target of 840, and beyond that level, thousands levels can be seen. So no need to panic. Let the stock settle down at the support levels, and there onwards, we can definitely going to witness some sort of a positive momentum, which might take a counter towards to 840 to 1000 levels in the near term.
1000 levels, okay. So, but you're going to have a little bit of patience, and you're already incurring a loss. So, bear that in mind. We've got Santosh calling us from Mumbai. Hi, Santosh. Thanks so much for calling us. How can we help you today?
Yeah, Alex. Hi.
Good morning.
I wanted to check on HCC. I bought it at 33 level. I have about 1,500 shares.
Okay.
It has fallen almost, about 10 rupees or more or less. I was expecting it to actually rise by 10 rupees, but it didn't.
Yeah, that's the texture of the market. But what's the thesis? Did you buy it for the short term, or did you buy it based on the fundamentals?
Short term, actually.
Short term. And what's the time frame that you had in mind?
About 3 months.
Okay. So from this juncture, you're wondering whether to sell and book your losses, and move to something else perhaps, or hold on with the prospects of, you bought it at 33, you were looking at 43, and so you're looking for a revised target. Is that right?
That's right.
Okay. So Swati, on the charts, recovery to 33, at what point is that anticipated, or further downside possible?
Yeah, as of now, the client is not facing a major losses, and whatever the rally, Alex, we have seen from the year 2022, the stock has given a rally from almost 12 rupees to 54. Now, whatever the retracement, if we check on the technical front, the stock has corrected 61.8%, which is the golden ratio we consider into the Fibonacci retracement. So I believe that whatever the rally has been retraced up to 61.8%, as of now, we have seen the price correction, but in the coming few trading session, we might witness some sort of a time correction. Now, the stock will go into the consolidation phase within the range of a 30 to 23 rupees. Up to that level, within that range, it will try to consolidate, and thereafter we will witness some breakouts on the higher side. But definitely, you are going to earn a good amount of money in this particular counter, because we are looking for a target of 40 to 45 levels. So one should hold this particular counter, not to book the losses. So stay invested in this particular stock.
Just a clarification, Swati, the target that you're looking at is in what time frame?
See, at least 6 months to 1 year, definitely 42 levels can be tested on the high side.
Okay, all right. Hopefully that answers your question, Santosh. All right, we've got the next question on Tata Technologies. Uma Shankar is asking this question. She's bought at levels of 918 and quite a considerable loss being incurred in this particular counter. The stock is currently trading at 730, 75,000 or thereabouts is the loss currently. On the fundamentals, what should you do? Asta, I know that you've tracked this company closely. And if I remember correctly, you do have a positive coverage on this. But if you're incurring a significant loss, what should your approach be?
Yes, we did cover this counter when the IPO came, and in fact, we recommended subscribe also, and that call goes well. But now I think the kind of performance which we were expecting from this counter has not been delivered on the expected lines. Plus, valuation is also a major concern. So, looking after these both points, I think this counter is not showing any sort of positive momentum, and we are still not very much optimistic at this point of a time. So, idea here is to remain invested, but you have to be prepared for more downside from here, which I think the stock can witness till the level of 700 to 680.
Then let me ask you this. It has an interesting play, right? It is in the design space and it caters to the Tata Group as well. So a lot of the prospects looked good at the start, and I take your point, but is there a better play here? If you are incurring this kind of a loss, are there better prospects in the same space? And I know IT as a whole is, and it's not necessarily like-to-like comparison, but IT as a whole has gotten beaten down. So perhaps any opportunities there? Would you switch out?
So I think that companies itself is seeing opportunities in the digital engineering space, but the problem is it has not been reflected into the financials. Now, if I see their gross margins, there was a dip in the gross margins. Similarly, if I talk about their constant revenue, currency growth, it was merely 1% or 1.6%. So that is the major concern for this company, and I think that is the concern for the IT industry as a whole as of now. So I would really like to see how the Q4 will pan out for these IT majors. But still, if we want to pick any other counter in this same space, then Persistent System and Tech Mahindra are looking better to us. But again, not at these juncture. Maybe the lower levels are attractive for these counters to make an entry.
Yeah, so this is the kind of market that is going to test you, is what my interpretation is from what Asta is saying. Your thesis is definitely going to be tested. And so patience perhaps is something that you can take. Purnafai is calling. I hope that I've gotten your name right, from Vijayawada. Purnafai, is that your name?
Alex.
Good morning. Please go ahead.
Myself, Purnafai, I am from Vijayawada, sir. I am holding currently ITC Hotels at 171 rupees.
Okay.
Of 383 shares, sir.
Okay.
I would like to hold for long term, 3 to 5 years I can hold. I would like to know the fundamentals and technical.
Both you want. So technical will be a little difficult to get you because it's just recently demerged and listed. So let me get you a fundamental view on this one. Asta, ITC Hotels, we've spoken about the rest of the hotel companies, not all of them, but we've talked about Lemon Tree, we've talked about Indian Hotels. Let's complete the loop and talk about ITC Hotels as well. Bought at 171 and so therefore not too far away from the current market price. Would you add more? Would you hold?
Yes, I would recommend to hold this counter. Now, in fact, if I talk about the fundamentals also in the latest press release in which they have declared the results were, not very much something which one can make a detailed analysis on. The numbers were very small. So I think this whole process of demerger and etc. will take some time to get settled into. And that is why at the current point of a time, because industry tailwind is there, the company is good. I mean, promoters are very strong, are from the strong pedigree. So I don't believe any of the negative factors for this counter. Remain invested in this counter. The only problem is that we are not getting so much of data to analyze into as of now. But again, idea here is to stay invested in this counter and wait till the Q4 FY25 results come.
Okay, all right. I just want to point out, we're getting a lot of long-term questions, and that only indicates to me that my viewers are really focused on the long-term horizon. They're not really worried about the near-term concerns, and that I'm certainly taking a lot of heart from that. Shekhar is calling us from Maharashtra. Hi, Shekhar. Thanks so much for calling. How can we help you today?
Yes. Hi. Good morning, sir. Good morning to everyone. I'm holding HCL Tech at the price of 1805.
Okay.
And it's a 55 quantity. Okay. I'm looking for the long term. So my question is that the right time to get it average?
To average it. Okay. So let me go across to Swati to answer your question. Swati, HCL Tech, along with the rest of the IT pack, has had a torrid time over the last few sessions. It's gotten beaten down in trade yesterday as well. Would you buy at the current level?
Alex, definitely. Whatever the levels we are currently witnessing has been tested in last year in the month of the July and August. The 1630, 1620 is the crucial support for this particular counter. So if you're really interested to take a average it out at the current market price, I will suggest 20-30% can be bought at the current market price. Why? Because the counter is trading nearby its oversold zone. So the depth is very much little from the current market price. Maximum it can go up to 1600 to 1580 levels. That is a very strong support level for this particular counter. Upside, the positive momentum can be again witnessed up to the 1750, then 1820 levels I am looking forward. So if you don't want to miss out the rally on the higher side, at least 20-30% can be bought at the CME.
Okay, a flurry of fundamental questions. Let's take some of them quickly. Asta, and we've got Reshma Bhatia who's writing in asking for State Bank of India, which he's bought at a very attractive price actually. Let's pull up the chart. 403 is her buy price. And the stock is currently trading above 700. So she's clearly been holding for some time. She's wondering whether to sell 100 shares out of the 500 that she holds and buy Titan with that amount. What's the fundamental view here? What are the prospects in your opinion, Asta?
So I would suggest partial profit booking can be done only partially, which the viewer is also interested into. So yes, one can go with that because she's making a good amount of money. And that is why I'm recommending. Otherwise, I'm very much positive on the long-term prospects of this bank. Now, talking about this bank, first of all, net interest margins, they have moderated in the quarter 3 of FY25, which we have seen in the numbers. So that was the major reason that, the financial performance, it was totally a mixed set of bag. And we have seen the profitability because of the reversal of provisions. So I think going ahead, we are expecting margins to improve again. So in the longer term, the prospects are looking strong. Maybe in the shorter term, some more downside can be witnessed because of the market condition. So yes, one can book partial profit at this juncture and remain invested in the partial quantity with a price target of around 800 to 820 odd levels.
All right. So हमारा अगला कॉलर वेंकटेश बेंगलुरु से जुड़ रहे हैं हमारे साथ. वेंकटेश नमस्कार, आपका सवाल.
नमस्कार सर. Actually, I have bought Paisalo at 61 rupees 2000 shares.
हाँ.
So अभी फिलहाल वो 38 में है. तो इसके रिगार्डिंग होल्ड या मैं और ऐड कर सकता हूँ उसके रिगार्डिंग में कॉल.
और आपका टाइम फ्रेम क्या है?
लगभग 2 साल और 5 साल का है.
Okay, 2 से 5 साल. Asta, so he's got a relatively long-term holding period. He's bought at elevated levels, 61 rupees. What's the idea here? First of all, do you have fundamental coverage on Paisalo Digital?
Yes, I am trying to figure out because what I remember from my past study that this counter, there was a promoter's pledging of the share was that, and that was around 21%. So I don't like such type of a company where the promoters themselves pledge their shares. So that can act as a negative for the stock price momentum. So that was the first update which I want to make about this counter. And secondly, I think the results were also not very strong side of a number. It was merely 10% growth which they have posted in their bottom line of Q3 of FY25. So this counter, because I always look after those companies where the promoters pledging is almost nil or a very minuscule. But here more than 20% is pledged. So that is not a factor which I'm very much comfortable with. My idea here is try to get out from this counter at the higher prices. This is what I can suggest as of now.
All right, I got it. So, and hopefully that answers your question as well. IOCL is a counter that we're talking about next. And Swati, I'm coming to you on this one. And we've got a number of viewers who are asking about this, but specific question from Sanjoy. He has already purchased 300 shares at a price of 134.38 rupees per share. And he's looking to hold for the long term, but he's looking whether to add more at this level or just to hold, or in fact to sell. What should he do?
Alex, I will not suggest to sell at the current market price because the stock is literally trading near the oversold zone and we are on the verge of witnessing some sort of a positive divergence from that area. I believe that whatever the on the technical front, we are on the verge of witnessing the trend line breakout as well. But slowly and steadily, it will go on a higher side. At the current market price, at least you can try to hold your long positions. I'm looking for a target of 135 to 140 levels in the near term, which is a very short-term target within a span of 3 to 6 months. Beyond that level, 150 levels can be tested. Not to book your losses, slowly and steadily, this counter will catch the momentum. So stay invested in the stock.
All right, and fundamental basis also, a lot of people are saying that the worst might just be over for oil marketing companies. We've got the next caller from Hyderabad. Suresh is calling us. Hi Suresh, morning. How can we help you today?
Hi, this is Suresh.
Hi,
I want to know about BEML.
Okay.
BEML share.
Got it.
I bought it 3,800, 50 shares. I can hold it for more than 1 year.
Okay, so to 3,800, very elevated levels. When did you buy this, Suresh?
Just a month back.
Okay. Okay, let's pull up the 1 month chart and see where it's gone since then. So, yeah, it has lost quite a considerable amount of value. You can hold for 1 year. What was the thesis when you bought it, Suresh?
50 shares.
I got it. But what were you thinking when you bought it? Why did you buy it? What was the reason?
It's a railway scheme, right? So I thought like just before the budget, I bought it as in budget there might be some allocations to the railways and other defense sectors. So I bought some kind of defense and this railway scheme stocks.
Okay. Swati, on the charts, since we got a 1 year time frame and he's bought at elevated levels, he's lost about 27-30% value in that time frame. What are the prospects on the upside?
Yeah, as of now, the view is negative in this particular chart. So on the monthly chart, this month we have seen a very sharp correction, almost 31% correction. And I believe that this correction is likely to be continued and which might take a counter towards to 2,200 to 2,400. That will be the levels where it might find out the supports. Not to average it out at the current level, let the stock settle down at the lower level and show some sort of a reversal. At that point of time, you can again take a review on this particular stock. A short pullback rally can be witnessed, but that will be a short-lived, but which might take a counter towards to 2,800 to 3,000 levels. But on a larger degree, I believe that the selling pressure is likely to be witnessed on every rise or on the every resistance levels. So stay invested, but fresh long positions can be added. So to average it out, it will be on a depth toward to 2,400 to 2,200, not at the current market price.
Okay. All right. Let's keep the next few questions, answers rather a little sharp. We've got Angel Broking, which is a question from Ram Kumar, who's bought at levels of 2,450. He wants to hold for 5 years. Should he continue to hold? Should he add more? Asta, on the fundamentals?
Continue to hold more. Continue to hold, but not add more at this point of the time.
Okay, and that's because the prospects are good, but the valuations are still stretched. Is that right?
Yes, definitely. And markets are also not in a very good shape, the industry which this company is operating into.
Okay. All right. That was a precursor to the rapid fire round. Both of you know exactly what this means, but I will reiterate for the benefits of our viewers. We try and take as many questions over the course of the next 2 minutes as possible. Request you to keep your answers short, ladies. Motilal Oswal, 869 is the buy price. Harsha wants to know whether to hold for the long term or sell at a loss. Asta?
Hold for the longer term with a price target of around 640.
Okay. Sera Sanitary, would you buy at the current level? Bhupendra wants to know. Swati?
Not at the current market price. If you are getting any dips to 5,300, one can think about it.
Gul wants to know about Antony Waste Handling. Asta, any view on this? Would you buy fresh entry?
No, not at present point of time.
Okay. EIH, okay, the one hotel company we didn't talk about. Would you buy into this? If you are holding, would you hold? Shrikant wants to know. Asta.
So buy at the level of around 300 is recommended.
Okay. Interglobe Aviation has been on a tear. Would you buy the current level for the short to medium term is a question from Krishna and Swati.
Yes, 20-30% can be accumulated at the current market price.
Okay. Whirlpool of India is the name of the counter, bought at levels of 1,200. And Harish wants to know whether to hold, especially considering the promoter's intention to sell. Asta?
as well as the profitability was also not very strong. So idea here is to hold, but try to get out from the stock at the higher level.
Okay, Anil wants to know about Skipper, which he's bought at levels of 463 rupees. He wants to add more, and he wants to decide whether to sell. What would you do, Swati? Time frame is 6 months.
You can hold the position if you're interested to add on at the levels towards to 380 to 360 levels.
Okay, Lalita wants to know about Wockhardt Pharma, border levels of 1,564. The stock is falling. Should you average or exit completely? Asta on the fundamentals?
Not exit completely, but averaging can be done at the lower level of around 1180, 1170.
1100, all right. So wait for downside before you decide to sign the check. All right, that brings us to the end of this rapid fire segment and indeed on this show as well. Ladies, thank you so much for joining me today and for all the answers that you gave our viewers. Pleasure having you on the program. All right, that brings us to the end of Ask Profit. I know that we've not been able to answer all of your questions, but hopefully the stocks that we discussed today will still benefit you. We will be back tomorrow, not tomorrow, actually, day after tomorrow to take more of your questions. And I'll see you then. But in the meanwhile, do stay tuned. Lots more coming up on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30.
Hello and welcome to Markets at 12. I am Puneet Zaveri, and let's take a look at how the markets are doing today, because we have seen, yesterday a lot of pressure on the Nifty Metal as well as the Nifty IT index, and all those stocks getting impacted. Let's quickly pull up the benchmark indices first, the Nifty 50, and then we'll go on to the broader markets as well. Specifically, the Nifty 50 fairly very flat right now, just 7 to 8 odd points. we saw that, it was expected to be a slow start to the day session. Then we had the high with Nifty going to almost 22,625, and then seen some, selling there at that particular point of time. So it's that narrow range of about 100 points from roughly 515 to roughly 625 odd levels on the Nifty specifically that the market has been going. Let's also look at the top contributors of the Nifty 50 as well before we pull up the advanced decline. And there you go, some Bharti Airtel, we're seeing some flashes on the screen as well. It has mentioned a couple of deals. They had yesterday struck a deal with Apple TV specifically to get it for its Wi-Fi users. 22 points on the positive side on the contribution. M&M seeing a very strong recovery as well. We have seen news reports claiming that the Tesla impact might be impacted, and we did a detailed piece on that Tesla coming into India will not be anytime below the 50 lakh mark, and it's unlikely to have any kind of impact. Jefferies, CLSA also mentioning that, and some positives on ICICI Bank as well. Reliance, TCS, L&T, Hindalco just broadly correcting the 10 to 12 points on the negative side as a contribution to the Nifty. Let's quickly look at the advanced decline ratio as well, because that's going to also mention how has it been so fairly even, so as to say 1,000 on the advances, 1,200 on the declines. And let's also look at the sectoral indexes as well. What's been some of the key gainers and the losers as well. So we are seeing consumption, auto being in the green in the majority kind of way. Realty and metal again continuing its downtrend. Yesterday down almost 2%, again today. IT, we can see at the bottom of your screen, 0.6% down as well. Let's quickly look at the mid cap and the small cap indices as well. That was also, roughly down about 0.4% on the mid caps. The small cap indices are also, down by 0.28%. Generally, it's very, very mirrored in line. And finally, the Nifty 500, and this gives us a very good picture of the broader market as well, because that tells us that, there are some moves which we saw in this earnings season well on strong earnings. Tata Investment Corp on that news currently of, that eventual IPO of Tata Capital, and they also have a stake there as well. Narayana Rudralaya being the other one. Chola Housing seeing some positives as well. And 361 WAM, we'll talk about that in this particular show as well. On the negative side, some pressure on Dr. Lal PathLabs, Century Textiles, as well as Atul Auto. But before we move on with the show, after roughly about 2.1 lakh crores investment, which was announced in Madhya Pradesh, the Adani Group will invest additional 50,000 crore rupees in Assam. This announcement was made by founder and chairman of the group, Mr. Gautam Adani, at the Advantage Assam Investors Summit. Listen into a chunk of their conversation.
Honorable Chief Minister, Shri Himanta Biswa Sarma ji, distinguished dignitaries, and my brothers and sisters of Assam. It is a privilege to stand before you at Advantage Assam 2.0. Every time I set foot in this sacred land of Ma Kamakya, I am captivated by its natural and a limitless beauty. Just as the mighty river Brahmaputra reshaped the landscape of this state to carve its own path, I must say that it is our Honorable Prime Minister who has reshaped the landscape of possibilities for Assam. Honorable Prime Minister, like a master weaver, you are the first leader to have blended the 7 sister states into the fabric of our nation. Your act is policy, and the programs to enhance connectivity and infrastructure are not just initiatives. They are monument of hope for the entire region. You have not only integrated Assam and its sister states into India's growth story, but laid the path to make them catalyst for our nation's future, as well as boost trade and investment with the South Asian nations. Honorable Prime Minister, yesterday I stood in Bhopal listening to you at the Madhya Pradesh Global Investor Summit, and again today, as I stand here, I cannot help but reflect that it all began in 2003 with a resurgent Gujarat. Your vision that evolved into the iconic Vibrant Gujarat Global Summit. What started as a spark has now ignited a national movement inspiring every state to adopt the power of investment-driven economic transformations. And in the past 2 decades, these investor summits have far exceeded their original ambitions. They have become catalysts for transformative change, attracting billions of dollars in investment and foundationally driving your vision of a Viksit Bharat. Honorable Chief Minister, every time I meet you, I live inspired. I have known no recent first-time Chief Minister who has ignited such hope and then transformed that hope into action and remarkable progress. Your fight against social evils like drug abuse and child marriage is not just a campaign, it is a mission to shape the heart of Assam. Your vision for infrastructures is equally inspiring. When I see the transformative projects you have championed, from the bold vision of semiconductor manufacturing to the strategic linkages across Brahmaputra River, I see lifelines of progress, bridges to prosperity, and pathways to a brighter future. And it is this vision of progress that we are eager to be part of. Therefore, it is with a great pride that I announce today the Adani Group's commitment to invest rupees 50,000 crores in Assam. Our investments will span across airports, aerocities, city gas distributions, transmissions, cement, and road projects. Honorable Prime Minister and Honorable Chief Ministers, Assam is on a path to greatness, and at the Adani Group, we are honored to walk this path alongside you. This is our commitment, this is our vision, and this is the promise we make today to you, to Assam, and the future we'll build together. Thank you. Jai Hind.
उनके भीतर एक बात को लेकर सर्टेनिटी है, और वो सर्टेनिटी है भारत के तेज ग्रोथ को लेकर। भारत पर इस भरोसे का बहुत ठोस कारण है। आज का भारत आने वाले 25 साल की इस 21वीं शताब्दी के लॉन्ग टर्म विजन को ध्यान में रखते हुए एक के बाद एक कदम उठा रहा है, व्यापक स्तर पर काम कर रहा है। आज दुनिया का भरोसा भारत की युवा आबादी पर है, जो बहुत तेजी से स्किल्ड हो रही है, इनोवेट कर रही है। आज दुनिया का भरोसा भारत के उस नियो मिडिल क्लास पर है, जो गरीबी से निकलकर नई एस्पिरेशन के साथ आगे बढ़ रहा है। आज दुनिया का भरोसा भारत की उस 140 करोड़ जनता पर है जो पॉलिटिकल स्टेबिलिटी और पॉलिसी कंटिन्यूटी को सपोर्ट कर रही हैं। आज दुनिया का भरोसा भारत की उस गवर्नेंस पर है जो लगातार रिफॉर्म कर रही है। आज भारत अपनी लोकल सप्लाई चेन को मजबूत कर रहा है। आज भारत दुनिया के अलग अलग रीजन्स के साथ फ्री ट्रेड एग्रीमेंट्स कर रहा है। ईस्ट एशिया के साथ हमारी कनेक्टिविटी लगातार सशक्त हो रही है और नया बन रहा इंडिया मिडिल ईस्ट यूरोप इकोनॉमिक कॉरिडोर भी अनेक नई संभावनाएं लेकर आ रहा है। साथियों, भारत पर मजबूत होते ग्लोबल ट्रस्ट के बीच आज हम सभी यहां असम में जुटे हैं, मां कामाख्या की धरती पर जुटे हैं। भारत की ग्रोथ में असम का कंट्रीब्यूशन लगातार बढ़ता जा रहा है। 2018 में एडवांटेज असम समिट का पहला एडिशन आयोजित हुआ था। तब असम की इकोनॉमी 3.25 लाख करोड़ रुपए की थी। आज असम करीब 6 लाख करोड़ रुपए की इकोनॉमी वाला राज्य बन गया है। यानी भाजपा सरकार में सिर्फ 6 सालों में असम की इकोनॉमी की वैल्यू डबल हो गई है। ये डबल इंजन की सरकार का डबल इफेक्ट है। असम में हुए ढेर सारे इन्वेस्टमेंट ने, आप सभी ने असम को अनलिमिटेड पॉसिबिलिटीज का राज्य बना दिया है। असम सरकार यहां एजुकेशन, स्किल, अन्य कई प्रकार के डेवलपमेंट और साथ साथ बेहतर इन्वेस्टमेंट एनवायरनमेंट पर फोकस कर रही है। बीते सालों में भाजपा सरकार ने यहां कनेक्टिविटी से जुड़े इंफ्रास्ट्रक्चर पर बहुत काम किया है। मैं आपको एक उदाहरण देता हूं। साल 2014 से पहले ब्रह्मपुत्र नदी पर बस 3 पुल थे, यानी 70 सालों में सिर्फ 3 ब्रिज। लेकिन बीते 10 सालों में हमने 4 नए ब्रिज बनाए हैं। हमने इनमें से एक ब्रिज का नाम भारत रत्न भूपेन हजारिका जी के नाम पर रखा है। असम को 2009 से 2014 के बीच रेल बजट में औसतन 2,100 करोड़ रुपए मिले थे। हमारी सरकार ने असम के रेलवे बजट को 4 गुना से ज्यादा बढ़ाकर 10,000 करोड़ रुपए तक पहुंचा दिया। असम के 60 से ज्यादा रेलवे स्टेशन को भी मॉडर्नाइज किया जा रहा है। आज गुवाहाटी से न्यू जलपाईगुड़ी के बीच नॉर्थ ईस्ट की पहली सेमी हाई स्पीड ट्रेन चल रही है। साथियों, असम की एयर कनेक्टिविटी का तेज गति से विस्तार हो रहा है। 2014 तक यहां सिर्फ 7 रूट्स पर फ्लाइट्स ऑपरेट होती थी। अब करीब करीब 30 रूट्स पर फ्लाइट्स चलने लगी है। इससे लोकल इकोनॉमी को भी बहुत बड़ा बूस्ट मिला है, यहां के युवाओं को रोजगार मिला है। साथियों, ये परिवर्तन सिर्फ इंफ्रास्ट्रक्चर तक सीमित नहीं है। लॉ एंड ऑर्डर में अभूतपूर्व सुधार हुआ है। बीते दशक में अनेक पीस एकॉर्ड्स किए गए हैं। बॉर्डर से जुड़े लॉन्ग पेंडिंग इश्यूज का समाधान किया गया है। आज असम का हर रीजन, हर नागरिक, हर युवा यहां के विकास के लिए दिन रात मेहनत कर रहा है। साथियों, आज भारत में इकोनॉमी के हर सेक्टर में, हर लेवल पर बड़े रिफॉर्म्स हो रहे हैं। हमने ईज ऑफ डूइंग बिजनेस के लिए निरंतर काम किया है। हमने इंडस्ट्री और इनोवेशन कल्चर को बढ़ावा देने का पूरा इकोसिस्टम तैयार किया है। स्टार्टअप के लिए नीतियां हो, मैन्युफैक्चरिंग के लिए पीएलआई स्कीम्स हो, या मैन्युफैक्चरिंग कंपनियां और एमएसएमईज को टैक्स में छूट देना हो, हमने हर एक के लिए बेहतरीन पॉलिसीज बनाई है। सरकार देश के इंफ्रास्ट्रक्चर पर भी बहुत बड़ा इन्वेस्टमेंट कर रही है। इंस्टीट्यूशनल रिफॉर्म, इंडस्ट्री, इंफ्रास्ट्रक्चर और इनोवेशन का यही कॉम्बिनेशन भारत की प्रगति का आधार है। और इसलिए इन्वेस्टर्स भी देश के पोटेंशियल को, उनकी और देश की प्रगति की पॉसिबिलिटीज को बदलता हुआ देख रहे हैं। और इस प्रगति में असम भी डबल इंजन की स्पीड से आगे बढ़ रहा है। असम ने 2030 तक अपनी इकोनॉमी को 150 बिलियन तक पहुंचाने का टारगेट सेट किया है। मुझे विश्वास है असम इस लक्ष्य को जरूर हासिल कर सकता है। मेरे इस विश्वास का कारण असम के सामर्थ्यवान और प्रतिभाशाली असम के लोग हैं, यहां की भाजपा सरकार का कमिटमेंट है। असम आज साउथ ईस्ट एशिया और भारत के बीच का गेटवे बनकर उभर रहा है। इस पोटेंशियल को और आगे बढ़ाने के लिए सरकार ने नॉर्थ ईस्ट ट्रांसफॉर्मेटिव इंडस्ट्रियलाइजेशन स्कीम यानी उन्नति शुरू की है। ये उन्नति स्कीम असम समेत पूरे नॉर्थ ईस्ट में इंडस्ट्री को, इन्वेस्टमेंट को, टूरिज्म को गति देगी। मैं इंडस्ट्री के आप सब साथियों से कहूंगा, इस स्कीम और असम के अनलिमिटेड पोटेंशियल का पूरा लाभ उठाइए। असम की नेचुरल रिसोर्सेज और स्ट्रेटेजिक लोकेशन इस राज्य को इन्वेस्टमेंट का प्रीफर्ड डेस्टिनेशन बनाती है.
Well, that was Prime Minister Narendra Modi speaking at the Assam Investor Summit, and he made some very valuable points, specifically that the economy of Assam has almost doubled from the first Investor Summit. He mentioned the government's initiatives of increasing the rail budget to almost 4 to 5 times from the pre-2014 era as well. So that was some of the key aspects. And Gautam Adani also announcing 50,000 crores of investment. And apart from the continuing investments, the investor summits of Rajasthan, Kerala, Madhya Pradesh, and now Assam being in focus as well. The other stock that's in focus, and specifically if we can come back to the Indian market, is Bajaj Auto. Now, there could be a potential news flow in this by the end of today, which is if it could own the KTM brand. And that's because, the Bajaj Auto International Holding, which is the Netherlands subsidiary, has provided a loan of about 50 million euros, or roughly 456 crores, to Pierre Bajaj AG, which is essentially, their joint venture and company specifically for the KTM brand as well. Now, just want to give us some context as well as to what led to this, because before this, on last Friday, the company announced a 150 million euro investment in its Netherlands subsidiary, that's Bajaj Auto specifically. And this comes as per, KTM's bankruptcy proceedings are expected to come out today itself on 25th Feb. Now, KTM has, currently if you look at the structure, it's going to be very interesting because the Netherlands arm of Bajaj Auto owns roughly 49.9% stake in Pierre Bajaj AG. The rest 50.1 is of course held by the other company, which is Pierre Industry AG. And together, they hold 74.9% stake in the listed entity of Pierre Mobility AG, which is listed in the Swiss exchange. Now, this, of course, houses the KTM business as well. And that business specifically has been under restructuring because of filing for bankruptcy in November of 2024. Now, the other aspect to note is that KTM had mentioned in its filings that financial requirements of KTM AG currently amount to high 3-digit million figures. So it is expected to be dues that they owe to the creditors of more than 100 million euros, and that's going to be one of the key triggers to watch out for. They also mentioned that roughly about reduction in Australian sites is going to cost them €1 billion in 2025 and 2026 as well. So of course, currently Bajaj sells roughly about 60 to 70,000 units per year of the KTM in India, but that's only for the India entity. Outside, it does not manufacture for the KTM brand. That's taken care by the listed entity Pierre Mobility AG. But this could have, it's very interesting because if Bajaj could end up owning the brand because of the equity investments, and that is something to watch out for, there could be two outcomes. One's the good ones where, it could get ownership of a premium brand like KTM, where they could cater to the developed markets. Currently, what it does not do right now, it caters to Africa and Latin America with lower CC bikes. With KTM, they could get that ownership. It could also have, one of the bad outcomes which we are putting it out, which is the inefficient use of cash. Roughly 1,300 crores invested in its Netherlands arm. And, this Pierre Mobility AG has mentioned that they will require a lot of capital going forward as well. So this wouldn't be a one-time investment if they end up actually owning the brand globally as well. So watch out for this stock. We're expecting some news flow from Pierre Mobility AG by the end of today as well. But, the other group is that the Tata Group is now poised to launch its second IPO in about 2 decades with Tata Capital. My colleague Sajid joins in with more on this.
Tata Capital is all set to come to the capital markets for with its maiden IPO. The board of Tata Capital has approved a rights issue of 1,504 crores, followed by an IPO which comprises of 23 crore fresh shares and offer for sale from the eligible shareholders. The entire IPO is expected to come before September 2025, which is a deadline given by the Reserve Bank of India for any upper layer NBFC to list in the stock market. As part of the entire process, Tata Capital is currently undergoing an amalgamation with Tata Motors Finance, as a result of which Tata Motors, which is the auto company, will have nearly 4.7% stake in the combined entity. Tata Investment Corp, which is another Tata Group company, will have around 2.5% stake in the company, and other entities, which includes multilateral financial agencies and employee trusts, will hold around 3% stake. Tata Sun will have little over 88% stake in the company. The total IPO size currently has not been disclosed, but at the time of valuation merger of Tata Capital with Tata Motors Finance, Tata capital was valued at roughly around 98,000 crores on a merged basis, which basically means that the IPO would be around or above $1 billion, which is 8,600 odd crores. The total fresh issue would be roughly around over 5,300 odd crores, followed by the offer for sale, which will be from eligible shareholders, which will include Tata Motors, Tata Investment Corp, and possibly, if required, Tata Sons, which will be part of the entire office there, because Tata Capital will have to at some point in time increase its minimum public shareholding to 25%. The valuation of Tata Capital, as I said, would be over 1 lakh odd crores, and this will be the second company from the Tata stable to come to the capital markets in the last 2 decades, TCS being the earlier one.
Well, thanks for that, Sajid. But with that, it's a wrap on this edition of Markets at 12. Stay tuned to NDTV Profit for more.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you
Welcome to Profit Puzzles. My name is Rucha Sumaya, and we are going to have a quick look at the markets first. Well, definitely, it's a bloodbath across the markets, but better than the session which was yesterday. If you have a quick look at Nifty 50, up slightly in the green, near to the day's high is what we could see over here. Let's move on to talk about Nifty Banking Index. This one has been doing well since the start of the trade, up about, again, similar levels. When we pull up the Nifty Banking Index over here, we'll see that this one is also a slightly volatile in trade right now. Nifty IT is something which has not been doing well since yesterday's trade. Even in F&O, we saw a lot of profit booking over here, down about 0.8%, nearly to the day's low, as we could see see over here. But let's also pull up the advance and decline ratio. Definitely a mixed bag is what we could see over here. As you can see, start was very volatile over here right now, and the gap has been narrow, but obviously it is more in favor of declines than advances, and we'll see whether this is actually the bottoming out or there's still more room for downside or not. Let's pull up the sectoral heat map over here. Definitely a lot of sectoral moves is what we could say. FMCG is doing well in trade. Actually, auto is the one which is doing even better. It's also followed by Nifty Media, Finance. But what is not doing well is, of course, the Nifty Metals and Nifty Oil and Gas as well. But Jubilant Food, actually, there's a clarification which is there right up on your screen right now. As the company has received statement from Chairman Mr. Shyam Bhartia in his personal capacity. And this is actually just in the market, and he says that Chairman Bhatia would fully cooperate with the investigation over here, and he also has denied all allegations, and he calls it that these are baseless, false, and this is an alert which was very much required after this news, or I would say rumors which were falling in the market. But if we could pull up the stock, we'll see the stock is up about 0.7%, but since this is just in, we will wait for the stock to react in trade right now. But again, let's move on to talking about the markets. I would like to highlight the Nifty IT index as well. It's only Infosys and HCL Technologies which are slightly in the green, but most of the stocks are in the red. Yeah, there you go. Even actually Infosys is now largely trading flat, but most of the losing names are actually LTTS, Persistent, Emphasis, most of the mid-cap names. And I had also mentioned that these mid-cap companies are very volatile in nature. They fall the most during a downfall, they rise the most during a preferable or favorable market. So definitely mid-caps, and of course the valuations, a whole picture which is going around is actually questioning such kind of valuations which people are giving to these mid-cap companies. But also lastly, let's talk about the banking index as well, the constituents over here. There's only HDFC, ICICI and IndusInd which are largely up in the green, but not very much up that I can, really call out for. You can largely say, okay, this is the decent enough move in such a market, but the ones which are falling very badly is Canara Bank, Federal Bank, down about 1.5%, BOB. Nifty banking is really very volatile, and there's no prediction of what would happen over here. But to talk to us more and give his insights to us, we have Mr. Avinash Shakkar, the Director of Research, Profit Securities, joining us. Well, it's a pleasure speaking with you always, Avinash. What's your outlook on the market? So many questions in investors' head, even mine. Any levels or any kind of returns that you expect from the markets in the medium term?
Yeah, I think good afternoon. See, I think clearly markets are looking at some sort of stability. I think as the market is heading towards expiry, I think we could see a lot of volatility in the coming few days. But I think the biggest factor which is actually upsetting the markets is the continuously sell-off from the FIs. And I think that is putting a lot of pressure on the currency. And I think the currency is the key factor which is now under close watch. So I think even if you look at the dollar index, unless the dollar index comes up to levels of, say, 98 to 100, we are unlikely to see any immediate bounce. In fact, any bounces which are going to come in are going to be used for basically large FIs to actually exit their positions. So I think, we need to wait for some time. March is also going to be a month where all of us would appreciate that it's a month where, a lot of market participants do a lot of tax adjustments. So I think clearly, the market mood is such where I think clearly if at all anybody wants to buy any sector or any stock, I think he needs to give in a slightly longer time frame. We have been telling our investors that, companies from the auto space, company from the capital goods space, typically companies which are from the hospitality and the hotel kind of segment are definitely looking attractive. But I think you need to give in a time frame of at least 12 to 15 months. And we expect that, from the April to June quarter, whatever the government has announced in the budget, specifically on the tax exemption side, the RBI cut which has come in, I think all that will get reflected in better numbers, from the corporate sector. In fact, most of the banks which you mentioned in your commentary are down because people are expecting that possibly, January to March quarter also could be a little challenging quarter for the PSU banks. Although today there was some news flow from the government side that they are looking at appointing merchant bankers for some of the smaller PSU banks. I think my sense is, these banks definitely have very good balance sheets, good asset quality levels, but I think the trigger for growth is yet missing. And I think that could possibly be visible only from the April to June quarter. So I think we need to be a little patient. I think some more pain is left in the market. And only after that, I think you could see a good bounce in the banking as well as the broader market. So I think, till then, I think it's going to be a volatile market and we'll have to take all this in our stride.
Okay, for sure. As you rightly mentioned, even March month is kind of a profit booking because a lot of investors actually do tax loss harvesting is I think what is going on, and we are already seeing the effect in February as FIIs are selling out. But let's shift focus to stock-specific action. We have Coal India, which is in focus as JP Morgan maintains a neutral rating on the stock. Mika joins us with more details.
So they maintained the neutral rating but cut the target to 395 rupees, which implies only an 8% upside. Now the brokerage still sees multiple headwinds to the company's earnings growth and valuations are still not at bottom levels. JP Morgan has also mentioned 5 reasons why one should not buy the dip in Coal India. First, there's no immediate catalyst to trigger a reversal in the coal prices seen. The risk from slowing imports from China and growing supply from Indonesia will weigh on coal prices. Second, India's coal inventory is above mean levels despite the low production growth. Third, Coal India has lost a significant amount of market share to captives from 78% to 75% currently. The fourth one is India's power demand has a strong correlation to Coal India's volumes, and the double-digit power demand growth is key to the volume uptick, which has not been seen yet. And lastly, while the risk-reward does appear balanced at current valuations, a further downside is possible. The only 2 times that JP Morgan could turn positive in Coal India is one, if the company's share price declines below 340 rupee levels, and second, if India's power demand improves significantly in the coming months.
Avinash, this is what we had, what JP Morgan believes, but we would like to know your thoughts on Coal India. Well, definitely a neutral rating is a little bit, cutting in target price, but still reasons to hold on to the stock, etc. But what are your thoughts on this one?
No, I think, Coal India is a company where I think, it's going to be basically a kind of a beneficiary of the power generation kind of demand scenario in India. And I think, the condition here looks quite conducive. Our call is very structural. We believe that, if you have a slightly longer time frame, then I think coal prices are unlikely to crack. In fact, they could see a little marginal increase. And most importantly, after the January to March quarter, typically Coal India is known for giving hefty, dividends. So it could be a good dividend play also. Our sense is that 350 to 360 is a good accumulation zone, provided, the investor can wait for 12 to 15 months. Our sense is that as the economic picks up, power generation is one of those areas where possibly you could see a good uptick. On the supply side, there's a big crunch, but on the demand side, power generation companies are doing pretty well. So I think they should definitely do well in FY26 also. So I think, if somebody has a reasonable steady expectation, target price of around 380, 385 is very much possible. But I think the dividend yield factor will also play out once the March numbers are out.
Okay, thank you so much for that. But let's also shift focus to the Tata Group, which is poised to launch its second IPO in 2 decades with Tata Capital. Sajid, who has tracked this closely, joins us with more details.
Tata Capital is all set to come to the capital markets for with its maiden IPO. The board of Tata Capital has approved a rights issue of 1504 crores, followed by an IPO which comprises of 23 crore fresh shares and offer for sale from the eligible shareholders. The entire IPO is expected to come before September 2025, which is a deadline given by the Reserve Bank of India for any upper layer NBFC to list in the stock market. As part of the entire process, Tata Capital is currently undergoing an amalgamation with Tata Motors Finance, as a result of which Tata Motors, which is the auto company, will have nearly 4.7% stake in the combined entity. Tata Investment Corp, which is another Tata Group company, will have around 2.5% stake in the company, and other entities, which includes multilateral financial agencies and employee trusts, will hold around 3% stake. Tata Sun will have little over 88% stake in the company. The total IPO size currently has not been disclosed, but at the time of valuation merger of Tata Capital with Tata Motors Finance, Tata Capital was valued at roughly around 98,000 crores on a merged basis, which basically means that the IPO would be around or above $1 billion, which is 8,600 odd crores. The total fresh issue would be roughly around over 5,300 odd crores, followed by the offer for sale, which will be from eligible shareholders, which will include Tata Motors, Tata Investment Corp, and possibly, if required, Tata Sons, which will be part of the entire office there, because Tata Capital will have to at some point in time increase its minimum public shareholding to 25%. The valuation of Tata Capital, as I said, would be over 1 lakh odd crores, and this will be the second company from the Tata stable to come to the capital markets in the last 2 decades, TCS being the earlier one.
Okay, a very detailed analysis over there. But Avinash, of course, straightforward question. Do you think that the valuations are justified and one should subscribe to this or not?
No, I think my sense is that, valuations would need to be made little more attractive because, if you see the experience of Tata Technologies, which was the previous IPO, the company made, I think after a lot of excitement, the stock, after the initial listing gain, has proved to be not a very big kind of wealth creator, at least in the near term. Of course, Tata Capital is a very big setup. I think they have a very large net worth, a very good geographical network. So I think markets were expecting this announcement from the management from the time, this was planned by the company. I think clearly, in the short term, beneficiaries could be companies like Tata Motors, which could unlock a lot of value because whatever OFS happens, that money is obviously going to add to the cash flow of these companies. My sense is that unless we get little more clarity on the valuations, which is very important in this kind of market, we would like to know, as to when this issue is going to be timed. Probably the market sentiment will have to be better because such a large IPO will require that the market sentiment is also equally positive. I wouldn't be surprised that they would be looking at how the market conditions also improve and then position the IPO. But valuations, I think, will have to be priced quite attractively because despite giving a premium, I think a 1 lakh crore valuation, definitely markets would like to give in a proper check before they invest their money here. So I think institutions will obviously put their money, but retail interest, I think, will come only if the valuation is priced attractively.
Of course, right valuations is what everybody is looking for right now, and that is what the confusion is on the street, to be very honest. But also, the other stocks which is buzzing in trade is Thangamayil Jewellers, where Equirus has come out with a note, and it says that the company is a bold bet and will drive higher revenue density as well. Mahima, who tracks this sector closely, joins us with more details.
So the stock move seen in Thangamayil Jewelry is because Equirus has come out with a note. What they're saying is it's a bigger, brighter and bolder bet. They're saying that the Tinagar flagship store is finally open during the weekend. The Tinagar store definitely is worth the hype. The store is set to drive significantly higher revenue density as well. The Thangamayil's digital gold scheme is also a strategic digital gold savings. The tariff wars, rallying gold prices as well as the straining. Both these parts, that is the tariff wars, the rallying gold prices are straining the overall GML rates, and they believe that the company is well positioned to deliver robust growth. The revenue, EBITDA and PAT CAGR that they're expecting is 24%, 39% and 58% respectively over FY25 to 27 estimates. And in terms of the company, it remains the top pick for Equirus in terms of the retail sector, and they're also offering an attractive entry point in the current market environment. So these are the reasons as to why Equirus is bullish on Thangamayil Jewellers.
Well, definitely a very bullish kind of call from Equirus over here. 20% is the stock is where which is moving right now, upper circuit. Avinash, Thangamayil, this has been a very volatile stock. It had actually reached this kind of 2000 kind of levels, but again fallen down to 1800. What are your thoughts on Thangamayil specifically and your other top picks in this space?
So I think this company definitely has performed well, and I think they have a very strong local kind of consumer base, and more importantly, they've managed to scale up their operations in a much better way. I think clearly, with the commissioning of the new store, that would obviously add to their volumes. But I think the biggest caveat and the biggest threat to them is the increasing, trend in gold prices. So I think we have seen other comparable companies like Titan, Senco Gold, where numbers, for the December quarter have not been very encouraging. So I think we'll have to closely watch gold prices, because if gold prices go beyond a particular level, then I think it's not going to be easy for the companies to pass through these, higher gold prices to the customers. So I think clearly this is going to be a major kind of concern. But otherwise, I think in terms of their positioning, in terms of their earnings growth, I would not be surprised that they record 18 to 20% growth for even FY26. And as far as the gold opportunity is concerned, I think, we are more positive on the gold finance companies, which basically lend, capital against gold deposits. And here, I think both Muthoot Finance and Manappuram definitely look poised very well. In fact, most of the demand is coming from rural areas. And most importantly, there is hardly any concern on the asset quality side. Plus, the loan to ratio, the MTM is definitely well covered as far as gold prices go up. So, Muthoot Finance and Manappuram, if one were to take a call, I would say that a small position here could definitely yield very good return because we feel gold prices are poised to further increase in the next 6 to 12 months.
So, do you think this is the right time to enter Thangamile? Very briefly.
I wouldn't be a buyer at these levels. I would prefer to wait for a mild correction. See, because whenever a stock goes up by 18-20%, that is a level where possibly, normally always retail gets trapped. So I would say that it's better to wait for the markets to stabilize, let the stock correct and decline. And I think these opportunities could come in, and on a day when the stock has gone up by 20%, we are in no hurry, especially in this kind of market.
That's largely the FOMO feeling if one gets into a upper circuit stock. Very true. But let's also focus on Trent. This one is buzzing because Goldman Sachs is positive actually. But interestingly, this one is down about 1.5% in trade. Mahima joins in with more details. Mahima, what are you picking up?
So basically, Goldman Sachs has maintained a buy with a target price of 8120 on Trent, and they met Neeraj Basu, the CFO of the company, and the key takeaways include that faster than expected store sales ramp up and healthy cannibalization of two main reasons for moderation of like-for-like growth. In terms of this, they expect the strategy to the healthy cannibalization to eventually lead to higher wallet share, and main reason for like moderation was not competition, is what the Trent management has said. They're also saying that impact of store portfolio optimization agenda is likely to be lower in FY26. In terms of the strong retail area addition over the last year to aid sales growth going forward, sustainable margins of the business could be higher once the higher store expansion phase is behind. Good initial experience with the lab-grown diamond category launch is something that the management has indicated.
Avinash, Trent is something which has mixed opinion on the street. It had given a very good rally, but actually fallen down. A lot of investors were also curious to know whether that was the right time to enter or not. And 8,000 as a target price around that level seems to be very interesting. What are your thoughts?
No, I think my sense is that Trent is a very matured retail player, and I think the introduction of Zudio has given them a very strong mass appeal. However, competition is hotting up, and I think this segment will see a lot of competition from new players, especially players like Reliance who have teamed up with Shein. So that definitely is going to create a lot of excitement in this segment, but at the same time, margins in this segment will be under pressure. Now, coming to the opportunity for retail over the next couple of years, I would believe that consumption is a theme which is going to be very strong. We would see some benefits coming in, from the budget, taxation benefits, plus rate cuts have been announced. So I think somewhere from the quarter one of FY26 onwards, we could see a little kind of bouncing back of consumption coming back in specifically the retail segment. Trent has always focused on quality, innovation, and I think despite the fact that the stock has corrected, I would say that somebody wants to build a portfolio. Even the current levels today, where the stock is currently down by about 2%, it could be a good opportunity to start a small nibbling in this counter, provided you have at least 12 to 15 months a time frame. Because it's very difficult to give you a target price as to whether it would go to 7,000 or 8,000. But yes, I think in terms of their positioning and in terms of their retail reach, I think the Tatas have done a very good kind of job. Most importantly, it's a trusted brand and now has actually started offering value for money products. Of course, the entry into the lab-grown diamond segment is another big opportunity. And if they click it properly, that could be another growth engine for the company. So I think, one should take a longer term call here. In the short term, it's very difficult to visualize how the stock will correct or how the stock will be volatile, because numbers actually for the third quarter were below market expectations.
Okay, let's also shift focus to another name from the FMCG space, which is Zomato. Bernstein has maintained an outperform rating with a target price of 310 rupees. The stock is actually up about 2% in trade, and it actually has fallen a little from the day's high, but still in the green in such a volatile market. Mahima joins us with more details.
So Bernstein has maintained outperform for Zomato with a target price of 310. What they're saying is that unlike pre-IPO mode, they believe that focus today is more balanced for Zomato, growing quickly while delivering medium-term profitability. Quick commerce is where the growth is actually coming from. They believe that there is rational limit to price competition given Swiggy's lower margin structure, and also of course the loss-making part of things. In terms of Zomato, they expect to continue to build on quick commerce leadership as well. So these are the reasons as to why Bernstein is bullish on Zomato.
Well, Avinash, Zomato is another name, just like Trent, wherein a lot of confusion among the investors' mind as to what to do with this stock, because after reaching a 300 kind of levels, it has fallen down to about 220 after the bad results. Do you think this is a good time to enter, number one? Also, what do you think on the quick commerce space? Will competition be hit or Zomato, or the fundamentals are still strong to reach a 320 kind of target price?
See, I think in case of Zomato, I think you need to take at least a couple of years of a time frame to actually get the best risk reward. In the near term, the stock appears to be fair to fully valued, because I think clearly Q3 numbers were not up to expectations. But I think within the food app space, the dominant players continue to be Zomato and Swiggy. And as far as competition is concerned in the QSR space, I would say that despite the competition, the runway for growth over the next couple of years is going to be quite significant. This is definitely a growing segment where I think there's a space for all players to survive. But Zomato definitely would be the best positioned player, because they've got a strong profit focus, cost focus, and I think in terms of the reach, I think they are present not only in the Tier 1 but even Tier 2, Tier 3 cities. And gradually, the new India food, eating habits are changing. So this is unlikely to change. So I think somebody who's got a 18 to 24 month view can definitely think of accumulating the stock. The stock can definitely touch 300 plus level, but I think you need to give in some time. It's not a stock where one could expect some fireworks in the short term, but yes, over the next couple of years, this could definitely make a lot of money for investors.
Thank you so much for that, Avinash. But let's move our focus again, where some companies, actually several companies, have come up with their investments plan. Varsha, what are you picking up?
Good morning, good afternoon. So let me start with Veranda Learning, wherein they've acquired 40% of BB Publication. Now BB Publication will be an associate company of Veranda. The deal includes 55 crore of cash and share swap. Next on the list is Nazara Technologies, wherein they've acquired 38.5% in Funky Monkeys. The acquisition cost stands at around 29 odd crore. Now Nazara owns 60% stake in this company, and Funky Monkeys becomes a subsidiary company of Nazara. Next on the list is AkzoNobel, wherein AkzoNobel Global is set to acquire Indian Unit's Power Coatings business and International Research Center. Acquisition cost is around 2,000 crore and 70 crore respectively, which implies an EV sales of almost 4.9x. Indian Unit will acquire the IP associated with the decorative paints business in India, Bangladesh, Bhutan and Nepal, while the acquisition cost for the Indian Unit stands at around 1,152 crore. The deal is expected to close in March 2025 and company needs approval from minority shareholders. What it does, the deal will simplify the options around the strategic review of Indian Unit, and this should help to more clearly define the Indian assets and their valuation. Last on the list is Apollo Pipes, wherein company had made further investments by acquiring an additional stake of 0.5% through a secondary purchase in Kisan Moldings Limited, which is a subsidiary of company. Now the company has increased its equity holding from 55.5% to 56% respectively.
Okay, interesting outlook there. But Avinash, what are your thoughts on these names? I mean, a very interesting kind of summary is what Varsha has given us. But any thoughts on companies like Nazara Technologies, if you have?
No, I think, Nazara Technologies has always believed that the better way to grow is through inorganic acquisition. So I think this acquisition also will give them a kind of a better customer reach and a much more geographical positioning. I think we need to understand what is the kind of incremental revenue and the profitability which comes from this acquisition. I think some more clarity would be needed there. But AkzoNobel acquisition is quite interesting. I think for 2,000 crores, the powder coating unit and the research center which is going to be taken over, that would add a lot of cash to the existing Indian entity. So I think AkzoNobel could be interesting to watch. Plus, considering the fact that they have a well-placed business model in terms of the presence in the domestic paint market, I would look at AkzoNobel in a more positive kind of constructive manner. So I think these news flows in these kind of markets, unfortunately, I have a very marginal impact or maybe virtually no impact. But I think longer term, definitely, I think these kind of decisions are going to benefit these companies in the longer term. So I think AkzoNobel could be definitely be considered if one looks at it from a longer term point of view.
Okay, thank you so much for that, Avinash. But do stay with us while we slip into a short break. Lots more interesting insights on the other side. Do stay tuned.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company.
Hello and welcome to NDTV Profit. You're watching Top Trades and I'm your host Mahika Barbe. Up first, let's just take a quick look at how markets are faring right now. Well, you do have the benchmarks showing some amount of strength. It's trading in the green, up about 0.1%. When you look at the advance decline ratio of the total market, well, it's 1,010 advances on the NSE versus 1,290 declines. So the tilt is to the bearish side, but on the benchmark, something that's gaining strength and holding the positive momentum is an M&M up about 3% in trade, followed by a Bharti Airtel up about 2%. You have even some strength in some Adani counters and Adani Enterprise, as well as an Adani Port seeing gains of over 1.5%. Something that's not doing so well is Hindalco Industries. The Nifty Metal is also the top losing sector index today, followed by a DRL as well as a Trent, both seeing cuts of 1 to 2%. The broader markets, on the other hand, are underperforming. You have the Nifty Mid-Cap 150 seeing cuts of about 0.4%, and the Small Cap 250 seeing down about 0.2%. If I just want to pull up the Nifty Mid-Cap 150, you have 95 stocks in the red versus 54 in the green. Something that's dragging this broader index down is a Petronet LNG and a Gujarat Gas. But while the Nifty 50 has some positivity in today's movements, let's talk about markets in 2025 so far. Well, the benchmark as of yesterday was down 5% in 2025. The Nifty hit an 8-month low yesterday, and the benchmark has closed in the red 25 out of 40 trading sessions that we've seen so far in 2025. And it's en route to post its longest losing streak in nearly 2 years. And the stock that have dragged the benchmark the most in terms of points is an ITC, an HDFC, as well as a Trent. Now, persistent weakness is one aggressive FII sell-off, which have offloaded stocks worth more than 2 lakh crore rupees in market cap since October of 2024. There's also the slowdown in concerns around slowdown in terms of US growth and uncertainty surrounding tariffs, as well as a depreciating rupee, which is down 3.4% since the market's peak. Broader markets have continued to underperform. Nifty Mid-Cap 150 is down 12.5% year to date. The Small Cap 250 is down 18.3% year to date. And the mid-caps that have lost the most value is a Jai Balaji, or Oracle Fin, and a Kalyan Jewelers. The small caps that have lost the most value is a Nava, Brainbee Solutions, and a Zentech. Lastly, in terms of your market cap loss, total market has lost 44.29 lakh crores in market cap. The large cap market loss stands at 19.1 lakh crores. Mid cap stand at 10.59 lakh crores, and the small cap stand at 8.2 lakh crores. But on that note, let's welcome our guest for today, and that's Mahesh M. Ojha, the AVP Research and Business Development at Hensex Securities. Mahesh, I'll start off your sense of the markets. We've seen the Nifty 50 kind of trading with some positive bias, but so far, it's down about 5% year to date. What's your view? How long could we see this weakness persist? And amidst this weakness, do you see any pockets standing out?
Good afternoon, Mahima. So if you look on small cap, particularly small cap index, so that is the nearby 14,500, what we have earlier predicted that this level could become. And apart from large cap, if you look on a small cap, then slightly selective buying opportunity are visible in a small cap and mid cap. So I think it's a selective buying we can see on where a value exits, where fundamentals are strong. We can see selective buying. If you see today also many stocks are selectively up. If you see Narayana Hardhyalaya, Thangamal Jewelry, and selective stocks are up in this type of market also. So I think it's a selective buying opportunity in market also. So a Century Inca is also up. So there is a selective buying in market, but market breadth is it weak. We can't deny from that, but market breadth is weak, and we can expect slowly after March or maybe April onwards, slightly upside momentum or a stabilization like a market in the scenario. So we are optimistic and we are selectively buying on the stocks.
Got it. Let's shift our focus to the Tata Group, which is poised to launch its second IPO in 2 decades with Tata Capital. And we have Sijit joining us with the key details.
Tata Capital is all set to come to the capital markets for with its maiden IPO. The board of Tata Capital has approved a rights issue of 1504 crores, followed by an IPO which comprises of 23 crore fresh shares and offer for sale from the eligible shareholders. The entire IPO is expected to come before September 2025, which is a deadline given by the Reserve Bank of India for any upper layer NBFC to list in the stock market. As part of the entire process, Tata Capital is currently undergoing an amalgamation with Tata Motors Finance, as a result of which Tata Motors, which is the auto company, will have really 4.7% stake in the combined entity. Tata Investment Corp, which is another Tata Group company, will have around 2.5% stake in the company, and other entities, which includes multilateral financial agencies and employee trusts, will hold around 3% stake. Tata Sun will have little over 88% stake in the company. The total IPO size currently has not been disclosed, but at the time of valuation merger of Tata Capital with Tata Motors Finance, Tata Capital was valued at roughly around 98,000 crores on a merged basis, which basically means that the IPO would be around or above $1 billion, which is 8,600 odd crores. The total fresh issue would be roughly around over 5,300 odd crores, followed by the offer for sale, which will be from eligible shareholders, which will include Tata Motors, Tata Investment Corp, and possibly, if required, Tata Sons, which will be part of the entire office there, because Tata Capital will have to at some point in time increase its minimum public shareholding to 25%. The valuation of Tata Capital, as I said, would be over 1 lakh odd crores, and this will be the second company from the Tata stable to come to the capital markets in the last 2 decades, TCS being the earlier one.
Thank you, Sajid, for giving us those key details. Mahesh, I'll come to you. Tata Investment Corporation is buzzing in trade on the back of this. It's up over 6%. Do you have any views surrounding the capital or maybe surrounding this IPO, and if maybe not the company, but how its peers in the markets would fare? What would be its peers if it were to list?
I think it's a positive for Tata Group. If you see Tata Motors also having the stake in the same, so Tata Investment Corporation and Tata Motors would get beneficial from this issue, and I think it's a positive for whole group. So new entity will come and emerging, and Tata Capital really doing well from last decades. So I think it's a good issue, and we are waiting for the whole details from the Tata Capital. But overall, it's a positive news for Tata Group, and particularly for Tata Investment and Tata Motors.
The next stock we want to focus on is a Welspun Specialty, which is zoomed in trade, and this is on the back of a fundraise via, Via's rights issue. It's come off its highs, it's seen volatile movement, but we have Puneet joining us to tell us what's been announced.
Well, thanks for that. So, there are a couple of things to note about this fundraise, and some things that, just kind of take off on the benchmarks and, essentially on this particular stock as well. They will issue roughly about 13.25 crore equity shares to raise roughly about 349 odd crores via rights issue, as you rightly said. The company has set the right issue price at roughly 26 rupees per share, which is roughly a 52% discount to the current market level. And that's one of the first things that's, something that's a different, while rights issue being at a discount is not a new thing. I think the discount in current market conditions of more than 50% is something that that was key to note. The other aspect is that the rights issue opening date is 10th of March, closes on the 19th of March as well, and eligible shareholders will be able to apply for this particular rights issue in the entitlement ratio of 1 share for every 4 shares held. Essentially, the company already announced this on January 27th of 2025, and now the details have come forward as well. But the key aspect, and one of the most things to note here, is that they mentioned that the funds will be utilized for debottlenecking and certain capability upgradation is planned, but it won't be used for any kind of new capacity addition. While the fundraise amount of roughly 350 crores is quite sizable based on the company's market cap of 2,000 crores, they did only about 544 crores in terms of revenue in the first 9 months. So that is something that is noteworthy, and hence I think we've seen that kind of correction. Apart from that, they will also be using the funds for working capital as well as general corporate purposes and paying down debt. But I think just the numbers altogether are something to watch out for, and we'll see how the stock react, because the company has, even in its conference call, did not quantify what will be the amount of the debottlenecking, essentially, which will be the largest pie of the fundraise and the rights issue. So some things to note in this particular update. Stock currently not reacting too much, as you rightly said, it's a smaller player, but something to definitely watch out for.
Thank you for that. Mahesh, I'll come to you. Any view on our Welspun Specialty Solutions? I mean, the stock has zoomed almost 19% in the last 5 days. And, 350 crore fundraise via the rights issue is a substantial amount.
I think it's a good amount for Welspun Specialty, and I think it's a longer-term positive impact could become on stocks. But currently, if you see the right issue is coming on 26.5, that is the more discountable price. So in shorter term, we may see stocks maybe 35, 30, 34 range could become. But in a longer term, if you see, it's a positive impact could come on Welspun Specialty.
Got it. The next counter I want to, or the next space rather I want to talk about is the Nifty Metal and the aluminium stocks in particular, which are in focus today. Now, the Nifty Metal is your top sectoral loser, but the aluminium stocks, especially Analco, Vedanta and Hindalco Industries, are all seeing, cuts of over 3 to 4%. And even if you see in the last 2 trading sessions, just this week itself, which is yesterday and today, Nalco is down 8.5%, Vedanta is down 6%, Hindalco Industries is down 5%. Now, one of the key triggers, the fall in prices, the LME aluminium future prices were down 1.75% on an intraday basis today, 2% yesterday as well. And mainly the fall has been, as per Kotak Securities, has been attributed because of the cautious sentiment on the weak US data that did come over the weekend, as well as the risk of any US-China trade relations worsening from current parameters. Analysts also say that there's this optimism of aluminum prices sustaining about a $2,600 per ton mark, which it is at currently now, but this could be at risk. They're also noting that the 10% in decline in Chinese export shipments year to date in 2025 is negative for prices, and the risk for higher China exports because of low domestic demand in the country itself can put pressure on global prices and thereby affect Indian companies as well. And we also have a brokerage trigger. You have Avendus Spark, as per Bloomberg, has downgraded Hindalco Industries to a sell rating to 575 rupee target, which is a 10% downside, and it's also maintained its sell on Nalco at 175 rupees, which implies a 5% downside to the previous close. Mahesh, I'll come to you. These aluminium stocks in focus, especially something like a Nalco, had a good set of Q3 results. They've guided for positive commentary for Q4 at least. What is your outlook? Could the optimism around your spot prices sustaining and thereby benefiting the companies remain?
See, I think if you see the last 1 month price, then we have seen some upside momentum, Nalco, Hindalco, Vedanta, and then from last 2 days, we are seeing some lower consolidation and profit booking in both stocks. But in Hindalco, we are optimistic for more upside. I think Hindalco could touch 740, 760 range in near term. Many triggers are working there, and brokerage have many type of their reports. I think Hindalco have much more potential for upside, and Nalco have also posted good numbers. Basically, if you see China and US relation are concerned, so market is closing their watchly. But I think they can resolve it. It can be resolved very soon, because all the countries are desperate from the tariff and all these things. So I think it could be could impact slightly lower consolidation, but overall it could be both stock could be positive, and I think both have a much more upside potential, Hindalco and Nalco. Especially if you think Nalco have more potential up to 250, 240 range, and Hindalco 760 range. So I think we have a positive bias on Nalco and Hindalco, but in the shorter term we can see some consolidation. It can't be denied.
Mahesh, I also want to get your quick view on the steel counters. Last week they had a very good run because they were expecting, the safeguard duties. The industry as a whole was expecting it the first 2 weeks of February. It's not come now, and you've seen the stocks, down 2 to 5% in just the last 2 trading sessions, including today. Your view on this space, is there potential for growth even if these duties do not come in?
particularly if you see if we are industry facing some issue due to anything, then government would come forward. But still they are looking the situation, and I think if required they would come for duty also. So it will take a time, but I think on metal particular we are our stance is positive. So I think there is a upside potential, but in a lower term, China and US relation are dragging, and any price reduction can impact the stocks in shorter term. But overall, a positive impact could become, but lower consolidation in this sector can't be denied. Particularly if you see JSW Steel has a much more potential for upside. I think 1,150 level could become in 1 year horizon. So the sector is a point for growth. And if you see particular our domestic capex would also going to increase. So I think metal industry has a much more potential. But shorter term impact can't be denied, and lower consolidation could become anytime due to any news. So, but over a longer term period, we are optimistic for upside.
So longer term bullishness, while there is some weakness in the short term. But we'll shift our focus to the mining space, and one of the stocks that are on the brokerage radar today is Coal India. And we've Rucha joining us to tell us on what JP Morgan had to say about Coal India, and what GS, which is Goldman Sachs, had to say about Trent respectively.
JP Morgan has come up with a note on Coal India, wherein it has maintained a neutral rating on the stock but cut its target price to 395 rupees from a previous one of 430 rupees. Now, the 5 reasons that you shouldn't buy this dip is: number 1, the brokerage house doesn't see any immediate catalyst to trigger a reversal in coal prices. Number 2 is that the coal inventory in India is above the mean levels, is what the brokerage house believes. Coal India has also lost market share to its captives, and India's power demand as a whole actually has a strong correlation with coal's volumes. Therefore, the risk reward appears to be balanced at current valuations, is what JP Morgan believes. But further downside is also possible, because of which they have cut the target price. Goldman Sachs has come out with a note on Trent, wherein it has maintained a buy rating on the stock with a target price of 8,120 rupees. The brokerage house met the CFO of the company, and here are its key takeaways. Number 1, believes that a faster than expected store sales ramp up and healthy cannibalization could be the 2 major reasons for a moderation in the growth, and they also expect this strategy of healthy cannibalization to eventually lead to higher wallet share for Trent. Now, the main reason for the moderation in growth was not actually competition, but the impact of store portfolio, and this optimization agenda is likely to be lower in FY26. In addition to all of this, a strong retail area addition over last year is expected to aid the sales growth going forward. In terms of margin, well, sustainable margin of the business could be higher once high store expansion phase is behind the company. Therefore, good initial experience with the lab-grown diamond category launch would also aid the Trent to reach the target price that Goldman Sachs has given, which is about 8,120 rupees.
Mahesh, 2 companies in focus. I'll take Coal India up first. A very negative view coming from JP Morgan. 5 reasons why you shouldn't buy the dip. Even if you see their quarterly, revenues in the past 2-3 quarters, they've been fairly flat, but net profit has seen an uptick. Do you mirror a negative view on Coal India as well?
No, we are not having a negative view, but slightly agreed with the reports, because some points we are also watching that is not at par. So I think target lower could be earlier. Our targets have 460 to 475. Now we are seeing 415 to 425 range could become for Coal India. But yes, slightly concern are there. So we are also having some concern for the Coal India. But longer term, I think some upside potential is there also. But the target lower could be here also. For Trent, I think Trent we are very good point for diamond and other things we are seeing. So I think Trend we have also optimism for at least 6,500 target in a 1 year horizon. And things are going, they are improving. Things are slowly, but there things are going on in the line. So Trend, I am optimistic for 6,500 plus level in 1 year horizon, and after that onwards we can see review quarter on quarter results. So for Trend, we are optimistic for upside.
follow-up on Trent. I mean, it was a multi-bagger last year. This year, it's down about 30% year to date. Do you have a long-term positive for you? But at this level, do you think valuations are right for someone who wants to, enter and, get some benefit of their growth trajectory right now?
So I think if you see the expansion of company and their planning, so I think it's a opportunity for a new investor also. So if anyone want to add here, then they can add in a staggered manner. A small downside can't be denied as a market, whole markets seeing selling pressure. But I think it's a reasonable valuation is on the table, but high PV, so growth also would be high in upcoming time. So I think it's a very near range for a bottom. So it's a 1 year horizon. If you are taking 1 year horizon, then definitely can buy here.
That's Trend looking attractive from a 1 year horizon. But we do have an important update that's coming from market regulator SEBI, who has now proposed to change the calculation methodology of open interest in the derivative space. Now, what this is and how will this impact the market? Well, Sajid joins us explaining it in detail.
That's right. What the consultation paper of market regulator tries to do is to reevaluate the way the open interest has been calculated, and as a result of which, how stocks are entering into ban period. Currently, there is a methodology wherein if your total open interest exceeds 95% of the market-wide position limit, the stock enters into ban period in the FNO, which basically means that you will not be able to take fresh positions and you have to square off your positions. As a result of which, many of the small and retail investors who may be participating get stuck because of that. But now what the regulator is trying to do is, and he's been trying to explain that to this market for a couple of quarters now, that they're going to go into the delta based strategy, which basically looking at sensitivity of the contracts at that point in time, wherein which calculates the kind of open interest based on delta, and which basically marginalizes all the out of the money open interest, and so the open interest which is calculated is for that point of time and that period of the contract, and not which has out of the money, which is second month or third month contracts where the open interest has been created for hedging purposes. As a result of which, the open interest requirement will change, and the classification will change, and then our fewer stocks will go into ban as a result of that. But the market regulator is also moving away from the market-wide position limit calculation, which is based on free float of a company, to average delivery of the stock in the cash market, which is basically now linking it to how liquid the stock is in the cash market with respect with respect to the liquidity which is there, and based on that the open interest would be calculated as well, and that's something which is going to be interesting. It's a consultation paper which SEBI has floated, and it will take a couple of months before it can be approved, and the new transition can come in. It will take a couple of months or quarters there, because there needs a lot of change with respect to softwares for all the brokers and the vendors, and that would be a long run process.
Thank you, Sajid, for giving those details. Mahesh, I just want to address one last pack, and that's the sugar pack. You've seen, Triveni Engineering seeing down about 4%, some weakness in something like a Balrampur Chini or an AID Perry as well. Your overall outlook in, the sugar space in general, is there any merit there?
I think it's a lower consolidation zone, and the valuation are there. So if anyone want to add, then they can add in a staggered manner. But currently, all the market are in a selling pressure, so it's a wait and watch. But valuation are reasonably for Triveni Engineering and Balrampur Chini specifically, if you see. Then both the counter could be added for a longer term horizon. So Balrampur Chini and Triveni Engineering are both can be picked for a longer term horizon. I think both have a potential for at least 25 to 30% upside. For Triveni Engineering, specific, if we see Triveni Engineering, we can see 25% upside from these levels. Balrampur Chini, 15 to 20% upside could be come in 1 year horizon, but add in a staggered manner and any dip from these levels. So staggered where we're buying is advisable.
Got it. Thank you, Mahesh, for joining us and giving us and helping our viewers get a more insight on the stocks we're talking about today. And with that, it's a wrap on this edition of Top Trades, but do stay tuned to NDTV Profit and Air Market Close coming up.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to
watching India Market Close at NDTV Profit. I am Mahima Vajrajani. With me is Agam Vakil and Soumit Sarkar. Well, before I, toss to Agam for broader markets, let's see how the benchmark indices are performing. Well, Sensex and Nifty both have recovered a tad bit, but Nifty is flat, trading at around 0.14% higher. Sensex trading around 0.34% higher. In terms of the bank Nifty, it's hovering around the levels of 48,600, but pretty much flat in trade right now. In terms of the advanced decline ratio, let's pull up that and see how the chart looks like. There you go. In terms of the Nifty, there is 17 odd advances versus that of 32 odd declines. So the market, of course, is skewed more towards the sellers. In terms of the NSE, there are 1,000 odd advances versus 1,200 odd declines. So the ratio is pretty much skewed towards the sellers in the market. Let's also pull up the Nifty 50 indices and see the heat map as to how things are faring. There you go. The top gainers today include M&M, Bharti Airtel, Bajaj Finance and Adani Enterprises, as well as Adani Ports. Nestle, ITC, HCL, some pack from the FMCG, the Nifty FMCG doing well with gains of about 1%, but M&M definitely is the top gainer, gaining by about 3% odd. But some stocks that are under pressure include Hindalco, down by about 3% odd, Dr. Reddy is down by about 2% odd, Sun Pharma, Ultratech, Trent, Wipro also seeing loss of about 1% odd. Let's also pull up the sectoral heat map and see how the sectors are faring in trade today. And there you go. Nifty Media being the top gainer, up by about 1% odd. Nifty Auto up by about 0.7%. Nifty FMCG, second day of gains, up by about 0.7% odd. But something that's seeing pressure second consecutive day is Nifty Metal, down by about 1% odd. PSU Banks down by about 1% odd. Realty down by about 1%. Nifty IT also seeing the pressure and continues to see pressure, down by about 0.8% odd. But with respect to the broader markets, Agam, what does the mid cap 150 and the small cap 250 look like?
Well, it's not the best, and I'll tell you why, because naturally, firstly, these indices are not outperforming the benchmarks. The mid-cap index and the small-cap index, well, currently marginally in the red, whereas the Nifty is marginally in the green. But, you know, there isn't too much to talk about when it comes to outperformance because all in all, in general, there's been a little bit of consolidation going on as far as these indices go as well. There are plenty of names, however, in the broader markets which are buzzing, which are moving considerably on an intraday basis towards, well, gainers and losers. But, you know, as far as the mid-cap and the small-cap indices are concerned, we haven't seen too much happening. Let's pull up the list of all the stocks which are a part of the BSE 500 and see where the top gains and the losses are coming through. So, you know, we do have, well, names like, right, Adani Power, and along with that, we have plenty of other names which are actually buzzing in trade. But I'm just going to come back to the list. All right, so we have Adani Power, Tata Investment, Narayan Hridayalaya and Jindal also up and about. And what's actually weighing down on the indices was, well, Dr. Lal Pathlabs, Canfin Homes, Century Textile, and Atul Auto. And for a change, if you see and if you notice, we aren't seeing very large changes in your underlying at the moment. Sure, you do have names like Adani Power and Tata Investments moving to a certain extent, but you know, we don't have names which are moving considerably as much as 10% and over, at least not in the BSE 500. So that perhaps is another indication of a little bit more well, I would say range-bound trade playing out for the indices, the implications of these stocks on the indices. Well, all in all, not much to talk about. It's been a quiet day of trade and perhaps also on expected lines considering it is a truncated week and tomorrow is a trading holiday. And I'd reckon that we'll wait for more cues and markets will also wait for more cues before we start looking at more traction as we move in to the next set of few weeks as well.
Well, let's also welcome our guest, Ambarish Balika and Kush Bora. Well, Kush, coming to you first, what are your Nifty and Nifty bank strategies for the day?
Hi, first, good afternoon to everyone. Well, I think, we've all been talking about a rebound rally, at least certainly I have been, but I think it's important to put that in context. Even I believe that, we are firmly and apparently very clearly in, a bit of a downturn, and we're expecting a bit of a rebound from those levels where the Nifty has actually been, clocking new lows, at least for the last couple of days now. Now, one of the reasons and one very interesting reason why we've not seen that rebound rally come about, in fact, two of them. The first one is very apparent that the FII selling is relentless, ongoing, and we've seen and we've heard and spoken enough and more about that. The second reason why we've not seen a bit of a rebound rally just yet is because if you look very closely, the Nifty or Bank Nifty, even for that matter, aren't actually oversold on any parameter. If you take in technicals, for example, in RSI, it's not oversold. For derivatives, if you see a PCR, it's not hit that oversold mark. and I'm sure Amrish could confirm that even on the fundamentals, I suppose, on the valuations, we are not oversold yet. And hence, we've not seen that kind of a rebound rally that actually looks apparent and is around the corner, but elusive for now. That said, how do you play a market like this? I think you should wait it out, because no trade is also a trade. Short selling will not make any sense from here because of the risk reward ratio, and markets don't look to be in a mood to give you that rebound rally. But if I was still to pick one, I would play the rebound, not in a preemptive way, but as and when it comes about. So 22, 300, 22, 500, this is a support zone for the market. If you do see some rebound from these levels, then you're better off playing for the rebound rather than short selling at these levels on the Nifty.
And Kush, what would be your stock picks?
Still going with a mix of a long and a short. So yesterday we had discussed Medanta Global Health. This stock is holding ground. In fact, today if you see, it's gaining some. So not a bad idea to be in this space. In fact, pharma, if I broaden the horizon, the healthcare space has actually been one that has actually done rather well. So this continues to be on the long side. 1270, 1305 are the targets. 1200 is where you place that stop loss. On the short side, I've got ONGC. The stock been knocking. Even now, if you see, there isn't any real base formation attempt in place. Every rise has been taken as an opportunity to sell. So 231, 228 are your near-term targets. 238 is where you place that stop loss. Just a couple of updates, if I can take 30 seconds. Narana Hrudayalaya, I heard Agam mention it. This is a call that we had a couple of days ago, has been doing phenomenally well. All targets achieved first, second, and then some more. So I think this is one stock that you could perhaps consider booking partial profits if you've held it on in over the last week or so. Also, we did discuss Abbott, Camlin Fine, some of these names on the long side, alongside Delivery and City Union Bank on the short side. So the calls where targets are achieved, this is a market where you'd want to take some profit off the table, just putting it out there for viewers for their reference.
So I want to talk about Mahindra and Mahindra. The reason here is it would have been a very interesting one to take a technical view as well. Perhaps we will take it up with Kush, but I wanted Amrish's view. Amrish, quite naturally, I'm assuming at this point in time that the sharp reactions in M&M that we saw of late because of Tesla, because of all the other factors in the OEM space was perhaps a little bit overdone. Is that your opinion, or do you think that's warranted and right now is just a dead cat bounce?
No, I think it seems a bit overdone, because if you are talking of the overall India EV space, which is again listed stocks. When you talk of listed stocks, I'm talking of Mahindra, Tata Motors, as well as Maruti, although they are a bit late in EVs. But then most of their range has no conflict with Tesla. Because whatever I'm hearing, I think at the cheapest level, Tesla should be closer to about 25-30 lakhs. There are reports that it could be anywhere between 40 to 50 lakhs, the lowest range of Tesla. So I don't see that really having a competition with any of the models which most of these listed players have. Even if you take a look at Mahindra's new launch, which is that 9 EV and the 6 EV, the most expensive one is at about 32 lakhs. They start at about 21 lakhs or so. So even that should not really get affected to a large extent. And if you look at the sort of bookings they have got, the bookings were opened on 14th. I think the deliveries will start sometime around March 15th. So all this is going to happen much before Tesla even comes to India. So I don't see Mahindra and Mahindra really getting affected. So I think that fall which we saw because of Tesla was surely a buying opportunity.
Right. And the stock to focus today, in fact, in the cash segment is Thangamayil Jewelry. The stock has hit an upper circuit of 20%. What's the reason behind that? We have Mahima to give us more details on that.
Right. The stock is definitely locked in upper circuit, and this is on the back of a new the Aquarius note that has given its view on Thangamayil Jewelry. Even the counters rights is trading around 40% higher. Now, in terms of what it is talking about, the report itself, they've given a tagline that says a bigger, brighter and bolder bet. What they're saying is that the Tinagar flagship store is finally open during the weekend, and it offers a separate set of product mix, which is making Aquarius very positive when it comes to Thangamayil Jewelry as a whole. The Tinagar store is definitely worth the hype, is what they're saying, and the store is set to drive significantly higher revenue in terms of density as well. What they're saying is the other factor that is playing its role is the DigiGold scheme. It's a strategic tool for funding the customer acquisition. What they're doing is that they are, it's like a savings platform that is designed to effectively capture advances while offering incremental benefit to customers. So this is something that is a positive for the company. In terms of tariff wars and rallying gold prices, they are straining the GML rates overall, but they believe that Thangamayil overall is well positioned to deliver a robust growth. The kind of growth that they are penciling in terms of revenue as well as EBITDA and PAT. The CAGR for revenue stands at around 24% over FY25 to 27. For EBITDA, it is 39%, and for PAT, it is 58%. What they're saying is that this counter remains the top pick when it comes to the retail sector, and it's offering an attractive entry point in the current markets environment. So this is these are the reasons as to why Aquarius is bullish on the stock, and the stock is definitely locked in upper circuit. Amrish, I'll come to you on this one. What is your read-through for this particular counter? You know, festive season definitely boosted the sales overall, and that was seen in Q3 numbers. And this is on the back of gold rallying as well. But overall, what's the outlook looking like when it comes to Thangamayil Jewellers as a counter?
No, I mean, overall for the sector, I wouldn't be too bullish at this point of time. I think the only thing positive would be the inventory gains, which most of these companies will be sitting on. Because looking at the way the gold prices are and the way the jewelry prices have moved up because of the gold prices, clearly the demand may not be as good as what we have seen in the earlier years. I think only the necessary requirements or necessary demand would be there. There will not be excessive demand like what we have seen in the past during festive seasons, during wedding seasons. So, overall, at the same time, I see that there are so many regional brands, smaller brands who have actually now become national brands. And because of which, clearly there would be some margin pressure even going ahead. So overall, at this point of time, I'm not too bullish. And possibly about a year and a half back, I think I was among the first few to really give a sell call on a stock like Titan.
The stock that remains in focus is IEX. Now, Axis Cap has come out with this note where they're saying that the Q4 is shaping up very well for the company. In fact, in the first 22 days of February, they're saying that the volumes or the REC volumes are up nearly 100% on a YY basis. Gross volumes have jumped nearly 37% on a YY basis. And they also believe that if IEX continues the same growth rate for the remaining part of the fourth quarter, for FY25, the gross volumes would be nearly 4% higher compared to what they had estimated earlier. So a strong start, it seems like, for the month of February and overall for the fourth quarter for the company in terms of volumes. And recently, I guess Axis Cap also met the management where they're saying that the likelihood of market coupling getting implemented seems extremely low. They also believe that exchange for electricity derivative will be regulated by SEBI and will require the launch of a separate exchange by IEX, which could be positive for the company going forward. So Amrish, coming to you first, what are your views when it comes to IEX? Do you think that the overhang of market coupling will continue to weigh on the share prices?
It has in the past, so you really can't write it off even going ahead, because whenever you will have that talk or rumors of market coupling coming strongly, you will have the stock correcting. Otherwise, if you talk of the business, I think it's a great business to be in. But I think the only negative is the talk of market coupling.
All right, stay with us. We'll shift focus to the metal stocks now, even as we see it, in fact, dragging markets. We have Mihika joining us to give us an idea about what's happening now. Mihika.
So the Nifty metal is under pressure. The index is down 3.5% in the last two trading sessions itself. Top losers include Nalco, Vedanta and Hindalco Industries, which are all aluminium counters. Now, in terms of the stock-specific fall this week, Nalco is down 8.5% since the start of yesterday, Vedanta around 6% and Hindalco Industries around 5%. Now, the key trigger is the fall in the LME aluminium future prices, which hit an intraday low of 1.75% today and 2% yesterday. And the price weakness weakness as per Kotak Securities is caused on one, US growth concerns as well as the risk of US-China trade relations becoming worse. Analysts also say that the entire optimism of aluminium prices sustaining about $2,600 per ton is at risk, and there's also a risk of higher China exports to other countries due to signs of lower demand in the country, in China itself. So this risk persists. There's also a brokerage trigger. Avendus Spark had downgraded Hindalco to a sell rating at a 575 rupee target, which implies a 10% downside, and it's maintained its sell on Nalco at a 175 rupee target, which implies a 5% downside, and this happened today itself. And last year, the steel counters in focus. You've seen SAIL fall 5% just this week. Tata Steel, JSPL seeing cuts of 2 to 2.5%, and JSW Steel down about 1.5%. The main reason was because the industry was expecting safeguard duties. We had managements of certain companies tell NDTV Profit that the steel import duty was expected in the first half of February, when the last week no safeguard duty has been announced, and that's why the industry continues to see high imports and dumping from countries like China and Vietnam at cheaper rates. And it's to be noted that any duty above 5% is going to be positive for the industry, but nothing has been announced so far.
Mika, thank you so much for getting us those details. Kush, I'll come to you. Last week metals for all 5 days ended in green, but this week, yesterday also it closed around 2% lower. Today also it's trading in red. How are you seeing this, and any counters in the metal space that you're liking right now, despite of the kind of beating that the entire sector is seeing?
So, two stocks, Hindalco and JSW Steel, both of them were our calls over the last week or 10 days. The targets were met on the long side. One reason, apart from the reasons that Mika just mentioned, could also be where in a market like this, pocket of strengths will also be beaten down, where you will see some positions being taken off, people wanting to sit on cash because these pockets are very few and far in between to find. Now, while the moves that we've seen over the last couple of days in the entire metal pack, and specifically in Hindalco and JSW Steel, do seem like profit booking, because if you see, Hindalco was up from 570 odd levels all the way up until 650. Similarly for JSW Steel, 890 all the way up until almost 1000. So pretty good gains. So you won't rule out profit booking, and that's what we're seeing right now. Will I go and buy them just yet? Not at the moment, because we're seeing this is the second day of fall. I want this to settle first. The stock might consolidate for a day or two sideways, and then perhaps give you another round. So both these stocks still look good, but buy when the dust settles and they start to consolidate sideways rather than falling the way they are right now over the last two sessions.
Okay. Well, on to another story, which is actually turning out to be a pretty important one, because we have updates from the SEBI regulator, the market regulator, SEBI, and they've in fact gone ahead and proposed change in the way open interest is calculated. I thought there was only one way to open in calculation, but I suppose that they're looking for a different way to do this now. What is this, and how will this impact markets? Let's get in Sajid to tell us a little bit more about that. Sajid.
That's right. What the consultation paper of market regulator tries to do is to reevaluate the way the open interest has been calculated, and as a result of which, how stocks are entering into ban period. Currently, there is a methodology wherein if your total open interest exceeds 95% of the market-wide position limit, the stock enters into ban period in the F&O, which basically means that you will not be able to take fresh positions and you have to square off your positions. As a result of which, many of the small and retail investors who may be participating get stuck because of that. But now what the regulator is trying to do is, and he's been trying to explain that to this market for a couple of quarters now, that they're going to go into the delta based strategy, which basically looking at sensitivity of the contracts at that point in time, wherein which calculates the kind of open interest based on delta, and which basically marginalizes all the out of the money open interest, and so the open interest which is calculated is for that point of time and that period of the contract, and not which has out of the money, which is second month or third month contracts where the open interest has been created for hedging purposes. As a result of which, the open interest requirement will change and the classification will change, and then our fewer stocks will go into ban as a result of that. But the market regulator is also moving away from the market-wide position limit calculation, which is based on free float of a company, to average delivery of the stock in the cash market, which is basically now linking it to how liquid the stock is in the cash market with respect with respect to the liquidity which is there, and based on that the open interest would be calculated as well, and that's something which is going to be interesting. It's a consultation paper which SEBI has floated, and it will take a couple of months before it can be approved and the new transition can come in. It will take a couple of months or quarters there, because there needs a lot of change with respect to softwares for all the brokers and the vendors, and that would be a long run process.
Okay, Sajid, thank you so much for getting us all those updates with respect to the potential changes that can come through. For all those who were listening to Sajid right now, let me tell you firstly, delta is nothing but the change in your option premium with respect to the change in the underlying or the stock it is linked to. And at the moment, what we're working around it in terms of open interest is the notional value method, and they are trying to figure out another method based on delta. Delta is also a first degree Greek for everyone who is a little bit more sophisticated in the options arena. But I'm not gonna go ahead and try to explain further, because let these these consultations come through and let them take effect, and after that perhaps we can take a closer look at that. But this is as far as delta is concerned, how they are looking to change the way in which they in fact calculate open interest. I myself wasn't aware that delta was one other method by which you could in fact assess your open interest. But that said, let's get in Puneet to tell us about stocks which are moving out of the band, which is potentially moving out of the band. Puneet, over to you.
Well, thanks for that. So, of course, there is roughly about 16 securities that are going to be excluded from F&O contracts going forward. Now, this is reference to a SEBI circular which had come in August 30th of 2024, and we'd put out the list at that time itself as well. But these will be the last contracts. You won't be able to have any new contract in these particular securities. Following securities will not be issued, of course, on expiry as well as the existing contracts, and no contract shall be available effective 28th of February. So, stocks such as, Abbott India, Atul Limited and Bata India are just some of the key names, and we'll get those names on your screen as well, because these are some of the names which are seeing some wild moves in trade today. Both, stocks which are going up are seeing a lot of, short covering as well. Stocks going down, seeing a lot of unwinding as well. And if you can just pull up some of the key names and the share prices as visible on your screen, Bata India is one of the key ones, Coromandel International, Canfin Homes, all down in trade today, while some are also seeing some positive moves while on the flattish trajectory like Coromandel International. Some other names are Gujarat Gas, IndiaMart, Intermesh, Ipca Laboratories, and finally, just to round about the list, it's about Navin Fluorine, PVR, Inox, Sun TV as well as United Breweries. So these stocks will be excluded from F&O contracts going forward, and currently seeing a lot of wild moves in trade today.
The reason why actually we did this link was to highlight the fact that there have been wild moves in this stock. In fact, for Bata India, if you look at, the stock has been gaining for the last 3 consecutive sessions, and one of the reasons probably behind that could be the fact that the stock will be moving out of F&O. On the negative side, in fact, if you look at Dr. Lab is the top F&O loser in trade, followed by Canfin Homes, and both these stocks will be moving out of F&O post this expiry. Other than that, it's Gujarat Gas, which is also down in trade. It's down around 2.6%. On the gaining side, there are names like if you see Sun TV Network, that is up 5% in trade, and this most likely could be because of the fact that it's moving out of F&O. Kush, how are you? Do you think actually these kind of moves is because of the fact that these stocks are moving out of F&O?
In all likelihood, because there is no reason for these wild swings other than what we've already seen in some of these names. So, for example, a Sun TV was actually, a pretty good shorting candidate for a while. Has been. I think these, overly short positions are coming to a squeeze, are coming to a close now, and hence, you're seeing some of these moves. So, this is a lot of unwinding that is taking place in the market. I wouldn't read too much into it. I'm so glad actually you did this piece and put it out for traders, for investors to just take note of. My suggestion would be, don't read too much into the moves of today. In fact, over the next couple of days as well, let this expiry pass by. Let all the all the dust settle on some of these moves, and then perhaps take a fresh view and not get swayed by on either side, long or short, by the moves that you're seeing today. So I think this is a very interesting link, and both traders and investors should be a little mindful before they take positions in some of these things.
That's the view or the advice coming in from Kosh Bora, that don't get influenced by the moves that we are seeing in stocks that are moving out of F&O in this expiry. But Amrish, I would come to you on footwear stocks. Bata, Khadim India, all have been buzzing in trade. Bata obviously could be because of that F&O reason, but Khadim India is also up 9%. How are you looking at the footwear space? This space has been beaten down for a very long time. We have not seen any big recovery coming in. How are you looking at, can things improve for them going forward?
No, in fact, we are clearly expecting the consumption theme to play out possibly in the next 2 quarters, because in the last one year to about 18 months, we have seen a consumption slowdown. But now it's expected that possibly from the new financial year, we could actually see consumption again getting back on track. And one of the beneficiaries would be the footwear segment. And in that, really the leader is Bata. So at these levels, really, I find Bata decently, decently priced, because again, like I said, it's not done anything in the last close to about 12 months. So at these levels, should be bought, no doubt.
Right, Amrish, thank you so much for joining us and giving us all those insights.
Yeah.
With that, we slip into a short break, but let's hear out Neelkant Mishra, Chief Economist at Axis Bank, talking about US tariffs, liquidity issues and more. Listening.
Longer term, or I would say even medium term, I think lowering of tariffs actually helps productivity. So when you think about the economy, the channel through which trade openness helps us is through improvement of productivity. And in the near term, if the tariffs, the negotiations lead us to, say, give away ground on some sectors and then gain ground on some others. If negotiations are proper, I think they should be beneficial to both sides, because that's the best part about negotiations. But there could be sectors that get hurt in the near term. But for the economy as a whole, I think lower tariffs mean better productivity over the medium term.
Sir, RBI has decided to do a $10 billion buy-sell swap to shore up the liquidity. Do you think this liquidity could bring back the inflation fears?
I don't think so, because see, the growth today in the economy is below the potential growth rate. So I think the potential growth rate today is 6.5–7%. If our growth is well below that, using the tools that are available to remove the headwinds. See, remember that liquidity in India has been exceptionally tight. The cost of liquidity, as measured by the gap between the 10-month, 12-month certificates of deposit and the 12-month ahead expectation of RBI rate, that has been at a very high level and is rising from here. So that suggests that liquidity is very tight. It is actually constraining credit growth, and that has been a very major driver of the economic slowdown. So if we are below potential, if any tool is used to bring growth back to potential, I don't think it will be inflationary.
Do you think consumption is still weighing in, urban consumption is still weighing in on growth, and how can we get past this problem?
See, consumption is to some extent an outcome. It's not really a starting condition, in the sense that if we are able to manage the cyclical drivers on the, say, monetary side, and growth comes back, there will be an improvement in consumption growth. Consumption is not necessarily, because people have to earn before they consume. So if the liquidity conditions normalizing mean better credit growth, I think job creation, economic activity as they pick up, there will be more money to go around and consumption can revive. I wouldn't put it the other way around.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
a life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Tax regime.
This is India Market Close, and it is that time of the show when we have Somit tell you about what he has heard on the street. Somit, now that we have you here with us, why don't you tell us what's up? What are you hearing?
Well, firstly, it's info edge. Now, what I understand is that for the last few trading sessions, there was a big foreign institution who was a seller, but most likely the selling is now over. So, not much of a downside is what the street is expecting from info edge. Second, are two stocks, SRF and Bajaj Healthcare. Both are on the counter on the track of large HNIs. They have been they have been accumulating this counter. That is SRF and Bajaj Healthcare. So keep an eye out for these two counters. SRF, I guess, has a couple of analyst meet also coming up. And Bajaj Healthcare, there are new products that are lined up that could potentially be good or big for the company going forward. Third on the list is Laurus Labs. Large HNIs have been quite actively buying this counter. What I understand from the street is that some large order win is expected for Laurus Lab in the CDMO segment, and hence this fresh buying activity has started when it comes to Laurus Lab. And last on the list is Indigo. Now, there were a couple of upgrades that have come in for Indigo in the last couple of sessions, but despite that, we are seeing this kind of a downtick when it comes to Interglobe Aviation. And what I understand from the street is that potential block deal from the promoter Gangwal is expected in the next 1 week. Now, this block deal will most likely happen in the block window, which means that it won't happen at a much higher discount, because in block window, if a deal is happening, the maximum discount could be around 1%. And what I'm picking up is that strong demand coming in for Indigo. So keep an eye out for that counter. Gangwal, under his own name, owns around 5.3% stake, and then there is the family trust which owns around 8% stake. What I understand is that 5.3% stake is something that could come in block in the next 1 week. So Indigo would be in focus largely on that.
Alright.
And if you remember, he has been continuously selling his stake.
Yeah.
He has around 13.58 now remaining, which is valued at close to 23,200 crore rupees. And the last stake sale done by him was on in August 29th, where he sold nearly 5.8% stake. That was the biggest, I guess, valued stake, 10,300 crore it was valued at. Before that, around 5.84% he did in March 2024. Before that, August. So August and March is somewhere he has been continuously selling his stake. And I remember his statement saying in 2022 that he'll be selling his entire stake in the next 5 years. So I guess now 3 years have been gone by.
So in 2022 December, the entire Gangwal family as a whole was holding around 34% odd. Since then, they've been selling. Sobha Gangwal completely exited in September 2023. She was holding around 7% odd stake, and Rakesh Gangwal has held around 13% back in December 22, which is now come down to around 5 odd percent, as Somit rightly mentioned. With that, let's also welcome in Neerav Ashar, the head equity research analyst at Latin Manharlal Securities, who's joining us now. Nirav, good afternoon to you, first of all. And with respect to the Interglobe Aviation stake sale, plus the entire outlook as to how Mahakumbh has played out, I'm sure Q4 is going to be strong for the company. How are you reading all of these things, and how do you think the outlook looks like for the next 1 year for the stock?
Well, good afternoon and thank you for the invite. I think as far as the entire aviation space is concerned, it's in a sweet spot at this point of time. We have the project Udan, the focus of the government on building up more airports, more airport infrastructure. And I think for the first time in history, we've seen a record number of airlines which have been aircraft which have been ordered. So we have a record number of aircrafts which have been ordered and which are likely to be delivered going forward. The travel intensity has increased quite a lot. We have more and more airports also coming up. And I think the entire sector is poised for an up move. So I think for an opportune time for the Gangwal family, as far as Indigo is concerned, to exit at the right time and probably at the right valuations. And of course, we believe that going forward, definitely the sector is poised for better times ahead. And of course, this quarter, we are likely to see a golden quarter because of the simple reason that we've had events like the Prayagraj Mahakumbh taking place at this point of time, which is likely to reflect in the numbers going forward. So the outlook is positive for the sector.
Right. And Kush, how's Indigo looking like on charts?
Well, not too bad. I mean, it's holding up, and in fact, it's gaining ground in a market like this. And I don't mean today. I don't mean the move that we're seeing today. But if you see over the last month or so, the stock's up from 3,900 odd levels. So not very badly placed. It's just that the 4,500 mark has been a medium-term resistance for the stock, and we do see it flip from that level every now and then. This time around, it probably crossed it, a little further and then slipped. So I think anywhere close to the 43.50 mark, this stock could attempt to find some sort of support around those levels. If it does find support, it will not be a bad idea to start accumulating once again for levels of 4,500 if you want to make that range play. So closer to 43.50, 43.75 kind of a zone, you could look at accumulating Interglobe Aviation with a stop loss around the 4,300 mark.
Okay, well, since we've spoken about Zomato, or actually we haven't spoken about Zomato just yet, but I reckon that it's become a habit for us to take views on Zomato, and especially how it looks technically, because it's just had so much viewer interest at the moment, and it's moving up around another 1.5% right now. So I reckon it's also that time of the show where, Kush, I take your view on Zomato.
Becoming a regular feature, isn't it? So, but I think the inclusion in Nifty for sure has helped, stem the fall. The stock around 200 levels has seen a good base formation in place, on the way up. I'm seeing that, the 20-day moving average, where it is at currently, in fact, 225, 226, thereabout. This is acting at a bit of a resistance where it's selling off from the highs of the day. So if you have a positional standpoint, anywhere from 6 to 12 months, this might be a good time to start accumulating. At least Zomato's come in that phase where the fall has stemmed. The stock is seeing some kind of a recovery. So between 200 to 225, as long as the stock maintains, this zone, not a bad idea to start accumulating, Zomato. Don't go all out. Momentum might be missing. But as I said, with this base formation and uptick, accumulation is not a bad idea.
Right. Okay. Okay, Kush, Airtel was down in trade yesterday, but today again we are seeing some sharp recovery when it comes to Bharti Airtel. How's that stock looking like on the on charts?
When we speak about a lot of your large cap names being safe havens, it's only in terms of the margin of safety. But other than that, if you see Reliance down, 10-15% HDFC Bank down, similar number. This is the only stock that has actually held fort, amongst the large caps, except perhaps Bajaj Finance, which has actually now gained ground after 4.5 years of, beating down. I still continue to like Bharti. If you see the kind of move that it has made, over the last 3 to 4 months, a very strong base near the 1550 mark. So as long as that is protected, I will continue to buy in Bharti. If you want to if you talk for all the talk of shifting towards large cap, which one do you shift to? Correct. This is the one that should be on your radar, along with Bajaj Finance now, which has started to make that move. 1550 is the positional stop loss on this one, and on the way up, when the markets start to revive, there is a good potential that this stock will clock 1800 and newer highs going forward.
All right, so that's the view with respect to Bharti Airtel. Now, rupee has fallen the most today since Feb 3, and it's slumped around 55 paisa, today's low of around 87.25 against the US dollar, and this is the biggest intraday fall, as I mentioned, since Feb 3, as you can see on your screen. The same thing's flashing as well. Nirav, I'll quickly come to you. In terms of the Nifty IT, we've seen that the pressure was there yesterday, the pressure is continuing today as well. There is certain overhang coming in from the US as well when AI data centers are concerned. What is your read-through with respect to these IT companies? Because there are some counters that are feeling the pain, but there was Happiest Minds which was doing well yesterday as well. What's the overall read-through?
Well, as far as the IT sector is concerned, I think the normal presumption would have been that the depreciation of the rupee definitely augurs well for the IT companies for the simple reason that it increases their earnings. But I think this simple math is now doesn't apply in today's scenario, because the entire the fabric of the IT industry has changed. Today we have more exposure towards artificial intelligence, machine learning, Internet of Things, etc. And I think the second important factor is the prevailing conditions in the US markets, in the European markets, etc. We've been seeing that the order flows have been slowing down, the discretionary spending is out of the window. At this point of time, clients are not willing to spend on discretionary kind of spends, but just looking at those areas where it's absolutely essential to do certain amount of spending, along with a proof of concept, etc. So I think they have tightened their purse strings, and I think that has impacted the order flows also. Order flows in a way have become quite low on the lower side. So I think this has impacted the Indian IT sector. It has impacted hiring also. It has impacted entry-level salaries also. So I think to make matters worse, I think recently there were some allegations also against TCS with respect to fudging of the visa-related records. So I think all this has really spoiled the sentiment as far as the IT sector is concerned. And post that, we've seen a continuous fall in the IT stocks for 4 continuous sessions. Now, with respect to Happiest Minds, which you spoke about, there's been a sharp correction in the stock because very high expectations from the numbers, but we've seen a flattish kind of a growth as far as the 9-monthly performance is concerned. So just a pullback rally from the lower levels, nothing else. So I think the outlook remains a little bit on the lower side as far as the IT space is concerned.
Right. Let's also get in Rucha to understand why Zaggle, Zomato and Bharti Airtel are the top 3 stocks on NDTV Profits radar.
As I already mentioned, top 3 stocks. Number 1 is Zaggle prepaid intraday low of 0.1%, largely flattish in the negative side, but intraday high of 4.1%. Now there's a bit of news over here when the company has entered into agreement with Indus Towers to provide Zaggle Save services. Now it is also entered into agreement with Gujarat International Finance Tech City Company Limited. This one is entered into to provide solutions of co-brand prepaid citizen card as well as visitor management system for GIFTCL. Now Zaggle is, as I mentioned, up about 4.1% in trade, but little off the day's high over here. Next one on my list is Bernstein on Zomato. Now Zomato's intraday high is at 3.4%, low of 0.2%, again largely flattish in nature. Now as I mentioned, Bernstein has come out with a note wherein it has maintained an outperform rating with a target price of 310 rupees. Well, it mentions that unlike the pre-IPO mode, the belief today in the stock is largely balanced over here. The company is set to grow quickly while delivering medium-term profitability as well. well. Now, it also believes that there is a rational limit to price competition given Swiggy's lower margin structure, and therefore they expect Zomato to continue to build on quick commerce leadership as well. Lastly on my list is this telecom name, Bharti Airtel, hit an intraday low of negative 0.3%, again largely flattish, but an intraday high of about 2.5% in trade. Goldman Sachs has come out with a note wherein it mentions that it has maintained a buy rating on Bharti Airtel with a target price of 1780 with an 11% upside. It also proposed purchase of about 5% additional stake in Africa entity. This one was announced a couple of days back, and Goldman Sachs believes that this one could be little bit concerning given the growth and earnings visibility, but still investors would prefer Bharti because it is expected to invest in its India business, and the meaningful allocation of India's free cash flow towards acquiring the non-India asset could potentially drive a derating. That is all of these Africa investments which the brokerage house is talking about, but still it has maintained a buy rating with an 11% upside, and as our guest also mentioned that he likes Bharti Airtel on his technical charts as well. So Bharti is somewhere in the good books of investors and traders.
Nirav, coming to you first on Zaggle, any views on that counter? Earlier we had seen a big downfall on that stock when they had done that acquisition for which they didn't announce the valuations. But right now, is it in the buy zone given the fact that valuations have now become cheap?
Well, we've seen in a lot of stocks valuations primarily looking cheap on account of the fact that the prices have corrected sharply. But if one were to see the performance of the 9 months with respect to these companies, then they've fallen short of expectations. Now, this has been the prime reason why there has been a correction in this stock. So I think I would wait for the recovery to set in. Once we are able to see some recovery in the numbers and the earnings, then we would like to have a fresh look at these stocks.
The view with respect to Zaggle, Kush, with respect to the charts, how's Zaggle faring?
Not too bad, but I wouldn't go out and buy it, just yet. What we are seeing in the last 2 to 3 sessions, a bit of a bounce on the back of good volumes, mind you. So, does make a case, but in a market like this, you can't rule out, bounce from these, oversold territories. So wait for the 370, 375 resistance zone to be taken out. If it does move above that and sustain, and the volumes do continue, even if they don't pick up, that will be a good time, because by that time you will have a base confirmation in place and the stock consolidating sideways. So I would rather wait it out. 375 is the level that I'm looking at. Once that is taken out and sustained, I think that's the time to go out and start accumulating Zaggle. Otherwise, what we are seeing in the last 3 to 4 sessions could well be a dead cat bounce.
And I guess maybe we can talk about a handful of subsectors and subsegments which have shown growth, which have also promised to show more growth going forward. And Nirav, I reckon that the transformers segment, I know it's a relatively small one, but there are a lot of companies in the transformer segment at the moment. They have indicated that they will show about 25 to 30% bottom line growth, 20% revenue growth as well. These companies have also come off. Some of them will be something like a case in point, a Tariff. One of them is at the top of my mind. How are you rating these companies? And because the intraday volatility is so much that they often hit their lower circuits as well. But would you go ahead and buy into some companies like these?
No, not at the moment, because I think most of these transformer companies, they have come up from very low levels. And a lot of things have been built up into the valuations. The kind of growth which is expected going forward is discounted right up to FY30. Now, there could be certain twists and turns in this particular journey. We are already seeing that in a lot of infrastructure companies, they're going back on their word with respect to the investments which are being made. There's a lot of policy flip-flop which have been taking place, especially in the case of railways. We've seen a lot of things being reversed at this point of time. I think we need to refer to the fine print for that. So I think such a thing cannot be ruled out even in the power sector. There could be certain twists and turns. There could be a phase where investments could slow down a bit. that will hurt the valuations in a very, very serious way. That's what we believe. So this definitely is not the right time to enter into these stocks. And I think we need to wait for some meaningful correction to take place before taking an exposure in these stocks, because most of the growth story is already discounted in the price at this point of time.
So that's the view coming in on entire transformer space. Now, Bajaj Auto is the next stock that is in focus. The automaker is in the news as its wholly owned Dutch subsidiary Bajaj Auto International Holding has provided a 50 million euros loan. And the loan is a part of a larger approved investment of up to 150 million euros and will ultimately help finance the operations of KTM, which is currently undergoing restructuring. Now, this indicates that Bajaj Auto may end up owning a substantial stake in the premium motorcycle maker, that is KTM. But will that prove to be good for the stock or bad? Puneet joins us with a bull and bear case on Bajaj Auto today. Puneet, take it away.
Well, thanks for that. So definitely, this all spiraled and started off in November of 2024 when KTM AG actually, went into judicial undertaking and has now filed for bankruptcy effectively. Now the company has, today is actually the day where, the judicial proceedings will announce what is the kind of measures that they might do. So we're still awaiting what could have happened. But before that, the company today has announced that they've extended a loan of about 500 million euros or 450 crores in terms of INR to KTM AG. Apart from that, they also invested roughly 1300 crores from the India entity to the Dutch subsidiary as well. But you look at the first bull and bear case, and it's specifically this with the context out of the way that, while KTM has filed for restructuring and now the application currently, we'll see what the result is specifically and what the creditors agree to. That's definitely going to impact the sales, and that we saw that in the quarter gone by as well. 50% of the sales were down for KTM in this particular quarter, while ownership of a brand like KTM, and we're still, while the jury is out, if Bajaj actually goes ahead and invests substantial equity as well, that will be something to watch out for as well. The second one's, of course, KTM roughly currently sells 5 times more bikes globally than it does in India. In India, is roughly about 60 to 70,000 bikes. But the overall share in terms of exports of Bajaj is just about 2 to 5%. So the kind of capital outlay this might need, it will be more of a global play rather than a domestic play, because the domestic sales have anyway been growing at a steady pace in the mid-single digit growth as well. We look at the third bull and bear case now, where specifically, it could cater to the developed markets once acquired. And, that could be, a strong competition to the likes of TVS, which has acquired the Norton brand back in 2020. It's been 5 years and we've not seen any launches, and that kind of, encapsulates that the 650 plus cc market needs a lot of capital, a lot of technology, and it's not that easy to turn around the business like that. But KTM has also, in its press release back in November, has mentioned that its financing requirement will be roughly about 3-digit higher. So roughly about 100 million euros and above is something, the kind of financing requirement that they need just in terms of, liquidating the inventory and turning around the business as well. Finally, when you look at the last bull and bear case, that's effectively, what Bajaj could get in terms of if they decide to acquire this business, a ready-made operational business with terms of, financial capability needed. It could turn around to be a very strong strategy. While it might take a couple of years to do that, eventually it might have a global powerhouse, and currently it just caters to the developed markets like Latin America as well as Africa. So that's definitely a big case. The other aspect is that it might require a lot more financial muscle. KTM has pointed out that they could have losses in the range of 1 billion euros over 2025 and 2026 in terms of restructuring the whole business as well. And finally, that's the bottom line. So if currently, just to add as well that, Bajaj, is international subsidiary, Bajaj Auto International, owns roughly 49.9% stake in Pierre Mobility, and that eventually is a stake in the listed entity. So it does not have a direct, equity in the listed entity. It's via another company. But essentially, if this has to turn around, it could be one of the biggest acquisitions of this particular decade, actually.
All right, Puneet, thank you so much for joining us and taking us through the bull and the bear case on Bajaj Auto. This one is also off significantly from the top. Well, at one point in time, it was trading at around well over 12,500 rupees per share, and it's now at around 8,400 odd. Nirav, are you a bull or a bear on Bajaj Auto?
Well, I think Bajaj Auto has disappointed. I think it's fallen from the 13,000 levels to currently at 8,400, and even at the current prices it looks expensive, because if one were to take into compare it with Hero MotoCorp trades at just around 15 to 16 times trailing 12 months, and Bajaj Auto at around 28 times trailing 12 months. So I think even after having seen the significant correction, this is the state of affairs. No doubt the performance is improving, but I think still we continue to face global challenges and headwinds. And of course, what they do with KTM is they will have to tread very, very cautiously, because the global scenario is not that comfortable at this point of time. So with the kind of the initial losses which will have to be borne, I think that will also be taken into account by Bajaj Auto going forward. And considering the fact that they are a very conservative management, cash-rich company, I think they would be reluctant to go ahead with at this point of time. So I think overall I'd like to stay away from the stock at this point of time.
Right. And Kush, how are you viewing at Bajaj Auto as a stock? Yes, it has fallen from its peak of around 12,500, but it has seemed to be taking support around the 8,400 level, something that it did a month back as well, right?
Absolutely. In fact, a good read on that. Also, if you see, the daily and the weekly charts are showing, some kind of positive divergences, which is a good sign. The volumes on the way down have started to thin. And also, if you take, the starting point of this rally somewhere early Jan 2023, then, the stock is down close to the 50% retracement support, from those levels. So I think there are a few points going for it. Again, in a market like this, you don't want to go out and buy in bulk, but if you want to start accumulating, I think we're adding a couple of names to that list today. Bajaj Auto also seems to be making that cut. So with these kind of a couple of positive points going for it, not a bad idea to look at it positively, perhaps even for a minor accumulation, because the markets overall haven't really found their feet. So the stock could see some dropping, but independently, the stock does seem to have, attempting, a base, in fact, not a recovery, but at least a base formation.
The view with respect to how charts are faring for Bajaj Auto. But now, before we slip into a short break, the Tata Group is poised to launch its second IPO in 2 decades with Tata Capital, and Sajith has more details on this. Sajith, what are you picking up?
Tata Capital is all set to come to the capital markets with its maiden IPO. The board of Tata Capital has approved a rights issue of 1,504 crores, followed by an IPO which comprises of 23 crore fresh shares and offer for sale from the eligible shareholders. The entire IPO is expected to come before September 2025, which is a deadline given by the Reserve Bank of India for any upper layer NBFC to list in the stock market. As part of the entire process, Tata Capital is currently undergoing an amalgamation with Tata Motors Finance, as a result of which Tata Motors, which is the auto company, will have really 4.7% stake in the combined entity. Tata Investment Corp, which is another Tata Group company, will have around 2.5% stake in the company, and other entities, which includes multilateral financial agencies and employee trusts, will hold around 3% stake. Tata Sun will have little over 88% stake in the company. The total IPO size currently has not been disclosed, but at the time of valuation merger of Tata Capital with Tata Motors Finance, Tata Capital was valued at roughly around 98,000 crores on a merged basis, which basically means that the IPO would be around or above $1 billion, which is 8,600 odd crores. The total fresh issue would be roughly around over 5,300 odd crores, followed by the offer for sale, which will be from eligible shareholders, which will include Tata Motors, Tata Investment Corp, and possibly, if required, Tata Sons, which will be part of the entire office there, because Tata Capital will have to at some point in time increase its minimum public shareholding to 25%. The valuation of Tata Capital, as I said, would be over 1 lakh odd crores, and this will be the second company from the Tata stable to come to the capital markets in the last 2 decades, TCS being the earlier one.
very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching India Market Close now. Shifting focus to KFin Tech and EPL. Jefferies has maintained buy rating on both of these counters, but they've cut targets for KFin Technology. And while Nomura is bullish on EPL, Rucha joins us with a detailed report on both of these counters. Rucha, what are you picking up?
So Jefferies has come out with a note on KFin Technologies wherein they have maintained a buy rating as you rightly mentioned, but also have cut the target price to 1310 from previous range of 1460. Well, they believe that the stock is not as vulnerable as the stock price points out to, but we take the pill is what they mentioned, and therefore they have a buy rating. They also mentioned that they have the stock has witnessed a 45% fall from the peak, and this actually seems exaggerated in the context of impact from weaker equity markets. So largely the broader markets and the benchmark indices is not doing well. That is why this kind of sell-off from the peak. But this is not justifiable, is what they mentioned. They also see that 40% of revenue is linked to equity and issuer resolutions, AIF, value-added services are are not directly linked. Therefore, they see still a healthy 17% CAGR, that is compounded annual growth rate in terms of profits over the next 3 years, that is over FY25 to 27, and also upside from mergers and acquisition, that is inorganic growth, and therefore they have maintained a buy rating. The stock currently are not doing really well, down about 2% in trade, but they have a target price of 1310 from the current share price of 890 rupees. So that kind of upside is what Jefferies is seeing. Moving on to Nomura on EPL, maintained a buy rating with the target price of 325 rupees. Well, they believe that the stake sale to Indorama, the step in the right direction for minority. Well, Indorama is also has also a strong global footprint with major MNC players as customers, so that can be a leverage to the company's upside. I also believe that EPL can leverage Indorama's footprint and therefore is positive for the minority shareholders as well. Overhang of exit of PE investor is now behind the company, and therefore they see an entry of a financial and strategic investor as a long-term positive for minority shareholders as well. So this kind of leverage from a big investor is what makes them bullish on EPL. Though the stock currently not doing really well, down about 2.5% in trade, but 325 is what Nomura is targeting on EPL.
Okay, Rucha, thank you so much for getting us those details. Now, remember that we've spoken about two very, interesting stocks. One of them is KFin Technologies, the other one is EPL. KFin Technologies is one which is, again, shown stupendous growth, and they are, in fact, saying that they will continue on their growth trajectory. Nirav, anything that comes to mind? And, KFin Tech particularly, specifically, is not like other your finance companies. It has a slightly differentiated business model. Do you track this? Is this under your radar? Any other such companies that you may like at this point in time?
Well, yes, KFin is not, its business model is different from the other the equity market related entities. But they have got a substantial benefit of the good run which we have seen in the markets. And as a result of this, I think lofty expectations again getting built up. And with the correction in the marketplace, I think we did see a very sharp correction. Probably at this point of time, the stock price might stabilize, consolidate from the current levels. But I think we need to see some improvement in the numbers, at least as far as the Q4 performance is concerned, before we take any further call on the stock. And I think this double-digit growth which has been factored into this report is something which we need to see how the things are going to play out going forward. Because this kind of growth rate may not be sustainable if we see any further deterioration in the markets.
Yes, so that's the view with respect to KFin Technologies. Now, another stock that is in focus today, and that is Coal India, as JP Morgan maintains neutral rating on the stock, and Mehika is joining us with more details on that. Over to you, Mehika.
So they maintained the neutral rating but cut the target to 395 rupees, which implies only an 8% upside. Now the brokerage still sees multiple headwinds to the company's earnings growth, and valuations are still not at bottom levels. JP Morgan has also mentioned 5 reasons why one should not buy the dip in Coal India. First, there's no immediate catalyst to trigger a reversal in the coal prices seen. The risk from slowing imports from China and growing supply from Indonesia will weigh on coal prices. Second, India's coal inventory is above mean levels despite the low production growth. Third, Coal India has lost a significant amount of market share to captives from 78% to 75% currently. The fourth one is India's power demand has a strong correlation to Coal India's volumes, and the double-digit power demand growth is key to the volume uptick, which has not been seen yet. And lastly, while the risk-reward does appear balanced at current valuations, a further downside is possible. The only 2 times that JP Morgan could turn positive in Coal India is one, if the company's share price declines below 340 rupee levels, and second, if India's power demand improves significantly in the coming months.
All right, thank you so much for that, Mehika. Kush, on the charts, Coal India, how is it faring? What are the support and resistance levels looking like?
That's still an easier question to answer than your first one. I don't think buying is recommended just yet. As far as the levels go, I think 350 on the downside, where the stock made this recent low and attempting a rebound. but on the upside, a very similar level. In fact, it's almost symmetric. 370 on the upside with a 20-day moving average resides, and the stock's been below that mark for a while now, for a considerable time, for the last 6 to 8 months. So 350, 370, these are the levels to watch for. If you do want to take a trade, then either side of this breakout, on the way down or up is where you can perhaps make a bit of a momentum play. But up until then, I think, don't be surprised to see it consolidate sideways for some more time.
Is not consolidating is Dr. Reddy's. Let's pull that chart up as well. And, what's really happened is that there's been a large trade that's happened over the last couple of minutes. It's taken a huge knock. It's currently making a new low as we speak. We'll need to see if it's a how many week or a how many month low. But Dr. Reddy's certainly is slipping further in trade today, and this is on back of big volume. So we certainly have a very, very large trade coming through for Dr. Reddy's. I'm looking at it, and it does seem like it's in a pretty messy situation, because the last time we saw Dr. Reddy's trade at this particular level was back in June of 2024, and before that it was in January of 2024. So it seems like it's making a full circle now. In its last 12 months, it is down by around 12.5%. A lot has been said about Dr. Reddy's in general. Kush, I'd reckon that you would stay away from buying into the stock, but would you initiate fresh shorts in Dr. Reddy's at this point in time?
Maybe I'd just wait for a couple of points more. 1100, that's the medium term. In fact, that's the long term support zone for the stock, where a late October 23, November 23 thereabouts is when the stock was actually around these levels, took a support and rebounded from those levels. So won't be surprised to see some sort of buying, kicking in again around that level. If 1100 is broken, then yes, you could see a fresh downturn on this one, which could in fact take the stock to 1040 odd levels also. So right now it is actually a little oversold, although not strictly on the RSI levels if you're tracking technically, but in the sense of a downturn that it's down from those 1400 levels right now closer to 1100 in the last 8-10 odd sessions. So yes, you're right. Stay away. Fresh short should be done once the support level is broken, and that support level comes at 1100.
Neerav, a question for you as well. It's been very, very mixed in the pharmaceutical space. There are companies which are doing very well. On the other hand, companies like Dr. Reddy's wilting under pressure. How are you reading into the entire sector at the moment?
What you said is completely right, because we've seen a very mixed picture as far as the pharmaceutical space is concerned. And at this point of time, I think the market is completely inclined towards defensives in the pharma space. So I think the market is looking at stocks like Cipla or a Sun Pharma or a Dr. Reddy's also, for that matter, as a defensive place. Because there is this tariff-related uncertainty which is prevailing in the markets. A lot of CDMO players have come under pressure. Generic players have also come under pressure, because there is pressure on the pricing of the generic drugs. At the same time, there have been certain companies which were reporting margins of 37-38%, which has come down to around 31% on account of some regulatory pressures, etc. So there is a lot of inclination to move towards the defensive stocks at this point of time. Having said that, I think CDMO stocks are still showing again some signs of recovery. Stocks like Piramal Pharma or the likes of Laurus Labs. But these are all built on certain expectations that they're going to get some orders, or some fresh orders are there in the offing at this point of time. So it's a very, very mixed and a confusing picture at this point of time. So I think it's better to be in the defensives. But then again, as we are pointing out, that there have been certain US FDA inspections which have also started once again. And I think it would be better to wait for some time for more clarity to emerge before taking the plunge in the pharma-related stocks.
All right, so that's the view with regards to Dr. Reddy's as well as the entire pharma space. Now, let's pull up something like Bazaar Style and see what it's doing in trade today. It's up by about 4% right now. where it did touch an intraday high of approximately 7% if I'm not wrong. Year to date, the stock is down by about 33%, but today it is seeing gains. And earlier today, we also spoke to Shriyant Surana, the managing director at Bazaar Style Retail. We asked the guest about their expansion plans and growth outlook. Listen in to what he had to say.
I think, as I said in earlier interviews also, we will stick to our cluster-based approach, in which our main focus will be from central India to northeast part. Currently, we are in 9 states. Majorly the core states that we work on is Assam, Odisha, and Bengal. And the focus are more on Bihar, UP, and Jharkhand cluster. So we'll be keep opening stores in both the clusters. If you see for the first 9 months also, we have opened around 37 stores, out of which 22 stores have been opened in the places like Odisha, Assam, and Bengal, and 15 are part of UP, Bihar, and Jharkhand cluster.
Alright, so that was the management of Bazaar Style. Nirav, in terms of these retailers, especially the ones present in tier 2, tier 3 cities, Bazaar Style is mainly focused in the eastern region, the West Bengal and Orissa parts. But overall, Q3 has been, a stellar quarter when it comes to V-Mart retail, V2 retail, Vishal Megamart. And, when we compare valuations of Bazaar Style to all of these counters, Bazaar Style is roughly trading at a PE of 16 odd times, which is much lower than that of V2 as well as V-Mart. With respect to the growth outlook and the overall picture, how are you seeing this counter?
Well, it looks very decent from a valuation perspective, because when we read commentaries from the retail majors, we are seeing that the majority of the growth is being driven by tier 2, tier 3, tier 4 cities. Even ethnic wear brands are doing quite well in all these cities and towns. So I think, considering the fact that the valuation is quite cheap, it's on a growth trajectory, I think definitely it warrants a buy at this point of time.
Okay, well, let's get in another market voice. As the market continues to consolidate, well, we have some expert comments. We caught up with Vikas Khemani, founder at Carnelian Asset Management, who suggests investors to keep their expectations low this year. Listen in to his rationale.
This kind of market corrections are, of course, part of normal bull market. We have seen this kind of similar correction in the first half of 22. Of course, last year we had a great year and it peaked out in September. And from there, we've been seeing correction both at the market index level as well as the broader market indices. Last year, quite a bit of froth got built, especially in the small and mid cap space, which I think has corrected far more than the index. So it's a good natural consolidation of the market, which is healthy. I believe that 80-90% of the damage is done. The market might consolidate a little bit more in terms of time. I do not see major, index level downside from here. I think last year, one of the big reasons also for the slowdown in the earning growth was, the squeeze in the liquidity and as well as the slowdown in the government spending. Both has in some sense changed. The new RBI governor has eased out on the liquidity, as well as the government has started spending money. So I think both of them should have lag impact on the earnings as well. So I do believe that second half of this year we will start seeing some sort of pickup in the market, and in the next couple of months we could see consolidation, more time correction than value correction from here.
So Vikas, my follow-up to you on this one is reality versus expectations, right? Because that becomes crucial. Do you think investors will have to actually go down and tone down their expectations with regards to 2025? And if so, what is the kind of 2025 returns you're expecting from markets? Because earnings expectation is still probably higher single digits right now.
I think we had said that in our beginning of the year note that keep this expectation low from this year. We were coming on the backdrop of a great market in 24 and 23. So it was natural that this year would be less expectation year. And the first half, of course, turned out to be continuation of the weakness in the market. So I do see, like I said, the very similar to 22 kind of period when in Ukraine war happened. Market Nifty at that point in time had corrected from 18,500 to 15,500, and then eventually in the second half of the year it went back from 15,500 to 18,500 and resumed the journey further. So and of course then within sector rotation all those things do take place. So I think it's going to be stock pickers market. You will see more recovery of the market later part of this year. You might not see a great return from a beginning to end from an index perspective, but yeah, internals will change and you have to kind of look at those opportunities.
Got it. Mr. Kemani, Mahima also joining in, in the consumption space, we've seen that January, of course, inflation has eased a tad bit, but Q3 definitely was under pressure because the inflationary pressure kind of, impacted the margins overall for a lot of these FMCG companies. But now that, it's eased in January a tad bit, how are you expecting the cost trajectory to be like for a lot of these consumption-based stocks?
It depends on the consumption. If you ask me, look at even last 5-7 years, it has not grown at a significant pace. Especially if you look at broader listed company space. So I think single digit to early double digit kind of growth most companies have kind of shown. In fact, more like single digit. So I think consumption is definitely a story from India's long term perspective. But when you look at this kind of growth, the valuation with stock just trades at does not justify. So you have to really look at categories which are growing faster, and within that also what's happening is newer and newer competition is coming, newer consumer behavior is changing. So I think there's a lot more disruptive things at play.
Okay, there you have it. But on that note, we are just about 7 minutes away from market closing, so we will take BTST calls from Kush. Kush, what are you spotting at this point in time?
Well, I think an STBT is in order. The kind of texture the market has given, and the unsustainable up moves that the markets are seeing. Tata Chemicals continues to remain under pressure. Was holding above the 840 mark for some time now, has given way. So on the way down, your targets are 820 and 810. The support zone of 840 will now start acting as a resistance, and then your stop loss. So Tata Chemicals as an STBT or even a positional short trade from here on for targets of 820 and 810, stop loss around the 840 mark.
That's the view. Those are the picks for. He said sell tomorrow, sell today and buy tomorrow. Sorry. Trent is another counter. Goldman Sachs came out with an interesting note because they had met Neeraj Basoor, who's the CFO of Trent. And two things, that stood out for me in that note was that they'd said that faster than expected source sales ramp up and healthy cannibalization are the two main reasons that have kind of moderated the like-for-like growth for the counter. And secondly, they gave an update saying that there is a good initial experience with respect to lab-grown diamonds category launch. Neera, something like a Trent, which has always shown a growth of around 50% when it comes to revenue. This time it saw growth of around 37% which is not at all bad, but still the street did not like that kind of growth. How are you seeing Trent as a player? Because while the smaller players like Vishal Mega Mart and V2 Retail, we also discussed Bazaar Style, are doing well, Trent is also equally doing well, but it's not doing well as it was, in the previous quarters. So what's your reading with respect to something like a Trent?
Well, I think again it's become it has buckled under the burden of expectations, because prior to I think coming into F&O, the stock has appreciated by around 100%, and after this entry into F&O, the stock has corrected by around 40-45%. And I think much of this fall is attributed to the fact that the expectations were sky high, and for some reason, I think whether it is a slowdown in the economy or whatever internal factors, they were not able to meet those expectations. But I think the correction in the stock seems to be it seems to be heavily overdone. So I think there is a possibility of a pullback in the near future from a valuation perspective.
All right, so that's the view coming in with respect to Trent. Now, it's that time of the show where we address as to what to watch out for post-market hours today, as well as tomorrow being a holiday. That's Wednesday. Things to watch out for when, trade opens on Thursday. US House Price Index is something to watch out for. US Richmond Fed Manufacturing Index data will come out. US Dallas Fed Service Index data will also come out. And US Money Supply data is also expected to come out post-market today or tomorrow. Along with that, US new home sales data, US crude oil inventories, G20 finance ministers and central bank governors meeting is something to be watched out for. Some shares where lock-in period gets over will be in focus. One of them is Denta Water and Infra, around 4% odd, Enviro Infra Engineers around 37% odd, and Saraswati Sari Depot around 55% odd. So these shares will see some kind of movement on the back of their exit in terms of lock-in period. Kush, with respect to the charts when it comes to the real estate space, are there any counters that you are seeing right now are attractive that one can enter into or take positions?
But only on a relative basis, something like a macro tech is starting to, show some kind of strength where it's at least stopped falling. It's seen some recovery in the last 3 to 5 sessions, 20-day moving average resistance coming at play. But other than that, the momentum is missing in a market like this. You take this. But apart from that, if you look at names like Oberoi, if you look at names like DLF, these stocks continue to make lower lows. They've reached below some of their key support zones. The space is not entirely looking all that great. In fact, in a couple of my conversations with my friends in the space, they are starting to see some sort of a demand slowdown or at least the number of deals going lower. So if that's the channel check that you want to go by, that is also adding up. So as of now, it's a macro tech developers that is looking relatively strong. Would I buy into it? Not really. The overall sector is in a bit of a pain and might continue to remain so for some time.
Okay, on that note, Kush and Neera, thanking you for joining us and taking us through your views this Tuesday afternoon. In a truncated week for some of us are certainly breathing a sigh of relief considering tomorrow's a holiday, but I'm sure many of you will miss trading as well. How are trades panning out today? So it's been yet another day of consolidation for the Nifty, which continues to hover around the 22,500 mark. But remember that we have now slid below crucial levels. Moving on to the Bank Nifty, again down by about 0.25%, not too much to speak for otherwise. Let's pull up the heat map for the Nifty 50 and see where that pull and push is. And while we do have gains in Bharti Airtel and M&M, something that we've been addressing through the course of the show and the day, along with Nestle and Maruti Suzuki, to a certain extent, we've had a very large block deal in Dr. Reddy's. It's down 3.3%, followed by weakness in Hindalco and a handful of the other counters in the metal pack. Trent and Sun Pharma also down by around 2.4%. And before I hand it over to Mahima, let's take a look at the advanced decline ratio as well. I'm interested in the one in the NSE particularly because at this point in time, the market breadth has once again turned to the worst. We in fact have just one advance for 2 declines in today's day of trade, and that gulf, as you can see, has only widened through the course of the second half of the session. But Mahima, why don't you tell us about broader markets then?
Right. Let's pull up the mid cap 150 and the small cap 250. In the start of the trade, we did, enter the markets in green, but it's down by about 0.7 odd% where in mid cap 150 is concerned. The small cap 250 is also under pressure, down by about 0.6 odd%. Let's pull up the sectoral heat map and see how sectors are about to end the day. Like there you go, there's Nifty Media leading the pack, Nifty Consumer Durables, Nifty Auto and Nifty FMCG, some counters in the green, but Nifty Metal continues to see the pressure after yesterday. It snapped its 5-day gain of last week. Yesterday also closed in red, today also closing in red. Nifty Realty down by about 1.5 odd%, PSU Bank, Oil and Gas, Nifty IT, all these counters down by about 1 odd%. Let's pull up the NSE 500 and see what counters are buzzing. On the green side, there's Tata Investment on the back of the Tata Capital IPO, Zensar Technology, Adani Power, Narayana Hrudayalaya, Chambal Fertilizers. Narayana Hrudayalaya is buzzing because it's expected to have its analyst meet today post-market hours. Devyani International is seeing gains of about 4% Metro Brands is also up by about 4% But something that's closing in red is Dr. Lalpath, down by about 7% Century Textiles, Nalco, Canfin, Varun Beverages, all these counters down by about 4% Balrampur Chini Mills is also down by about 4%. So these are the counters, that will definitely be on the radar on Thursday, as well as to how the follow-up in trade takes place for all of these counters. But with that, we're completely out of time on this edition of India Market Close. Stay tuned to NDTV Profit for more news and updates on the other side.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market.
Hello
Hello and welcome to NDTV Profit. You're watching Know Your Company, a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE listed company every day. On our radar today is Bazaar Style Retail. If you pull up the stock as well, it's very interesting to see what's happened because it's a recent listing. In fact, I think one of the days that was on the 20th of February itself, the stock had seen a major rally that had come in as well on this counter. Now, with regards to Bazaar Style Retail, value fashion brand which was established in 2013, the company is based out of Kolkata and clearly they are market leaders in that particular region. So if you talk about West Bengal and Orissa, that's where their hold is. Their key focus areas are tier 2 and tier 3 regions, and that's where they're aiming to enhance their presence as well. What do they offer? It's mainly apparels and general merchandise. And the options range from men's fashion and women's athleisure wear as well. They also have a general merchandise segment. So that's with regards to where Bazaar Style Retail goes. A pretty, if you have to compare it to other players, a small regional player, but the key is going to be with regards to where expansion, etc. go. But moving on, let's quickly look at the parameters that we will be considering in trade today. Firstly, a check in terms of their income statement. So this will take into consideration their revenues, their profitability, as well as their operational metrics as well. So that's a rating that we will be considering. The balance sheet will be checked as well on the back of our parameters. We will be looking at their cash flows, the return ratios. How does it stand in terms of shareholdings? What is the FI and DII view on the counter? And what the promoters have done so far. Apart from that, if you see in terms of the other parameters, we should be looking at the street credentials, the valuation picture as well. So these are the 8 parameters that we will be watching out for. But first, let me welcome in Mahima, my colleague as well. Mahima, to start off with, firstly, if you see in terms of the income statement, the 3 metrics that we could pick up on that front, what are they actually indicating in terms of the numbers?
Right. So, Hiral, in terms of the income statement, definitely it's a thumbs up for the counter. In terms of revenue, the 3-year CAGR for the revenue has been around 32%. 9 months FY25 number also stands at 998 crores, which has crossed the FY24 number mark already of 973 crore. In terms of the EBITDA, EBITDA has had a 3-year CAGR of around 46% nearly. And even in terms of EBITDA, the number for 9 months FY25 has crossed the FY24 number of 142 crores. It now stands at around 150 odd crores. Margins have improved a tad bit as compared to FY24. FY24, the margins stood at around 14.6, whereas they've now improved to 15%. And PAT is very close to where the FY24 number stands. It stands at around 21 crore right now versus that of 22 crores in FY24. But since this is a fashion retailer, some key important metrics that one should watch out for in terms of 9 months FY25. The number of bills went up by around 39% for the company. Quantity sold has gone up by 36% for the company. Average transaction value, however, slightly has come down, but sales per square feet has gone up by 9%. Same store sales growth for 9 months FY25 has improved from 5% to 10%. In terms of sales mix right now, in terms of 9 months, in terms of FY25, around 87% is apparels and 13% is general merchandise. In terms of the difference, the breakup between men, women and kids, in 9 months FY25, men is around 42% of the company, women is around 30% of the company, and remaining 28% is kids. In terms of the sales mix, lastly, in terms of 9 months FY25, private label stands at around 44% and the revenue coming in from others comes at around 56%. And in terms of the breakup between core market and focus markets, core market is around 86% for the company, and remaining 14% is where the revenue from focus markets is coming on. So in terms of operational metrics and as well as sales mix also, the company seems to be strong, which is why, in terms of the income statement parameter, we've given a thumbs up.
Right, so that's with regards to where the balance sheet, the matrix in terms of the financials, the income statement go. But let's quickly look at the balance sheet as well. Let's look at what the numbers are looking like. If you see in terms of the cash and cash equivalent, that has seen a steady growth. If you talk about FY24, is what is at 15 crores. But in the first half of FY25 itself, they've managed to nearly reach around 60 odd crores. So a good move on that front. The gross debt has come down substantially from a 29 crores in FY24 to a 3.6 crores in the first half of FY25. And I'm assuming this is because they have repaid some portion of their debt from the IPO proceeds as well. And in terms of the net worth, which was at around 215 odd crores, it's come to around 380 crores in the first half itself. So a good number with regards to the three parameters on your balance sheet. And that is one of the reasons why we're giving a thumbs up on the balance sheet front as well. But to add to this, we are seeing a 60 crore cash and cash equivalent. What are the cash flows indicating, Mahima, so far from here on as the next parameter?
Right. So in terms of cash flow also, I mean, if you see the parameters, it looks like a steady growth. I mean, none of the cash flows are in negative when it comes to all three, aspects when it comes to the operating activities as well as financing activities. It's only the investing activities where there's a negative number, but that's probably because, they're investing more and more into the stores and they're kind of expanding when it comes to the store expansion. In terms of the numbers, cash flow from operations in FY24 stood at around 1112 crores. In first half of FY25, this number is 68 crores. So it's pretty much, almost half of what FY24 did. So it will probably end in the similar levels at which FY24 ended. And in terms of the net cash flow as well, from all the three activities, that is your investing, your financing and operation activities, FY24, the number stood at 89 crores, which is around 44 crores. So again, almost half of what it had done in FY24. So even the second half will probably pan out the same way, and the overall trajectory, even in terms of net cash flow, will be similar to that of FY24 in terms, which is why, the cash flow trends have remained stable, and which is why we've given a thumbs up when it comes to the cash flow.
Right. So that's with regards to where the cash flow goes. Now let's understand what the return ratios are telling you from here on. Now, if you talk about the return ratios in FY23, the return on equities was around 3%. It's come up to double digit in terms of FY24 at 10.7. In terms of the ROCE as well, from 13.8% to 18.4%. Those are the two numbers that we're tracking in terms of the ROCE. But what's interesting over here is, it's been, as compared to peers, it's on the lower side, right? And that's the reason why it's a thumbs down. But if you have to look at the company from an improvement perspective, it seems to have a steady improvement in FY23 and FY24. And probably the FY25 so far also is on the similar lines. But as compared to peers, it is lower. And that's the reason why we've given it a thumbs down in terms of return on equity as well as the ROCE.
Absolutely. And even, generally, when it comes to the return ratios, we generally expect, Hiral, that a 20% mark, if the return ratios cross, is a better, ratio to track. And that is also one of the reasons why we've given it thumbs down. And in terms of the shareholding pattern overall, Hiral, it's a well-held company when it comes to the promoters. Although the promoters' holding is not more than 50%, but it stands at around 46 odd %. In terms of the FIIs, they've reduced their stake a tad bit as compared to September, because it's a newly listed company. We only have data for September and December 2024. FIIs have gone down from around 6.5 to around 6 odd % there. DIs, however, have increased their stake from around 9.9, that is around 10% to around 10.4 odd %. And public, however, has sold a tad bit between September to December quarter. So it's gone down from my bad. So it's basically they've increased the stake that tad bit. In terms of September 24, it stood at around 38 odd %, 37.9 odd %, and it's increased by a tad bit to around 38.02%. But overall, this is the picture when it comes to shareholding. Promoters have continued, at least in the past 2 quarters, to keep their stake alive.
Right. And what's interesting over here to note is also that the free float is increasing marginally, right? So there is retail participation which is increasing. But the key question over here that comes up is, taking the stock price into consideration, are retailers stuck with the counter? Because that becomes crucial. You have DIs which have marginally increased, FIs a marginal reduction that has come in, as you mentioned.
Right.
So if you see the next parameter, though this is also a thumbs down, if you see the street credentials on a YTD basis, the stock is down nearly 33%. If you go to the next parameter, that will tell you in terms of what the street is talking about. There you go, YTD returns 33%. Now, just to give you some context, clearly Bazaar Style Retail, on the 20th of February itself, it gained more than 20% in trade. Now, as we know, the stock was listed on the 6th of September 2025, right? On listing day, it saw tepid gains of around 2.5 to 3%.
Right.
And it touched a high of around 372 or 373 in the month of December. But after that high, the stock has been on a declining trend from here on. A low of around 181 is what Bazaar Style Retail saw. So it's interesting to see that the street credentials are pointing out to a thumbs down, mainly on the back of the way returns are panning out.
Right.
33% downtake. Now, with that 20% up move that we saw on the 20th of February, it was just a one-day move. I mean, the retail participation now needs to figure out as to whether they need to be invested in the stock or not invested in the stock because of the way the returns are panning out and what their expansion is going to be from here on.
Right, absolutely. And, this is despite, this kind of returns are despite the kind of way these retailers have performed in Q2 and Q3. The festive season was very well in terms of its Q3 numbers, but still the stock has not done as much as, the company has performed. And probably, it's the second half that will probably see, the last quarter we'll have to wait and watch out for as to how it performs.
Yeah, and because I think in the previous quarter numbers also, the Durga Puja, that could have been accommodated. Correct. There was in the previous quarter and the second quarter, right? So your Q3 automatically was weak. But if things pick up, the expectation is that Q4 could be blockbuster and that could be the turning point for the company.
Absolutely. And especially because it is, West Bengal focused. Absolutely. And Eastern markets focused. Now, the next parameter is the valuations part, in terms of the EV to EBITDA number, when we compare Bazaar Style to its like peers like V2 Retail and V-Mart Retail, Bazaar Style's EV to EBITDA stands at around 16.4% versus that of almost 25% for V-Mart, and for V2 Retail it's even higher, which is around 37%. So, as compared to peers, right now Bazaar Style is definitely looking cheaper when it comes to valuations part, which is why, in terms of valuation when compared to the peers is a thumbs up. I have not compared this to, something like a Trent, because Trent is very big to be compared to a Bazaar Retail Style because it's only focused on the Eastern markets. But V2 Retail and V-Mart Retail are the other two players that are focused in the tier 2 and tier 3 cities, and comparatively are small players, and the market size of their overall portfolio is similar to Bazaar Style Retail, which is why their like peers include V2 Retail and V-Mart Retail, but are much expensive as compared to where Bazaar Retail Style
Absolutely.
stands.
So the question is whether there is value in looking at a Bazaar Retail, or it's best to stick with the expensive names, taking into consideration the performance. So that's the dilemma here. But let's now look at the final performance rating that NDTV Profit would give a Bazaar Style Retail, right? I mean, 3 thumbs up in terms of income statement, balance sheet, cash flow. Return ratios is a downer, and this is as compared to what peers are doing. If you look at the other ones as well in terms of the KYC performance, again, 2 thumbs up a shareholding is a thumbs up, valuation is a thumbs up, street coverage is neutral because there is no coverage coming in there, and in terms of the street credentials, a downer because it has underperformed as well. So clearly it's a 5.5 rating for a Bazaar Style Retail so far, and from a 8, and this is mainly taking into consideration their performance and what they've done as compared to peers as well. But with all of this, very quickly, let's understand the SWOT analysis as well. Mahima, if you can go ahead with what are the strengths or the weaknesses that you're seeing?
Absolutely. So in terms of strength, definitely it's growing very fast when it comes to a value retailer, and it's accelerated its store expansion by quite significantly, which we also saw in their cash flow statement, because their overall investing activity is a negative cash flow. And in terms of their cost structure, it is quite lean, and it has high operational efficiency. It's maintained its margins, which is why the strength is these three things, basically fast growing, accelerated store expansion, as well as high operational efficiency and lean cost structure. In terms of weaknesses, it's present mainly in the eastern region. It's not expanded in multiple regions of India. That is one of its weakness. And the average transaction value is one thing, one operational metric which has come down, which would kind of overall impact the margins as well as the top line going ahead, as well as the bottom line. Because if your average transaction value comes down, it will definitely have your impact on the profit and loss statement. So that is, where weakness is concerned. But with respect to opportunities and threats, Hiral, what are you reading?
I mean, it's interesting to see if you talk about the opportunities. Yes, they have plans in the tier 2, tier 3 cities, right? So that is one of the parameters that we should be watching out for. The expansion in terms of other markets in India and rural consumption picking up is what will aid their expansion in the tier 2, 3 cities. Plus the Bangladesh +1 strategy is also expected to play out really well for them. So these are opportunities that you should be watching out for. In terms of the threats, there could be competition that could be coming in from other retailers and bigger players like Trent, right? So how fast they are able to grow and capture market share is the key over here. So that becomes one of the threats. And very lastly, less focus in terms of the urban markets is something which will probably be a threat to them as well, because consumption in the urban market is also not picking up. And plus, it's not a market that they're focusing on. So that probably impacts their average selling price as well, right? If you have to compare rural versus urban. So that can be an impact in terms of the margins as compared to peers. Let's put that into perspective. So those are the clear opportunities and threats that we are looking at so far. But thank you, Mahima, for breaking this up for us. But let's also now shift focus to the management. We're joined by the Managing Director, Shreyans Surana. Mr. Surana, firstly, good afternoon. Given that the company is just listed probably 6 months ago, let's first start with understanding where will your business moat lie? Because you are a value fashion retailer in East India. What are your expansion plans going forward? Do you plan to expand in other markets or stick to your core regions?
I think, as I said in earlier interviews also, we will stick to our cluster-based approach, in which our main focus will be from central India to northeast part. Currently, we are in 9 states. Majorly the core states that we work on is Assam, Odisha, and Bengal. And the focus are more on Bihar, UP, and Jharkhand cluster. So we will be keep opening stores in both the clusters. If you see for the first 9 months also, we have opened around 37 stores, out of which 22 stores have been opened in the places like Odisha, Assam, and Bengal, and 15 are part of UP, Bihar, and Jharkhand cluster.
Okay, so what is the kind of capex that you have lined up for the next 2 years, taking your expansion plans into consideration?
In the first 9 months, we have grown at a rate of 30%. As a company, we have a clear strategy in which we are working on a balanced growth approach, in which we will be eyeing a revenue target of around 25% and L2L, same store sale growth target of around 7 to 8%. So we'll be opening around 40 to 50 stores every year. Typically, a store takes a cost of around 1 to 1.25 crores while opening. While saying that, we are focusing on our back-end operations also. So for this current year, we are targeting to invest in warehouse capacity expansion, along with a lot of investment going in the technology part on the warehouse management solutions, inventory management solutions, and on the ERP.
Okay, so that's your capex. Now, when you talk about targeting, say, 40 to 50 new stores annually, what's the rationale behind that? Why 40 to 50? And how would you plan to ensure a sustainable growth without seeing any pressure in terms of margins?
So basically, in past years also, we have grown around at a rate of 24 to 25%. So 40 to 50 stores is at a sweet spot, which allows us to have a healthy growth of around 25%, in which LTL growth of around 7 to 8% comes in. For this year, it is around 10%. So if your same stores are growing at around more than 7 to 8% in a financial year, it gives you a healthy margins. So it mitigates the revenue or the PAT loss given by the new stores. And as far as the store expansion is planned, because we are opening in our existing cluster geographies only, which help us to have a better understanding about our catchment. Typically, we know what is going to sell, which merchandise is going to sell better in this particular state because of our larger experience in that particular state. It allows us to open stores freely.
Okay. And if you talk about the same store sales growth rate, how sustainable is the current rate? And what are the strategies that you have in place to probably either maintain it at current levels or see an improvement from here on?
So there are two things. If you see past years also, last year FY24 also we have grown at a rate of 9.5% in SSG. Before that also it was around 17%. And the current financial year also we have already delivered around 10% for the first 9 months. And we expect to close above 10% in this financial year itself. So we are able to generate this SSG condition on the two account. First thing is there is a huge traction coming from unorganized to the organized market. Second thing is there's a downtrading going from the higher price bracket to the lower prices. And third thing is in terms of experience. So we give experience on three things to the consumer. One on the product, second thing on the prices, and third is on the ambience of the stores. We open a store of around 8,000 to 10,000 square feet, typically in tier 2, tier 3 stores, fully air conditioned. You get an exchange facility over there. You get an omni-channel service also. You can deliver it to your home also, the articles that you like. We have got more than 70 people in our merchandising and quality team, which works day in and day out to maintain the quality and designing at an affordable pricing. I think all these factors leads to a higher footfall in our stores, which ultimately leads to a higher sales.
Right. So approximately, I believe 66% of your total store area is located in tier 3 and 4 cities. Is this the strategy that you will continue, or are there plans to expand into tier 1 cities as well?
So it will be a mix of both. So for example, this current year, we have focused a lot on the cities like Kolkata, for this financial year, and I think it will be a mix of both, but yeah, largely the target will be in tier 2, tier 3, tier 4 only.
Okay. And over the last 3 years, despite these macro headwinds, now Star Bazaars, if I have to look at the store revenue, EBITDA, they've grown at around 24%, 33% and 44% respectively. And the same store sales growth has remained really healthy, right? So should investors expect similar growth rate going forward? Or if you have any guidance that you can give on that front?
We generally operate ourselves on the pre-Ind thing. So I think for this year, we have already done 82.5 crores in terms of pre-Ind EBITDA for the first 9 months on a revenue of around 998 crores. For this year, the guidance would be around again 7 to 8% only. We target between 95 to 98 crores of pre-Ind EBITDA for this financial year. And I think, as I said, for the coming years, the target is very simple. We will be eyeing a growth of around 25% with an L2L growth of around 7 to 8%, with opening 40 to 50 stores every year.
Okay, so that's with store opening. But when you talk about costs, do you have any strategy in place to lower costs, or will the margins continue in the same range of around 7 to 8%, or do we see them going to double digits?
I think there's a lever to increase these margins rather in future, but because we are focusing more on expanding our territories, expanding the market zone that we are in, so we are not increasing the gross margins right now. But I think this is a healthy and sustainable EBITDA margin that we are earning right now, and we will continue to do this in future also. And there's a lot of room going forward, and we will be trying to, as I said, 7 to 8% will be the range where we'll be going in coming years also.
Okay.
In terms of EBITDA achievement on pre-Ind AS.
Okay. And if you talk about the private label part of your business, that has been consistently increasing, right? So what is that margin differential between private labels as compared to other goods? And if you have to say, probably look 2 years down the line, how much will private labels contribute to your sales mix, and what's the impact you will see on margins?
So currently, private label stands at around 44%, and right now we are not. It's just on 50 bips, which is higher margin on the private label, because our target is to reach to all the consumers We just want that our private label experience goes to all the customers, and so we are not increasing a very high margins. We are not eyeing a very high margin right now in the private label. Right now, we just want to consolidate the private label expansion that we are doing. Ultimately, next 2 years, our target is to reach around 60% of our revenue coming from private labels, and going forward, we will increase the margins in private label once the private labels gets established among the consumers of tier 2, tier 3, tier 4 towns.
Okay. My last question coming to you is, despite the IPO fundraise, which was probably used towards debt repayment, there's still a debt of close to 100 odd crores. So why so? How much more can this increase to, and what is that comfortable level as per the company?
So basically, the net debt is around 85 December, and the major reason for that is that we have a fire in the month of May. The insurance claim is still awaited, but we have to pay our vendors, so we had paid through that money itself. So around 48 crores of that money is from the fire account that we have paid. So typically, you can say that only 27 crores has been the debt used as on 31st December 2024. And going forward, we don't require any further debt. Increase in debt, because we are with the internal accruals, we will be able to open 40 to 50 stores in coming years.
Right. So clearly, I mean, that's an interesting one that we are watching out for as well so far. But thank you so much for joining us on the show and sharing the views. So that's the management of Bazaar Style Retail. If you see in terms of the stock performance, that's slight bit of a downer, but with all these levers in place, whether they'll be able to up their rating at NDTV Profit from a 5.5 is what we need to wait and watch and see. But completely out of time. With that, it's a wrap on this edition of Know Your Company. Stay tuned for lots more.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
is telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
But Sikta, the story of the confluence is not complete unless we also speak of Yamuna ji and Saraswati ji. The Yamuna ji gives the dark expanse to the Ganga ji, and the Saraswati adds invisible depth in some ways to it. So first let's discuss Yamuna ji, Ganga ji's eternal physical companion. Poet Sumitra Nandan Pant had written this beautiful poem on her.
भारत माता ग्राम वासिनी खेतों में फैला है शामल, धूल भरा मैला सा आंचल, गंगा यमुना में अश्रु जल, मिट्टी की प्रतिमा उदासिनी, भारत माता ग्राम वासिनी.
Amongst the three greatest deities of India's cultural and religious tradition, Krishna, it is said, played along the ghats of Yamuna. It is said that on the day Krishna was born, there was a heavy downpour, and as Nanda carried Krishna away from Vasudev's home, the Yamuna waves kept rising as if trying to touch the infant Lord's feet.
Most of the Krishna's pastimes were held on the banks of Yamuna. The Yamuna was also called the Patamaheshi, one of his 8 queens. Countless songs have been written about Krishna's flute and the ghats of Yamuna. Both the Ganga and the Yamuna are sacred rivers. But on the banks of Yamuna, the human and the divine forms of gods and kings are more apparent, as are the playful forms. On the banks of this very Yamuna in Vrindavan, Krishna performed the Maharas with 16,108 gopis. It is said that while performing the Maharas, Krishna was laughing as he looked at the moon. At this juncture in the story, the two eras, Treta and Dwapar, meet. It is said that Krishna was taking revenge on the moon on behalf of Ram. After Sita's abduction, when Ram was weeping bitterly in the forest, the moon was laughing at him. Krishna preserved this memory until Dwapar and returned the moon's mockery. Another story is that in the Tulsi forest, where the Maharas took place, there are 16,000 Tulsi plants which transformed into gopis at night. These are the stories that show how far the expansion of our imagination reaches and how deep the possibilities of love and faith are within it.
And without Saraswati, our intellect is unfulfilled. In fact, the goddess of wisdom is called Saraswati.
So let us listen to the story of the Yamuna ji, an ethereal mix of history, legend and imagination.
The dusky stream at the Sangam is the Yamuna. Krishna too is dusky, and it is along the Yamuna's banks that he performed his divine Leelas. Without the Yamuna, the Ganga feels incomplete. Without the Yamuna, the Sangam remains unfinished. For the millions of devotees bathing in these sacred waters, their faith in the Yamuna is as deep as their faith in the Ganga. The Yamuna is also the Ganga's beloved companion. Like the Ganga, the Yamuna carries a spiritual and cultural legacy. According to tradition, the Yamuna is considered the daughter of the sun. She's also